few days before this policy meet, the noise of the rate cut was only getting louder. Now, whether or not that has led to what has happened is anybody's guess, but I think 6 years is historic.
He's the second longest serving governor. 6 years is historic. He already had one extension. And there could be a large number of reasons. I mean, this is par for the course to then have someone new come in. So I don't know if I would read too much into it in terms of policy.
Maybe stuck to template one. And it's a good show, right? You don't necessarily have to be dependent on just one person heading the central bank, as is I mean, normally the 5-year term, right? So it's done. Okay, move on. Let somebody else come in.
It's actually a 3-year term.
Yeah, but 3 plus 2, right? The extension is that way. So that's why.
No, and I think Sanjay Malhotra comes with also quite an extensive resume.
Exactly.
Revenue collection. I think that's the big focus of the economy anyway at this stage, right?
Yeah. IIT Kharagpur, Princeton, all of it. We'll have a detailed conversation on the new governor, challenges for him, of course, Shaktikanta Das's amazing legacy and all of that. But let's get to all the global news this morning that you need to look at. Rough day for US markets, and tech stocks were the ones struggling after Nvidia took a tumble. Nvidia is cracked after China investigates anti-monopolistic practices. And yes, you could see it in the context of is a new trade war brewing already, and the first salvo and the first shot fired by China. So the China Politburo, which is about 24 of their top officers, had a lot of announcements to make yesterday. One of them was that Nvidia is being looked at for anti-monopolistic practices. That stock took a tumble, and all 3 indices down in the red. CPI data, which is out on Wednesday, becomes important for US markets. November inflation is expected to have risen 0.3%. On a 12-month basis, 2.7%. So that is one data point to look out for. Remember, Producers Price Index data will also be out later this week. Before the 17th and 18th December Fed meets, that becomes now crucial. Treasury yields moved a little higher ahead of that inflation data that we're expecting, the 10-year at 4.19%. And oil prices also moved slightly higher. We look at where oil is right now. NYMEX cooling off a bit, but China is promising to tackle growth concerns. So that could be one key focus. In fact, for Asian markets as well, because China is now loosening monetary policy. They've in fact changed their stance for the first time in 14 years. You have Shanghai Hang Seng up nearly 2%, between 1.5% to 2%. The Nikkei up in the green as well. Let's pull up the implied open for India. And we look like we're up in the green mildly, though. It's been a very flat kind of a trading, mood the last couple of sessions, yesterday as well, and today as well. You might have a very quiet start, but up in the positive as of now. That's reflecting in volumes as well, I would say. Domestic investors sold 1,648 crores yesterday. Foreign investors net buys are just about 724 crores. So the next trigger, I think, is awaited, and one of the key triggers today, apart from the new governor, will definitely be the impact of everything that China has announced and that coming through. So that's one to watch in markets today.
And I guess China's win in this case may be India's loss, at least with regard to investors globally. While Tamna mentioned volumes, what you also want to note is volumes were extremely thin in trade yesterday. It was also a very tight trading range. On Friday, we saw a 130-point trading range on the index. Yesterday was even worse. The 120-point range is what the Nifty was oscillating between, and volumes typical of December were actually quite slim, to say the least. So it's a little bit of a snooze mode for the index, 0.2% lower. 24,700 is turning out to be an important level of resistance that the bulls have been trying to take out. They struggled on Thursday and Friday. So very obviously that becomes the very immediate resistance on the index. In terms of support, 24,550 has been holding out quite well, and it continues to do so. Bank Nifty was in a wide range, 450-point trading range, but let's not forget it's been declining for the last 2 trading sessions, given up over 200 odd points over Friday and yesterday. Today, banks come back in focus as the new governor, RBI governor, gets elected and announced. So there will be some reaction in terms of currency markets, bond markets, and potentially even, bless you, banking stocks. Stocks like L&T, HDFC Bank, gained, but you had losses on RIL and ICICI Bank, and consumption came under significant selling pressure. So stocks like HUL and ITC led the way down on the Nifty 50. The FMCG stocks declined as GCPL, of course, talked about margin pressure in the current quarter, and that impacted the sentiment for the sector from the get-go. Remember, all through October actually, consumption has had it weak. There have been very few days that some of these stocks have actually gained in trade, more often than not actually selling off. And remember, FMCG consumption are called defensive stocks because they generally are resilient to any sort of market movement, but not in the current setup. Well, apart from SAT, CDMO stocks also sold out quite sharply. Counters like Laurus Labs, Syngene, Divi's, and even Newland ended lower in trade yesterday. So all in all, not much to talk about, but I think today as we go into trade, in other markets, currency and bonds become important, Neeraj, and I think metals may come back in focus on back of what China is doing.
Yeah. Resilient yesterday, you know, IT and metals were the pockets of resilience yesterday, and metals could well be continuing the rally. So, I mean, essentially that is it. I mean, maybe Samina, you called it at the start that the Nifty may just go very, very subdued in the next few, but sectoral moves are not ruled out. So metals, essentially the first pocket that you want out for, 0.62% rally yesterday, and today because of what China has done, right, and that promise of being monetarily loose, if you will, really spurs interest in metal stocks. So that's one bucket that you certainly want to watch out for today. So CDMO stocks went down yesterday, but I thought relative to what was expected, maybe a bit well behaved. In fact, for a few of them or more, except Syngene, most of the others actually recovered in trade, and therefore, who knows, that might be showing some bit of resilience today. May not necessarily see the corrective move continuing because they didn't have a trending day lower. Most of them actually recovered from the lows, and therefore there might not be another day of downtick today, if you will, in those stocks. So that's to be kept in mind. And more coverage coming into the capital market stocks. I mean, we've spoken about this pocket so many times, but you know, imagine Motilal Oswal comes out with a 194-page report talking about this entire set, and not too much new coming in, but it's a sector that is now well and truly formed. I wouldn't be surprised, and I think maybe there is, or maybe there will be. If there isn't, then maybe I'm imagining, but I won't be surprised to see a thematic fund on capital marketplace coming in from the mutual funds. There is one already.
There is one already, I believe.
I thought I heard an NFO coming out,
yes,
but I was not sure. But that'll be something, because such a large sector now. Exchanges, asset management firms, brokers, the pipe companies like CDSL, CAMS, etc., KFIN. I mean, it's a large sector out there now.
And just talking about the space, I think Tamna and me were discussing this. NSE in the unlisted space is currently going at 1580, 1600. So just to quantify that for you, that is talking about a 4 lakh crore market cap on a company that is still not even listed in the exchanges, right? So the euphoria is there, and I think anybody who can get their hands on some of these unlisted names like NSE or capital marketplace in that sense isn't missing a single opportunity of doing so. So yeah, that becomes a sweet spot. Metals remain constructive. CDMO, I think we thought about this yesterday, right? It's an opportunity to buy beyond the Biosecure Act. I think CDMO, was it early October when Motilal, I believe, did a big lump sum deal on, I think, Divi's, if I'm not mistaken. Since then, that sector has been on an upswing for everything that it's worth. So CDMO from October, of course, now we talk about the Biosecure Act a lot more actively, but the buying has emerged in this sector in the recent few years, and more so in the recent few months.
One more, if I would add, would be your entire consumption space, which took a hammering yesterday. And I think some of them may be in oversold territory. Godrej Consumer was about 8-9% down. HUL, Tata Consumer, all of them taking a knock. Now, I know this is not a space that moves too much, but with the kind of hit that we finally saw, it might be a little overdone, the kind of concerns that we have seen.
You know, Tamanna, on that note, and I've been tracking ITC quite closely, and I remember Gautam Shah always calls this a Rahul Dravid, because he said they may not run up, they may be boring, but they also don't fall. This was when the stock was at 530, 540. We're now at 465 on ITC. So while I do take your point, and there are a number of days that I keep thinking, a bust, right? Exactly what we thought about the markets. But for some reason, the space is just finding it so hard to find low-level buying. And I think if you're in transitionally to make a quick buck, opportunities are so much more. So you still have fertilizers come back, you've got defense that's coming back, capital market like both of you said. But yeah, we can hope that consumption should recover because most mutual fund portfolios also have significant holding to some of these counters. So along with banks, stocks like HUL and ITC do show up in a lot of large cap oriented or flexi cap funds at this stage. So you want to hope that this space sort of finds a base and starts recovering soon. I have a few stocks that we should be tracking, and of course, and I'll hand over to Neeraj and Tamanna. Metropolis Healthcare becomes one that I'd like to track. They have acquired Delhi-based Core Diagnostics for 246 crores. It's a pretty significant acquisition for the company. It's also strategic because it will enhance their capabilities in advanced cancer testing while strengthening its presence in North and East India. The good thing is the deal is expected to be concluded in all of 60 days. So by calendar year 2025, by February, this deal should be done with and becomes revenue accretive from Metropolis from the get-go. Well, along with that, Bharat Electronics, order wins are usually my favorite, right? So you've got BEL that has bagged significant orders, and this is not small. 634 crores worth of orders have come in. This includes maintenance of the Akash missile system, telescopic sights for guns, communication equipment, jammers, test stations, spares and services. So it's a big order, and it's probably recurring revenue in some ways because it's a maintenance order from what we understand. So BEL becomes an important one to track this morning. I'll mention Torrent Power because they had a very successful QIP to the tune of 3,500 crores, was heavily oversubscribed, 4 times oversubscription on Torrent Power. That has now been concluded, and this came in with very, very solid hands investing in this QIP. So you had SBI Capital Group, SBI Pension, Kotak Mutual Fund, Nippon Mutual Fund, Norges Bank and Amundi that came into Torrent Power. So given the kind of marquee investors in subscribing to this QIP, I think Torrent Power could see a move up, BEL goes up, and I think Metropolis also should be up.
Yeah, acquisition news has been the big driver last few sessions as well. So that's important. And if we can just get my stocks up. We'll start with metals. Metal stocks in focus this morning, and a thumbs up for them. And we mentioned it briefly, the way that China has come up and talked about, how they want to change things around is a big up move. So China has shifted its stance on monetary policy for the first time in 14 years. Chinese Politburo announced a moderately loose policy next year. Chinese action is, of course, ahead of the Trump presidency and a possible tariff war, and China's move to boost growth positive for steel demand. That's why I expect an up move on some of these metal counters. Look at Tata Steel, JSW, Hindalco, Nalco, Vedanta, of course, SAIL, the whole lot of them that you should see. The other pack that we should look at this morning is insurance. So November data was out. The worst of it, I would say, for LIC. Thumbs down. That's why on an LIC, they've posted a steep decline of 12.4% year on year. They're continuously losing market share to private insurers. Actually, that's a bit of a problem with SBI Life as well. So who is gaining in this pack? Look at an ICICI Pru, HDFC Life. That's why I'm giving them a thumbs up this morning. In fact, Nuvama has a top pick on HDFC Life with a target price of 830 because their individual APE growth of mere 2.7% and total APE growth of 5.2% year on year. In fact, ICICI Pru is also a hold for Nuvama with a target price of 740 rupees. Their total APE growth is an impressive 58.4%. So I think ICICI Pru is also one that you should watch out for. Max Life has also done fairly well this month with a total APE growth of 24.3% year on year and individual growth of 24.8%. SBI Life relatively is an underperformer versus private insurance. and market share has also fallen to 16% by about 47 basis points. So those are some of the pack. Bajaj Life is another one. Nuvama has a hold on it. So look at the insurance space. LIC worst performer, ICICI Pro, HDFC Life on top of the pack. Bharat Forge, on the other hand, a thumbs up this morning. Their QIP has gone through. They approved an allocation of 1.25 crore shares via the QIP at a price of 1,320 per share. Allocation of 1.25 crore shares is at a slight discount, 0.27% discount, and it aggregates to about 1650 crores. The issue price now, as I said, has been set at 1320. So the reasons they're raising this money is for repayment and prepayment of certain outstanding borrowings by subsidiaries and the proposed acquisition of AAM India Manufacturing that they announced in October. But overall, the mood has been quite positive on Bharat Forge, so expect it to be a bit of a thumbs up today as well. So Bharat Forge, another one on my list.
Okay, very quickly, my three stocks. Syngene is the first one. So Biocon, the stock was down 5.5 yesterday. It didn't recover at all, contrary to some of the others. And now we know the reason why. Biocon is going to sell up to 660 crores worth of shares in a block deal. The floor price is at 825, which is about a 4.9% discount to closing price. But remember, that's the floor price. This is not the actual price at which the block might be done. So the point being, this sale now takes Biocon's stake in Syngene to about 51. Don't think there is more coming, and therefore that's a bit of a clean out trade. And if consumed well, could actually mean that Syngene could do well from the lows if it does dip. So keep that in mind when you're trading Syngene. Speaking of pharma, Divi's and Citi's note on Divi's is interesting. I'm losing two brokerage notes now. Citi's come with a note on Divi's with a buy target and a target price of 6850. They say that independent of the Biosecure Act, biopharma companies will continue to look for diversification and will keep adding additional partners and suppliers. Any sharp correction in the stock price may be an enhanced buying opportunity. So do watch out for this one. And very quickly, before we get into Mr. R. Gandhi, the third one on my radar is Swiggy. Now, CLSA has come out with a note on Swiggy with an outperform rating. The current price is 536. Their target price is 708, which is a 32% upside potential according to CLSA. And they say that, I mean, innovative business, etc. There's a gap in the price, accelerating growth, so on and so forth. Multiple reasons. We'll cover that in detail, but keep an eye out on Swiggy. Might be an interesting one in the session today.
Just a quick two more stocks to add. Suraksha Diagnostics. Nippon picked up a significant stake of about 5.4% in Suraksha Diagnostics yesterday. So that one could be another one to watch out for. You've had order wills for GE, Veranova and Railtel. So those could be reacting positively too. And also Vodafone Idea. I don't know whether we addressed this one, but the board has approved issuing 175 crore equity shares to the tune of 1980 crores at a price of 11 rupees to Usha Martin Telematics and Omega Telecom Holdings. This of course comes in at nearly a 30% premium to yesterday's closing price. So that's the other one that we should be watching out for.
Yep. But let's get to the big story this morning. And of course, we have R. Gandhi, former Deputy Governor RBI, with us. Mr. Gandhi, thank you so much. We're just going to take another minute to get to you because we want our banking editor, Vishwanath Nair, just to set the context of the conversation that we're having and how momentous this is. Now, Vishy, what we've covered so far is that maybe the decision came a little right towards the finishing line. Could have been a little earlier.
Could have been a little earlier, but you know, whatever said and done, the bottom line is that.
What do we know about the new governor?
Yeah, so Sanjay Malhotra, who will be taking over as RBI governor tomorrow, today there's actually a sort of an exchange of power or sort of symbolic ceremony that's happening at the RBI towers. But essentially, he's a 1990 batch IS officer, Rajasthan cadre. He's a graduate from IIT Kanpur. He's a postgraduate from the Princeton University. He's got a master's degree in public policy. The other thing about him is the fact that he has spent a lot of time sort of developing the taxation policies in India. So as a Secretary of Department of Revenue, with the position that he holds currently, he's been closely involved with GST reforms. He's been closely involved in personal income tax reforms. So those are all key sort of qualifications that help him come in into this very important position of RBI governor. He has a fair sense of where the government's finances are, and thereby he has the ability to understand what the RBI needs to do to A, enhance that, and B, help the economy at a time when you've got the GDP growth number, slightly worrying figure of about 5.4% on Q2. We will see this new RBI governor come in at a time when the growth inflation debate is at its peak. As far as Shaktikanta Das, the outgoing governor, is concerned, he has been very clear. Unless you control price stability, there is no way you can talk about growth. So inflation is paramount. That is what he has been repeatedly saying. He's also saying that, yes, Q2 GDP growth was lower, but that's only one data point. So let's not jump the gun and try to do something that is not necessary. Knee-jerk reactions are to be avoided, is what RBI Governor Shaktikanta Das has said in the last monetary policy.
R. Gandhi with us, former Deputy Governor, RBI. Mr. Gandhi, thank you so much for speaking with us this morning and just sharing perspective on what are the key challenges that the new RBI Governor faces in your view. And of course, I think we should first talk about what a stellar governor Shaktikanta Das has been. I think people underestimated what he would do, but then he really steered the ship very well during pandemic and everything that came after.
Good morning. Thank you. Yes, to start with Mr. Das, he has been a very successful governor in the last 6 years. Widely acclaimed both within the country and overseas, also for his deft way of managing the financial sector, bringing in rapprochement between government and Reserve Bank. When he took over, that was an issue. Later on, when the COVID broke up, the heavy burden was shouldered by the Reserve Bank in terms of financial facilities made extended to all types of industries and financial institutions, keeping up the liquidity tap continuously flowing. And then later on, when the world over, the inflation dragon raised its head once again, he was very tough and very firm on his first duty as governor of a central bank in maintaining that inflation control is the primary reason for existence of the central bank. Till the last count, he had been very, very firm, despite recent data, as you mentioned in the opening remarks, that growth is a little bit of coming down, but inflation has raised its head again. But he was very firm on his first duty. So that way, looking back, Mr. Das has definitely brought in much more accolades for himself and the Reserve Bank of India world over. So that is the best thing that we can do. And going forward, to look at the incoming governor, Mr. Malhotra, he has been associated with the financial sector quite a while. Earlier in his avatar as CEO of REC, then led CMD of REC, and then later as Financial Services Secretary. He had definitely been associated with the banking and financial sector and Reserve Bank also. He was on the board of the Reserve Bank of India. So that he has a good view of what is expected of governor. Definitely he has. And as you mentioned that right now with his additional exposure in other economic ministries within the country in revenue, as revenue secretary, he has a much wider view of the economy as a whole also. That is what is very important to be a governor of the Reserve Bank of India, to have wider perspective on economy. That's a very positive point. I think you asked about what kind of challenges he may face. Luckily, he inherits very calm position today compared to almost in the last 35 years, right from Mr. Venkatramanan time. Every governor, when they came on the scene, there was a crisis, either domestic crisis or international crisis to grapple upon. Hopefully, he won't be asked to do that. We hope that he will be able to take on the base that has been now made available to him and build on that strength.
Mr. Gandhi,
yeah.
Apologies for butting in, but the question at the end of the day right now is Sanjay Malhotra his entry at a time when the growth inflation debate is at its peak, right? Like, I just wanted to get your view. As the RBI governor, yes, inflation targeting is the primary role of the central bank. It is an inflation targeting central bank at the end of the day. Having said that, the growth question keeps propping up, and so far we've been sure that growth has not suffered, but the Q2 GDP data throws that point a little bit into question. So I just want to get your views. How should maybe an RBI governor look at this?
Yeah, the first thing I expect that he would concentrate more on whether it is a one blip of the data or it is going to be sustained in the coming quarters. And I think that's where the projections, the analytical output that the Reserve Bank's economic department will be presenting to him, and that will give him a closer look at and looking forward in the next 4 quarters, so to say, both the inflation trajectory and the growth trajectory, how it is going to be there. That will be the first hard look he will be looking at, I would presume. Then based on that, if it comes out clearly that this is a one-off blip, then he must be convincing himself that there's nothing to worry about the growth, and especially and about the inflation also going forward, how it is going to behave, and he will have that ample debt management, because every 2 months the MPC meets, they will be able to take certain tactical corrections also in case if it is needed. But long term, because the country wants to grow, that is expressed in quite a few quarters that he is fully aware of. But as every governor of any central bank will do, their first duty, as I mentioned in case of Mr. Das also, Mr. Malhotra will also immediately absorb that position that my first duty is towards containing the inflation. So
right.
if the inflation trajectory is going to be comfortable, then we should expect him to cut rates.
Right. Mr. Gandhi, let's move away from the growth inflation debate right now. For the in your time as the deputy governor, of course, the RBI faced a lot of crises. And then since then also in the last 6 years of Governor Das, there's been a lot of pressures that have come on him as the RBI governor and RBI as an institution broadly, right? All of those have been dealt with, whether it be your Yes Bank rescue, Lakshmi Vilas Bank rescue, let it be PMC Bank rescue, let it be the credit markets freezing after the RNFS crisis, whether it's the COVID crisis or even the latest sort of problems with certain fintechs and specifically around microfinance, a problem that is currently taking shape. I just wanted to get your sense. What exactly were probably in your mind the best of the hits, if I may say, as far as Governor Das is concerned? Any sort of instances that come to your mind?
Yeah, the unique thing that I would associate with him is relating to hitting at the people who are recalcitrant and not following the rules by the book, where it hurts, in the sense that the effective enforcement actions on specific individual financial institutions, that has been quite special during his term. And it has come out, whether it is a bank or NBFC or a payment entity, irrespective of that approach has been applied. And we have never heard, at least I have never heard anybody saying that he has been targeting based on certain consideration beyond the financials. No. So everybody clearly admitted that actions, it is because it is the first time the entire industry had been facing such effective action. There were murmurs. But otherwise, everybody did understand that this is the right way of enforcing corrective action from that entity quickly. So that is that's a big change during his term compared to previous regimes of that effective enforcement action. That's where I will give him the full credit. Yeah. So in the financial stability space, going forward, Mr. Malhotra also, I would hope that he would continue that kind of strength. There will be demands. There may be expectation that he should tone down kind of the severity of the enforcement. Possibly there can be some for that. But anyway, so let us hope that he will also certainly, being a having been a financial services secretary, he would definitely clearly understand financial stability's importance.
Yeah. No, so it's. I think most of the brokerage notes this morning talking about the transition talk about expectations of stability, and that's what's important. Thank you so much, R. Gandhi, for speaking with us this morning. Of course,
thank you.
I think what we'll miss is Governor Das's quotes, every policy, quoting the father of the nation. But I'm sure the new governor, Sanjay Malhotra, will have his own sort of spin to add. All right, time for our special segment, Deep Dive, where we focus and actually put the spotlight on one company, one stock, and tell you everything about it. Today, the spotlight is on IndusInd Bank. The stock has been underperforming versus the Bank Nifty for the last 6 months. What's ailing IndusInd Bank? My colleague Hiral Dadia joins in with that deep dive.
Thank you. So clearly, if you see in terms of IndusInd Bank, an absolute underperformer is what we've seen. Let's just quickly look at the performance. Down 30% in the last 6 months versus Bank Nifty, which is up 3%. So that's the kind of performance that we've already seen. And further down, if you see the last two quarterly numbers that have come in, analysts have been negative and they have downgraded as well. The first key concern is the loan growth. That has been moderating. If you see from the first quarter of FY24, we were at around 22%. It's come down to almost 13% in the second quarter of FY25. Deposit growth also has been weakening. So these are two major concerns. Now, because of both of this, a tepid loan growth and a deposit growth, that has resulted in CASA, which has been moderating. If you see the CASA, which obviously, as we know, stands for the current account, savings account. If you see in terms of the CASA as well, let's quickly look at in terms of the trends that we've been picking up in terms of the CASA growth. There you go. In the first quarter of FY24, it stood at around 40%. It's come down to around 36%. In fact, the first quarter of FY25 was 35%, second quarter around 36%. So this is one of the other major concerns that we have been watching out for. Now, because of all of this, if you talk about the net interest margins, which have weakened, now to be noted that the net interest margins have not only weakened for IndusInd Bank, it has been a trend across the sector. From 4.29%, it's come down to almost 4.08. That's the number that we've been tracking over here. And the credit costs, yes, have been high for all, but for IndusInd Bank, it's on the higher side. From 45.86%, it's gone up to 52.21% in terms of where the credit costs go. And it's the microfinance segment, as well as if you talk about the CV segment, that is what is impacting the asset quality as well. If you see in terms of the asset quality, the way it's moved, the gross NPAs have gone up from 1.94% to a 2.11%. So that's with regards to where the gross NPAs go. Apart from that, if you go to see, the stress in the microfinance lending has increased. Provisions have also surged. The provisions are funds set aside to cover potential losses from loans that may not be repaid, as just an explainer to give on that one. If you talk about the provisions, almost doubled from 991 crores in the first quarter of FY24. They've doubled to almost 1,820 crores. That's the number that we have been picking up so far. And because of which the profitability has gone down. If you see in terms of the profitability number, that's come down to 1,331 crores from a 2,124 crore as well. And if you talk about the CET ratio, which is the Common Equity Tier 1 ratio, or as we call it, the CET ratio, that has remained high. So from 16.33, that has gone up to almost 50, come down to 15.21. That's the number in terms of the CET. Now, clearly, what is going wrong, right? So one, the bank is likely to miss the planning cycle 6 target. That's a big possibility. In fact, the management has indicated in its con call as well that they will be missing the FY26 loan growth guidance of 18 to 23%. That number is going to be below this. Apart from that, if you see in terms of brokerages as well, majority of them have cut the target price on this company from ICICI Securities to Nuvama, Kotak, MK, as well as Philips Capital. All of them have downgraded it, and they've cut the EPS estimates as well. The key questions are, will these challenges continue to persist? Second, the company is missing consistency. Now, to be noted that consistency is going to be a key to re-rating with regards to where IndusInd Bank goes. And there is no quick turnaround in sight from here on as well. And very lastly, the bank, as we mentioned, is not expected to achieve the planning cycle 6 loan growth guidance. Unless and until they are able to meet all of this, there is no turnaround in place. The de-rating is expected to continue.
Thank you for that. Hiral, that's of course IndusInd Bank and what lies ahead for them. A quick check on implied Nifty before we slip into a break. It looks like it's going to be flat to high, a slightly higher start. Like we said, there'll be pockets of gain. Stocks like metals will be in focus. IT may see profit taking. Consumption may try to find a bottom. CDMO may also see low-level buying after yesterday's weakness. We'll take a break. We'll come back with the focus on stocks, so stay with us.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news.
Morning, this is India Market Open. We are looking at what's happened in the futures and options space yesterday. But before that, let's take a quick look at what the implied open is currently indicating. And at the moment, we're looking at a little bit of an up move, at least as far as the start's concerned. So marginally in the green. But yesterday's day of trade was certainly an interesting one. At least as far as the Nifty is concerned, we did see it come off by about 0.25%, very little change in open interest. And the Bank Nifty, on the other hand, also, well, looking at subdued cues, but not a lot of change, not a lot of addition in open interest there either. In terms of the options market, as we are looking at this particular week, we do see a lot of accumulation around the 24,500 through 24,700 calls as well as puts. And on the higher end, we have the most amount of open interest still at around 25,000. So that certainly could potentially be a tough level to take out through the course of this particular week. But in terms of stocks, again, a mixed day of trade, but plenty of gainers, and Supreme Industries, APL Apollo, some of these newer entrants in the F&O space are looking at a significant uptick in your open interest. Kalyan Jewellers, very strong day of trade yesterday, as well as SJVN and Delivery. Among others, we saw a little bit of a long unwinding in RBL Bank, Chamal Fertilizers, and PVR Inox specifically stands out in this case, which saw a decline of around 4% in its underlying. But that said, let's take this conversation forward with Amit Goel of Amit Ventures to see what he's making of these markets and how he's playing them. Amit, good morning. Thanks for joining in. What's the view here? What's the way forward here? How are you looking at things?
Hi, good morning, Agam, and thank you for having me on your channel, and good morning to all your viewers. The view primarily is that of a sideways to probably a consolidation move in the next few trading sessions with a slight bearish bent. Why do I say that? Is because last when we met on Friday during the just before the MPC meet, the view that I had was that after this stupendous rally in the last few trading sessions, we were at an inflection point on both Bank Nifty and Nifty, and my view was that if there was a repo rate cut, we could have seen a extension of this rally, and if that does not come through, which is what the case is, we would expect a sideways to a slightly consolidation to a downward move. That is what is kind of playing out in the market, and basis that I do have a trade on Bank Nifty to play on this view.
Go ahead, Amit.
Okay, so in Bank Nifty, what I'm trying to do is we are trying to play it via a sideways to a bearish view stance, in which we will plan a put ratio spread. It is a sideways to bearish biased credit spread where theta decay helps. In this, we will sell 2 lots of 52,500 put of December expiry and buy 1 lot of 54,000 put again of December expiry. The max debit in this trade is about 284 rupees or to 4,266. However, we will aim when we enter the trade today to curtail the max debit of at least 300 or below. The max profit in this trade at the pin point of 52,500 on expiry works out to about 18,234. However, we will keep a profit target of about 4,000 and trail from there for higher profits. The max loss, theoretically speaking, is unlimited if there is a very sharp move on the downside. However, in order to restrict our losses, we will keep a rupee stop loss of about 4,000, making this trade a 1:1 RR. The upper breach and the lower breach on this trade is 54,000 on the upside and 52,000 on the downside. There are a couple of logics behind this, and if you allow me, I can take you through the explanation of that.
Amit, we do want the logic that you're deploying here, but also if you could also reiterate what expiration are you looking at? This is the December last week, the expiration, right? Yes, please go on.
It's actually simpler now that we do not have weekly expiry.
Of course, we don't have weeklies, yes, but I was just wanted to confirm if it's not January.
No. These are all December expiry.
Yes.
The logic behind this is, if you notice, the highest call open interest is at 54,000 strike and the highest nearby put open interest is at 52,000 strike. What is interesting in the open interest stance at the lowest strikes just below the current market price at 53,500 and 53,000 is we notice equal OI on both call and put, indicating very clear indecisiveness in the market participants, because of which I'm trying to play the sideways to bearish stance since we are at a resistance point with a fair distribution of open interest. That's the view here, and that is why a put ratio spread has been planned.
All right, Amit, we leave it at that. Thank you so much for joining us and taking us through this particular option structure that you can deploy as far as the Bank Nifty is concerned. We'll continue to keep an eye on this one. As Amit's already mentioned, the strategy that he had, spoken about last week is more or less playing out. So that certainly is a positive there. But we'll continue to watch out for this. With that, it's back to you all.
Thank you for that, Agam. That's, of course, the FNO strategy that, of course, we have in terms of today's day of trade. Well, like we said, it's a flat start on the index. Volumes may also remain thin. They have been so over the last few days of trade, and it's been a relatively tight trading range. Chakri Lokpriya, managing partner of Red Strawberry, and Kunal Ramba, founder of The Street, both join in with a technical and fundamental view. Kunal, I'll start with you first. What's the trade on the index? It's been in a little bit of a snooze mode for the last 2 days, but 24,550 is being respected. Any strategy on the Nifty or Bank Nifty this morning?
Good morning. Good morning to all our viewers. So if you look at the overall trend on the Nifty for the last one and a half year, it's been positive, and the bottom which we saw near to 23,250 was almost on the same trend line itself. And from there we have seen a sharp rebound But this rally in the last approximately 10 days was almost a linear rally. So a bit of sideways consolidation is likely, as Amit mentioned just before the session itself. The sideways consolidation with a bit of negative bias is absolutely likely. I think the support which is placed on the Nifty is around 24,400. So here, the strategy would be to buy on dip on the index also. And I think the stock-specific moves can give us the better returns compared to index trading right now.
So what would your top trading ideas be this morning?
So the first counter which I'm looking at is the Kaveri seed. Now, this counter has really rebounded well from the extreme low levels and doing really good. Yesterday was the first, day before yesterday, was the first breakout zone, and counter is near to that support level itself. So with the stop of 925, one can initiate a buy on Kaveri seeds. I think the first target can be 990. Now, these are not the intraday views, these are positional views. And the second is Borosil Renewables. Now, again, after the announcement of the recent developments, this company has done really good. The counter has rebounded from the lows really well. And last week, it was up by around 25%, but I still feel there's a lot of potential for the upside on this counter. So with the stop of around the present level, that's around 555. One can definitely think of initiating a buy on this, and the target can be 650. Now, this is again extremely positional looking at the weekly chart. So one can take a trade on these two with at least 15 to 20 days in mindset.
Chakri, how are you feeling about the markets right now? Good time to make some long-term bets, or you think a better time could be around the corner?
Good morning. Thanks for having me. Yes, the market has corrected and then rebounded. But in that wake, there are a number of stocks which still look attractive. For instance, Adani Ports, Adani Enterprises, Adani Green, despite the recent rally, they still look very attractive based on a long-term basis. They're still, given their expansion plans and their strategic interest, that way they look very good. So likewise, there are various pockets that are looking very good. I think otherwise, we'll have to wait and watch how the new governor's policies shape up. As Shaktikanta Das had done a phenomenal job in the last 5 or 6 years that he was there.
Do you think this makes it an opportunity to invest into banks, or won't have a material impact in terms of stock-specific ideas?
Stock-specific ideas, I think, is still the way to go for the banks, simply because, we are in a cycle where loan growth is slowing down, credit costs are still very high. So banks but their bank balance sheets are strong because their provisioning has been strong. So against this backdrop, if you look at, for instance, power financiers growth is far stronger than other NBFCs or financial services companies. So PFC, RDC, still trading at one-time book. So I think that's the way we are approaching banks and financial services.
Okay. I would want the views for guests on pharmaceuticals as well. But speaking of pharmaceuticals, let's first talk about something non-CDMO, because Metropolis is a business in focus. They will acquire Core Diagnostics for a total sum of 240 crores. The company's board has approved this proposal as well. Varsha Johnson to tell us what this means for Metropolis. Varsha, good morning.
Good morning, Neeraj. So yes, the company is going to acquire 100% stake in Core Diagnostics, which is into oncology segment, for rupees 247 crore, and they're going to pay 55% will be funded by cash consideration. And Core Diagnostics will become a wholly owned subsidiary of the company. The transaction is expected to be completed in next 60 days. Now, the equity value assigned, as I said, is 247 crore, which is 2.2x of FY24 revenues, and company will be EPS accretive from the first year onwards, that is FY26. Let's talk about the synergies, what lies ahead for Metropolis, or why this acquisition has been done by the company. First is cross-selling, wherein Metropolis will have wide opportunities to offer non-onco tests to Core Diagnostics labs and clients. Then of course companies will have cost synergies as well. And if you see, for Core Diagnostics, the contribution to oncology is significant. So for Metropolis, if you see, the oncology segment contributes only 4%. Now by this acquisition, the contribution will go up to 10%, which is positive for the Metropolis, and this may aid margin for Metropolis, considering the oncology segment has a high margin. 70% of the core oncology revenue is from the high-end tests compared to 40% for Metropolis. This is the reason I was saying that margin may go up. Then if I were to talk about the core diagnostics. So they are leading oncology testing lab player in India, dominant player in super specialty, and the mix, if you see, B2C contributes almost 51% and B2B contributes 49%, and the revenue CAGR for core stands at almost 22% for FY22 and 24.
Okay. Thanks for that, Varsha. So that is Metropolis and Chakri. Come in maybe on the on these diagnostic companies, or even the correction that we saw in CDMO companies. You reckon that could recover? Because I mean, what has happened is, yes, there is a delay, but not a denial. A Trump era might be completely different for CDMO companies.
Yeah, first on the diagnostic companies, clearly all the hospital majors are also having their own units. And so, company acquisitions such as these, where there is specialty acquisitions which will shore up the margins and also provide some kind of competitive edge, is what is essential. But the valuations multiples are unlikely to go back up because this as a business is becoming more competitive. Now, as far as the CDMO in the US is concerned, I don't think the Trump era is going to really do anything negative for the industry, because they are not going to deny products which are of value to the US. And research organizations are not something which are overnight transplanted and away from a country. So from that perspective, I think the correction is overdone.
Okay. The next focus really, and Chakri, stay on with us, is what is happening with the capital market space. And this is something that we discuss on and off on this show. Stock markets and investors have rewarded companies that are listed in this space that are exposed to capital markets. And it's obvious, right? As more and more people trade, of course, volumes grow. But Motilal Oswal is out with a very interesting note where they talk about this being just the beginning. And that's what we're going to talk to our next speaker about, because they say, we believe the remarkable growth of the Indian capital markets in the past 5 years marks the beginning of a sustained multi-year structural uptrend. Prayesh Jain, Senior VP, NBFC Research Analyst, Institutional Equities at Motilal Oswal, with us on the show now to talk about the note. Mr. Jain, thank you so much for joining us. Let's first start with the context and the premise. I mean, the capital market story is not necessarily a new one. Why are you so bullish on it right now?
Yeah, good morning, good morning. So, it's a story which is just unfolding in a big manner, whether you talk about our macroeconomic factors, the number of people that are adding to the workforce, the number of middle income households that are likely to increase, the entire and the digital tailwind that we've got from players like Angel One, or even on the regulation side, the measures that we've taken like the eKYC, UPI, and the implementation of account aggregation. I think all these are just enablers for further growth of this space. And if you look at the financialization of savings trend, that is also picking up, and people are preferring more of financial assets versus the physical assets. So I think this trend is just started, and all the blocks are ready for for the further growth.
Hi, it's also Samina. It's been many years since you and me spoke. I guess come a long way from oil and gas to capital markets now. But let's spend some time on the more broader aspect of the sector, and then we'll talk about the verticals, so the AMCs, the SIPs, the wealth management outfits. One thing India has is low penetration. You look at demat accounts in at 12% versus 62% in the US. How quickly do you think can we realistically close the gap with global markets, and hence, what is the sort of CAGR that you're expecting in terms of this?
Hi, Samina. So we have already seen demat account increasing by 5x over the past 5 years, and still we are at just 12% penetration. As I was mentioning earlier, the number of people adding to the workforce is phenomenal for the next 5 years. Number of people adding to the middle class category is phenomenal in the next 5 years. And this will slowly and steadily lead to further addition to demat accounts, or for even that matter, mutual funds. If you look at our mutual fund penetration, is just at 17% of GDP versus, say, much higher. At the world average is around 65%. So I think this this story of under-penetration is there and would possibly just unfold in the next 5 years with phenomenal growth. For example, demat account additions, right? We're still adding around 3.5-4 million accounts every month, right? In spite of all the regulations, we continue to add. Even in the last month, we added more than 3 million accounts in the month of November. So I think this trajectory is here to stay, and will definitely kind of grow at around 15-20% CAGR easily in terms of demat accounts, or for that matter, even mutual funds.
Sure, SIP flows have grown significantly, but do you anticipate any challenges in keeping up with this growth momentum, because interest rates potentially could be rising, alternative investments are becoming popular, case in point REITs. What I also want to understand in that same breath is how sustainable is the growth in AUMs for AMCs, given the kind of pressure that we're also seeing now on yields from total expense ratios?
Yeah, to your first point on, so let me just get to the AUM point first. AUM point where, I think the mark to market element plays, but in terms of flows, I think it's sustaining very strongly, even in the last few months where the markets have been kind of on a weakish trajectory. The flows have remained strong. I think there's a structural change in how the customers are investing into mutual funds, where earlier people used to exit at the tops, exit at the bottoms, and enter at the tops. I think now the scenario is changing, where people want to invest more on every declines. We've seen that happening in the past few years. So I think that the behavior of the customer has changed materially. And while you were mentioning that, the AIFs all are picking momentum, but here the story has to be divided in two parts, where you'll have to look at the young population a bit differently and the HNIs a bit differently. Yeah, definitely HNIs are kind of preferring AIFs, PMS, or even for that matter, international investing. But the young citizen of India is looking to invest into the long-term equity story in India via the SIP route. So if you look at the SIP account openings, that's been growing at a phenomenal pace, and that to a larger extent is driven by the digitization of the entire ecosystem, where eKYC I think was the path-breaking move by the regulators, and I think that will continue to be a driving force for more people coming onto the bandwagon of mutual funds. And apart from that, if you look at the adoption of SIPs even at the lower ticket size is increasing. So I think these things will continue to play, and I don't see a big challenge unless there is an economic downturn, which obviously we don't foresee right now. That would be a challenge for the growth in SIPs. Otherwise, I don't see any major challenge.
Okay, Prayesh, we'll try and talk about the key derivatives of what could an investor do on this note as well. On the other side of the break, request you to stay on. Of course, Chakri and Kunal, stay on as well. Would want your views as well. Need to slip into a very quick break. Back with this conversation.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your
Back with India Market Open right here on NDTV Profit in conversation with Prayesh Jain of Motilal Oswal. And Prayesh, would love to now segregate this, right? There are various buckets and your report suggests that you are constructive on a bunch of those, whether AMCs or brokers or wealth managers or pipe companies. But from, let's say you're talking about this a decadal opportunity, right? Where is the longest tenor of growth possible, or which is the first amongst equals from these? All are good, which is better?
Yeah, it's a very interesting question. So see, each of these spaces have humongous growth opportunities in terms of business, right? So if the exchanges grow, if the volumes on exchanges grow, the brokers benefit out of it. If the mutual funds AUM grows, the intermediaries benefit out of it. So I think it's a growth opportunity which is there for all of these spaces. I would say if you can look at the way things, so like for example, wealth managers, right? India's penetration amongst organized wealth management is just at 10%, which is much higher probably in places like US. So I think that is picking up big momentum in India, where the HNIs of tier 2 tier cities are still untapped. Wealth management is still servicing the ultra HNI space. The HNI and the mass affluent segment is still kind of unaddressed. So I think that space is something which excites us quite a bit. Broking, again, it's just if you look at the data of NSE, it's just about very small amount of people are trading on these exchanges, right? So again, there's a huge scope of growth out there, which will reflect in growth for exchanges as well, right? So I think that would be the order. Depositories and intermediaries, which obviously will benefit out of all these trends which I just mentioned.
I'm just wondering, Prayesh, I'm not playing devil's advocate, but also as exciting as the whole capital market space is, it's very open to regulatory shake-ups. And we saw some portion of that with the strictures that came in on F&O trading, some impact on volumes, at least for the exchanges, for some brokerages, for some discount brokers, which were very heavily into that segment, also an impact. This is one space which has those same regulatory headwinds like a fintech, a BFSI as well. Are you taking that into account?
So, while you speak about regulations in a negative manner, we looking at it in a much positive manner. You look at any of the regulations that have been implemented in the past, that has only enabled strength in the system, right? Whether you talk about the margin rules that were implemented, that only made investors believe that their money is safe. Your TR regulations that came in, say, 5 years back, that allowed, that ensured that the investors are getting proper, value for their money. So I think we believe that the regulations are more of strengthening the ecosystem rather than any challenge. Yeah, intermittently there would be some hit on volumes that could come through by the F&O regulations, but eventually, it just resets the base. The right people are right people are investing in the product that they should be doing. So I think from there, after the base is reset, the volumes continue to rise. I think it's more of strengthening the ecosystem rather than a challenge.
There are so many elements to this space, and of course we could continue talking for much longer. But the other segment that's growing aggressively and quite sharply has been the HNI and the ultra HNI segments, the wealth management piece. There's also a couple of stocks that I believe that you like in the wealth management space and the distribution network, 360 and Nuvama. You want to quickly elaborate on your top 3 picks from the capital market space which offer a healthy risk reward?
See, from overall, if you ask me from the overall picks, obviously we have Angel One, I think, is one of our top picks out there. I think it's a story that is unfolding beautifully and will probably, with the kind of diversity that they are adding to the revenue profile, I think that will, and that adding distribution to their piece, I think that is something which is a structural long-term story. We also like wealth managers within that. Nuvama and 361 are our preferred picks. I think this, as you rightly mentioned, Samina, this space is something where a lot of growth can be envisaged, given that intergenerational wealth transfer is happening, and these new age promoters and investors want to invest in more complex and financial assets like AIFs, PMS, or international investing for that matter. So I think that space is something which is very exciting for us. Within the AMCs, obviously HDFC, AMC, and Nippon are our preferred picks. And amongst the exchanges, we like BSE.
Okay, Presh, leave it at that. Thank you so much for taking the time out and giving us this synopsis. 194-page report, viewers. We've tried to summarize it in about 8 minutes, if that's even possible. But thanks, Presh, for joining in and giving us those thoughts. Those ideas out there, viewers, on your screen as per the note with a 1-year target. Okay, well, back to our guest, and Kunal Rambia and Chakri are still with us. Kunal, a set of stocks which did very well yesterday were metal names. Very likely that because of the China stimulus, there might be a gap up today. Would you trade any of those on the upside this morning if they start off 1 or 2% higher? Kunal, you're on mute, I think.
Sorry. So yeah, absolutely, Neeraj bhai. If you look at the overall trend on the metal counter in the last 6 to 7 months, the counters were in downtrend in the last 6 months. But if you look at the broader formation of last 2.5 years, the trend is absolutely positive, and I consider this correction to be like a buying opportunity. So yes, the likes of Steel Authority of India or say Jindal Steel, these counters are looking very good. In fact, there is a pattern formation also. So if someone wants to go ahead with momentum play, then yes, Steel Authority of India is looking good. With the stop of 120, one can initiate a buy. Similarly, if someone wants to go absolutely positional, then with the stop loss of 108, one can think of accumulating this counter. Same goes with Jindal Steel. I think sideways consolidation is now coming to an end with the stop of around 940. One can think of initiating a buy. Immediate short-term targets can be around 1060, but for the trend followers, I think there is a long way to go on the upside.
Well, that's the word coming in a couple of those metal stocks that have been in focus. Chakri, are you buying metal counters? Piecemeal approach from the Chinese government hasn't helped too much. Now, of course, what we're seeing is a little more aggressive in terms of stimulus. Do you feel this could be a good time to add exposure to metal stocks? And if yes, what will your top ideas be?
Companies like Jindal Steel and Power and Hindalco have specific catalysts which can take them higher. Hindalco will clearly benefit from a revival globally, which is in the US, where all the aluminum business will eventually pick up. And the valuations are fairly attractive. They're trading at about 5 or 6 times EV/EBITDA, which is a very good number from a valuation perspective. Now, Jindal Steel and Power, again, it trades only at about 5 times EV/EBITDA. Now, volume growth is sufficient for the company for the valuation to re-rate to historical standard, which is about 6 times plus. So from that perspective, there is a sufficient amount of valuation comfort, but I think still it's a stop and start kind of an approach in investing in metal stocks.
All right, stay on with us. Time for our top brokerage note of the morning, and I think this is going to be an interesting one. I wonder if Swiggy is already reacting, because Mahima is joining us with, it is already reacting. CLSA has initiated coverage with an outperform on Swiggy, a target price of 708 rupees. Mahima, why is CLSA so bullish on Swiggy?
Absolutely, Tavanna, and this poses a 32% upside from its yesterday's closing, and we're already seeing 4% of gains in pre-market open. Now, the reasons that have been stated in the note are that overall quick commerce and food delivery is a large and growing total addressable market, and Swiggy has a clear early mover advantage. They see Swiggy's execution improving with accelerating growth and improving profitability going forward. They expect the Indian quick commerce to grow 6x by FY27, and and they're saying that Swiggy will likely to lag Zomato, but they believe that valuation discount adequately reflects this reality. They're also saying that they see Swiggy's gross order value and revenue to grow at a CAGR of 43% and 32% respectively by FY27, and catching Zomato is not necessary for a successful investment case is what CLSA believes. And lastly, they're saying that the market is too big for a single player and sees enough opportunity for both Swiggy and Zomato to be in this total addressable market. So these are the key reasons why CLSA is bullish on Swiggy.
CLSA bullish on Swiggy. The stock in pre-open is already up 4.5%. Remember, at 420, 430 when it was listing, there was enough and more noise being made about how the stock would not, or rather Zomato would be a preferred pick. But the stock itself had, living its own journey in so many ways. Chakri, Kunal, both of you actually want to come on this one. Chakri, I'll go with you. The debate about Swiggy and Zomato was interesting, but the fact remains that I think both of them do have a place in one's portfolio. While it was an either or, but I think it's soon becoming an and situation. Would you agree?
Yes, we bought into Swiggy right at the IPO weakness for the simple reason that, a company is the number 2 player or number 1 player, depending on which category versus Zomato. Yes, the margins are slightly weaker, but both have around an equal market share in various categories. Quick commerce is growing for everybody. You're going to get new entrants into the business. All the Amazons of the world are also going to come in. Margins are going to go down. So the existing players, Swiggy and Zomato, will have to build on the current momentum. Against this backdrop, Swiggy trades at a good 40% plus discount to Zomato, which is kind of unwarranted. So even if half the discount is given for whatever reason, then there's still a significant amount of upside to Swiggy. But I think it doesn't warrant such a big discount because it is the number 2 player in the space.
There's enough appetite, I suppose, for platform companies. I just want to look at some of the movers that we have seen in the pre-open session and as it's ended. Look at a Vodafone this morning, up about 2.5%. They've issued preferential shares. There's a new deal with Tejas Network, so that could be some of the reasons. Godrej Property is doing okay. There's upside that Jeffries has given, and that's perhaps why. Even Prestige not doing too badly. Look at an ICICI Pru, and let's see where it's ended finally after all of this, about 1.5%. So look at insurers for the first half of the morning, at least for some impact of the numbers that we have seen yesterday and how that is coming in. Kunal Rambia, are you tracking Vodafone? What would you do with a Vodafone this morning?
Again, this counter, we saw the first breakdown somewhere in the month of October, and it actually lost its ground near to 8.5, 8.6. And since then, it's below that level itself. So unless, Vodafone reclaims that particular lost ground, which is 8.5, I will not really be keen to initiate any buy. I'm not going to bargain buy also. But if the counter manages to close above 8.75, now that's where we might see, the higher top, higher bottom coming into picture. Probably at that point in time, we can initiate a buy with the stop of 8 rupees, and then the targets can be 11. Again, I'll just wait and watch for the closing rather than trading during the market hours.
You'll wait and watch for the closing. Is this something that you would look at? I mean, clearly a lot of efforts being made. The preferential issues are also part of their overall strategy, Chakri, to pair debt. Right, they're issuing these preferential shares to people or to vendors that they owe money to. So do you think that the Vodafone strategy is working out and this could be a turnaround story? Something like what we've seen with the Paytm or are hoping to see with the Paytm?
You're right in terms of, there is a lot of effort that is going in trying to fix Vodafone. Their debt levels are very, very high compared to, where their revenue is able to service that kind of debt. So, their interest coverage ratios and all that require a phenomenal amount of cash infusion, and which ain't happening at the current levels. So given the huge amount of uncertainty of, the cap infusion that is required, we would stay away from Vodafone.
Staying away from Vodafone, well, I think anybody who's followed that recipe from a market's perspective has actually done reasonably well. So you've got to be sure of that. Okay, the pre-open rates having settled, I think the set of pockets to really watch out for like we said, is metals. Two, a really strong move that has happened in the recent past is the brewery alcohol companies. Now, Chakri, come in here. I mean, from an Allied Blenders to Piccadilly Agro, all the smaller ones, not United Spirits and United Breweries, everything else has done well. What is your view on this space?
The space, whether it's Tilak Nagar, companies like that have done well and will do well, given that, there is a young population, there is more acceptance and there is growth in the segment. It's always subject to, and kind of some kind of regulatory political backlashes every once in a while. And advertising is, of course, not permitted in this industry, which kind of impedes growth. Given all this, for instance, the wedding industry is like a $80-90 billion per year industry, and alcohol and spirits do play a fairly decent chunk of the overall mix. So I think this industry will continue to grow.
Metropolis also looking interesting this morning, and it's on our watch list. There's an acquisition that has come into play, and that is perhaps why you're seeing this interest in the early minutes of pre-open trade. Kunal, are you tracking this counter?
Absolutely, we are riding the entire trend. This trend emerged somewhere in the month of July and August 2023. And since then, it's clearly making higher top, higher bottom. In fact, in the last 4 months, we saw the sideways consolidation. I think yesterday's volume were massive, and which confirmed that the end of this consolidation is likely. And what we are witnessing today is a gap of open. If someone wants to initiate a fresh trade, then with the stop of 2150, one can certainly buy this counter. And the targets can be really positioned, and that's around 2600 for now. Keep trailing the stop loss. I think the momentum is really strong. It can go even higher.
Okay, well, that's a stock in news. What about some other stocks in news? I think that's the key thing. So on NDTV Profit's watch list, a set of stocks that you should keep in mind. Open Metropolis, as we spoke about, bought Core Diagnostics at 247 crores. So keep an eye out for that. Bajaj Healthcare, CDMO contracts for 15 APIs done by the company was up 4% yesterday. Watch out for that one. Zota Healthcare, a 12-point registration license. BEL, an order win. And G Vernova T&D also a 400 crore order win. So both of these on order wins could be in focus. Bharat Forge just closed the QIP at a minimum discount. Swiggy, CLS is an outperform rating with a target price of 708. Tejas Networks, a 3-year contract with Vodafone Idea. And Godrej Properties, Jefferies retains a buy with a target which is 32% higher. So that's the long and short of what the individual stocks might be in focus. Now, 7 seconds left for the markets to kickstart trade. Keep an eye out on metals and life insurance companies. LIC might be on the receiving end of the side, and maybe the private life insurance might actually do well today. But we're starting off, flattish. I doubt Nifty IT is doing too much either, but the metal index could be interesting, and I think those stocks will be the ones which will actually could be doing well, let's put it that way, about 1/3%. Mid caps and small caps, flat in trade. Let's get the heat map up on the screen. Actually, small caps 1/3%, not bad. What's not doing well? Very little. ONGC, Tech Mahindra, TCS, all over the place. Reliance still under a bit of a cloud. Ultratech, Maruti, M&M, no big losers. So that's the first thing. On the gaining side too, not too many big gainers. But JSW Steel showing that metals are okay. Bharat Electronics showing that order win impact. There is Apollo Hospitals, Cipla, Infi, Wipro. So IT is at both ends of the curve, to be honest, but more green than red. Really nothing too much noteworthy, but for the fact that BEL has an order win update, and not too many metal stocks, by the way, aside of JSW Steel, which are doing well. Maybe the broader end of the spectrum, some of those could be doing okay. Tamanna, more luck to you. The large caps are flattish.
Very, very muted kind of a start. Let's quickly pull up what the mid-cap and small-cap indices are doing before we get to the sectoral indices heat map as well. Yeah, it's completely flat here too. And if you see, this is a very careful market. I think waiting for the next big cue, not too much trade, not too many volumes. Maybe a holiday mood has set in. I don't know. 36 points up on the small cap 250. Let's pull up the sectoral indices and see what's happening there. Nifty Realty ruling the roost. I suspect because of a Godrej Properties more than anything else. Healthcare could be because of Metropolis. So there are individual stocks that are doing okay. Nifty Metal relatively fine, but nothing massive to write home about. Nifty Auto there down in the dumps. So no big gainers, no big losers as far as the sectors are concerned. Let's look at individual stocks that we've been tracking this morning. Let's start off with Metropolis. It's an acquisition that is in play, and that's why that stock is in focus, about 1% up. No groundbreaking kind of mood. Let's look at Vodafone. They've issued preference shares of about 1,980 crores, also just about 1% up. I think you're not going to see too many fireworks this morning, at least at start. I want to look at some of the insurers, ICICI Pru and LIC. One has gained market share, one has lost. ICICI Pru is the one that has gained market share. Stock about 1% up this morning. LIC at the cost of the biggest player right now, which is LIC, so that's about 1.5% down. So like I said, no major moves there. Let's look at what Swiggy is doing, because the CLSA note is very, very bullish on Swiggy. I think this is one of the big movers this morning, about 4%, 3.5%, 4% up. Torrent Power has seen a positive response to its attempts to fundraise, but nothing major happening on that stock. GE Vernova, order win impact. Let's see what's happening there, just about 1% up. So I would say that yes, positive moves, Neeraj, on some of the stocks that we picked this morning, but no major moves coming in.
But a couple of stocks that I want to mark for sure. So one of them is CE Info. Remember, it went up 10% yesterday after they said that they are taking back the decision to invest in a step-down subsidiary with Rohan Verma as the CEO. But that stock is giving up those gains now, 3.5%. So that is one notable mover. The other one is Oracle Financial, because the parent's numbers and guidance, I think, was a bit tepid. The parent at the global level was down about 8%, and Oracle Financial is down about 6% today. And the one that's gained some really strong ground in the last few days is ITI. It was amongst the top gainers yesterday, is up another 7% in today's session as well. Religare is the other one, 6% higher. Remember, there's a board meet at the end of this month, and could there be a change at the top of Religare? Could that be the reason why the stock is so active as well today? But that stock is up about 6%, amongst the top 3 gainers on the market-wide movers. Okay, so that's the long and short of it. Initial thoughts from our experts. Kunal, quick opening thoughts. Anything standing out? There are a few pharma names like Syngene, Strides, etc. doing okay, but nothing too dramatic.
Absolutely. So if you look at the broader market, they are not doing good. I mean, that's more like sideways. But at the same time, the selected pockets, which we discussed even in the beginning, like Borosil Renewables and all, are doing fantastic. I think stock-specific move is likely to continue. And for next 15 to 20 days, I think we should be focusing more on individual stocks rather than broader indices or say large cap to make something really good.
Okay. Chakri, the post-policy, a lot of talk of what banking stocks to do. PSU banks had rallied ahead of that. What happens now? I mean, do you look at PSU banks at all? Is that something that you like?
Yes, I think PSU banks, whether it's Canara Bank or State Bank of India and the power finances, the reason I say these is because, what's been driving corporate earnings is only the PSU capex. And that capex, largely the loan growth goes towards the PSU banks. And when it comes to power financing, again, most of the growth goes to PFC and REC. The other private capex has not yet picked up, and therefore the loan reflected in the loan growth rates of the other companies. And the valuations of these companies, whether it's SBI or Canara Bank or the power finances, is still trading at about 1-time book, which are very attractive valuations.
The index is actually struggling a bit. And Kunal, I wanted your take on what the play on the Nifty is. 24,620 thereabouts. Now dropping some weight, not rapidly, but it is range bound, volatile kind of a day in a restricted range. What would be your position on the Nifty for the day?
Discussed in the beginning of the show itself, I think this sideways with negative bias is likely to continue, and that's what even Amit highlighted, right? I think the support of 24,450 or 500 kind of levels is something to watch out for. Buy on dip can be a good strategy, but rather than trading on index, I think one should be focusing more on stock specifics. On index, if someone wants to really play, I think short straddle can be a good strategy for this entire week. That is for today till Friday.
Okay, so short straddle for the entire week because you are seeing sideways play. In terms of individual stocks, anything that you've seen that has excited you this morning? Any views on, say, an ITI, a Borosil Renew that is also doing well for second day in a row?
Absolutely. So Borosil was the first pick for the day, right? So this counter is looking very good, and in fact, it's now getting the fresh breakout also. So 650 is the bare minimum target on the weekly chart, which can be achieved in next. The way it's moving, it looks likely in a week itself. But otherwise, for next 15 to 20 days, one can watch out for the counter with the target of 650. The second counter, which I like the most at this point in time, is the Marathon Realty Next Gen. Now, this counter is coming out of sideways consolidation. It's trading right now at 633. It's up by around 1.5%. I think with the stop of 620, one can initiate a buy on that also. I think next 15-20 days target can be 700 plus. It's a trending counter, sideways consolidation, which is coming to an end now.
How are you looking at an RIL? Has been facing a bit of pressure. And this question for Kunal, and then I'll come to Chakri on it as well. Has been facing a bit of pressure, recovery now, but completely flat. The big mover on the index is not showing too much of excitement. What are you seeing on the charts, Kunal?
See, I'm again very bullish on Reliance. Reason number one, we are getting this counter at the discount of around 24% from its peak. Number two, in the recent times, in last 10 to 15 days, you could see the real bounce coming from the extreme low levels. The support was placed at around 1210 kind of levels. It made a bottom at 1215. And now it's making, trying to make the higher top, higher bottom. So if someone wants to play momentum, then the breakout will be around 1320, which was a recent high just a couple of days back. Above that, one can initiate a buy. Stop loss will be 1290 and the targets can be 1420 to 1430. But if someone wants to play the trend, then buy on dip can be a good attempt on this counter. Keep the support level of 1250 in mind. Between 1250 to 1290, one can definitely accumulate. And the targets again can be 1450, 1470 kind of levels.
Got it. Okay. Well, certainly some names that you want to watch out for. A bit of a tilt. I know we spoke about Swiggy in the show, but the stock is starting off well today, right? About 3% higher. Wonder what Zomato is up to. Should get that one up on the screen as well, because remember, it's had a good run in the wake of the Swiggy IPO and now knocking on the doors of 300 yet again. Chakri, it's good to be long-term bullish on these names. The question is, are these the valuations where you can make outsized gains on these businesses over a few years, or are there better pockets to choose from?
Over the next few years is hard to tell, simply because, the competitive intensity of the business is changing very dramatically. Quick commerce, whether it's Amazon, Flipkart, all the big boys are spending a lot of capital in this space, and their presence is going to be seen very soon. And as it is, Zomato, I think, sells quite a number of its products, which is on quick commerce at a discount. And so, that trend cannot really continue or support the balance sheet for any length of period. So given that scenario, I think, so looking at it from a milestone perspective is the way we are approaching these stocks. Currently, the reason why Zomato has done well is because, index inclusion, etc., whereas Swiggy is at a discount. So we're investing in Swiggy, I think, but longer term, we have to wait and watch.
All right. Thank you so much, Chakri and Kunal, for speaking with us this morning. And it's a quiet day in the market. You have to pick well, and hopefully all the stock ideas that we've been giving you will help you pick. The index is completely flat right now. I think maybe some triggers through the day. Will we hear from the new governor? Will we hear from the outgoing governor? Maybe those could be some of the triggers that we will see through the day. Bank Nifty also holding up in the green. So no major downside, but yes, that pressure coming in on the index. All right, our next conversation is an interesting one because it's around the monthly jobs peak index, the report that Naukri.com puts out, and gives us a sense of what is happening with hiring overall. Chintan Thakkar, the Executive Director and Group CFO, Info Edge, is joining us to speak more on it. Mr. Thakkar, great to have you back on the show, and a pleasure as always to speak with you. Just let's start by outlining the overall contours. 2% growth year on year in this period, and you've taken October and November together. Festive period usually slow for jobs and hiring. But what struck me is that you have degrowth in some key sectors, in retail, in banking, in IT and IT services.
Yeah. So traditionally, these are the growth sectors, particularly from the white collar job standpoint. And if you see past few quarters, there have been concern around IT especially. But like I have always been saying, that it still looks to us that we are getting out of that U-curve recovery. And although yes, I agree that November IT index doesn't look great. But if you take October, November, it is still kind of flattish. I would really want to wait for December to kind of really see how that is trending. It's quarterly index, which will give us a much better trend of what's happening in those sectors.
But then, since we are looking at this entire space, and you're saying overall hiring up 2%, white collar hiring up 6% year on year in festive season, let's talk about some of the spaces which are growing. And non-IT fresher hiring seems to be the big positive.
Yeah. I think fresher hiring, after a long time, it is kind of showing up as a positive trend, and which is a great news for many youngsters. And overall, it kind of shows the momentum, because that's the entry level where the hiring is happening. So I think that's the kind of build the funnel for the employment. So I think that's good news. Also, pharma is growing. Overall, healthcare is growing. Right. So some of the other sectors that those are growing are also very encouraging sign. Overall from the employment segment.
Chintan, good morning. Neeraj here. To your mind, because this is not just a month phenomenon, but you would have, it also follows, it also shows patterns, right, over a period of 6, 12, 18, 24 months. I'd love to know, what is your key takeaway? One, of the recent note that has come in, but two, also, if this has any takeaway of a trend that you might have observed for the latest one and the few before that.
Certainly. Great question. I would think that when I look at the patterns of how the index is moving, and particularly when you look at the white collar, job, English speaking job segment, in the past, we have always seen that with the growth in economy, you have always seen that IT is growing at least equal to that, or maybe faster than that. I think certainly, it's what is changing is that the non-IT for past, almost like 2 years, we have seen that the non-IT seems to be growing much faster than IT segment. This kind of shows a structural shift in how the economy is growing. And it's the non-tech sector that seems to be doing much better than what the tech sector has been doing, which has not been there for past decades. So I think that's certainly a new trend, and that's a very interesting trend. And that's why the tier 2 towns, tier 3 towns, I think those towns are showing a much better growth in overall economic activities.
And the other aspect is when we speak to some of the IT companies, right, for a lot of global places where they are present, there is a very large local workforce that is taking shape there because of political compulsions or what have you, or cost factors as well. Could it well be the case that, unlike what may have happened in the past, over the next few years, even if Indian IT sector grows and grows in a very strong fashion globally, there may not be a commensurate 1:1 increase in job creation by Indian IT services sector back home in India?
Well, although the observation is very correct, and that leads to the conclusion that you are trying to draw, but the converse also one needs to look at it, is that there is a lot more GCCs, the global capacity centers, which are coming up into India. So many of those companies, and I'm not talking about the top class companies, but even the middle, which are into multi-billions, but they are still middle so far as the US economy is concerned. They all are coming and setting up their shops in India. And that is increasing, and if you look at, even from the index standpoint, I think that's the part which is growing. So although in general IT may not be growing, but certain pockets of IT, including GCCs, seem to be growing at much faster rate, and that might kind of offset the trend that you mentioned.
But yeah, so Chintan, sorry, just one small addition there. So, but the GCCs are not part of IT services per se. Yes, tech sector, but not IT services. So, do you kind of bifurcate the two when you do this job speak index, or is it all combined as one, and therefore one needs to kind of read between the tea leaves?
Yeah, I think it's a subsegment of of that. And yes, I agree that GCCs could not necessarily only be the IT services. It could be a much bigger phenomenon. But largely, the first entry point is usually the IT services for all the GCCs.
Chintan, just another very interesting thing that I noticed is that experience is back in vogue. The demand for those with more than 16 years of experience is up 14%. So yes, good time for freshers, but that's also telling us about maybe two ways of looking at it: deepening of the job market, and also that volumes are not that huge, because if you're hiring in large volumes, you're going to hire more freshers. Is that a fair takeaway?
Yeah, absolutely. So I think the fact that the freshers are growing and the fact that at the top level, there is a growth, it kind of shows that there is a depth in the market. And yes, I do agree that at mid level there seems to be a little bit squeeze. But as I said earlier, we would want to see the trend line for a couple of more months to really kind of make a case out of that.
Your Gujubai will eventually.
Yes, I think it will, because that is what is driving the economy as well. I'm a proud job creator out here, and Chintan Thakkar will agree with me out there. But Chintan, the language barriers notwithstanding, the other small question that I have is there a predictability aspect to something like this? I mean, when you came out with the last job report, was there a predictability aspect that you could that could come out of it, maybe intuitively or otherwise? Did it hold true, and therefore the latest index release that has, yes, it looks back, does it have a predictability aspect as well?
Yeah, given the trend line, we can have some element of predictability over there. And the November index is more or less, it's in the range of the prediction that we have, and that's why we are saying that we would still want to wait for December, because we do still hold the view that by December this would look even brighter than what it is.
Okay, just so to look at it from business perspective, Chintan, because now obviously you have all of this data, and we're talking to you from perspective of what's happening in the industry and from job hiring. Just trying to understand that the fact is, as of this report, you are seeing muted hiring in the key catchment areas: retail, degrowth in retail, IT, banking, financial, like I mentioned. What does that mean in terms of an outlook for InfoEdge, for Naukri, for the business?
So you're right in observing that some of this catchment area, which used to be a large area, in the past, and there seems to be the growth is muted. But as I said, that the economy seems to be changing, and it is some of the other sectors that seems to be doing better. And this is just not for this quarter, or I'm seeing this trend for past few quarters. So some of the other sectors are becoming more important from the employment standpoint, and those seems to be growing. So which kind of offset the degrowth in some of the other key catchment areas. So overall, it still looks to us that we are on the trend line.
No. So when we say catchment areas, I'm assuming that a bulk of hirings are coming in from these sectors for you right now. And if you're saying that the trend is reversing, what does that then imply?
Yeah, but as I said, that it's also mean that it's getting offset by some of the other areas, which seems to be growing much better, and we still hold the view that by December it would look even better. So our trend line, as I said, that initially I said that we are coming out of the U curve recovery. That still seems to be holding true as far as the predictability for December goes.
Okay, Chintan, one last question, and I know we didn't plan this as an InfoEdge conversation, but I'm tempted to ask you, reply only if you can. But Naukri derives a great share of revenue from IT services hiring, right? I'm just trying to understand, is the GCC pie large enough for a business to do okay, even if IT services demand is not, how do I say, completely salient right now? Just trying to think out loud.
Yeah. So partially, it is. GCCs would be about 10-12% of our overall kind of revenue. So it's a significant part, but it will not completely offset the entire IT services sector. However, the non-tech sector, which seems to be doing much better, and that would help us to kind of offset the degrowth in some of the other sectors.
Okay, Chintan, appreciate you joining in. Lovely data points out there, and great to glean some of the insights from you on those. So thank you so much for your time today.
Thank you.
All right, that's the view from the Executive Director and Group CFO of Info Edge. And guys, I mean, somehow the thing with the jobs data of any kind is that you can look at it as a glass half full or a glass half empty. Yes, there are recent concerns, of course.
This is very
glass
clear.
Half empty.
This is very, very clear. Yes,
empty.
more architects are getting hired. That's fabulous. More researchers are getting hired. Hurrah for them. Oil and gas is one of your biggest hiring.
Yeah,
but look at the quantum of jobs that these sectors create. Versus if BFSI, retail and IT services is down, then that's also reflecting. I mean, I think a good opportunity to zoom out and look at what's happening with the individual performances of these sectors and these companies.
Yeah.
Retail going through a challenge, and then of course peters down to hiring.
Yeah.
One more data point to make that picture complete.
Or the forward commentary from these guys, because I mean, just thinking out loud, right, that some of these sectors which are hiring more are probably hiring at the start of an upcycle. So maybe the past data might not show. The other thing I wonder, and I have no view here, I'm just saying, right? Should there be an index in India which also shows not just from a perspective of employment alone, but the kind of whether employment or what have you of the startup ecosystem or people, the number of people which have moved to do businesses.
They turn entrepreneurs.
Or turn entrepreneurs, right? Entrepreneur index.
That's a different index, no? Because you're not, you're not really paying you're not creating a job for yourself.
But you're spotting a need and creating a supply or providing a supply, fulfilling a demand.
It's adding to the economy in some fashion, right? It's not just jobs which add to the economy.
So then that's the GDP data for you over the time?
No, but just,
yeah.
And also, even if you may be a business owner, who's to say you're not employing resources?
That's true.
But talking about one company or one sector that's definitely hiring and hiring riders aggressively, in my mind, would be the Zomatos and Swiggis of the world. Last week, you had a report on Zomato. This week, you have a report on Swiggy. CLSA has initiated coverage on Swiggy with an outperform and a very high target price. In fact, this is the highest I've seen on the count of 708 rupees. The stock is responding well to that, up 3.5%. A quick check on Zomato as well while we're at it, because the last time a brokerage picked Zomato was Swiggy. Both those counters went home with gains of 4 to 5%. This morning, it is Swiggy that's leading the way up with a 4% up move. Mahima is standing by with more on this. Mahima, what makes CLSA so constructive on Swiggy? Is it largely the fact that it was at a huge discount at 420 and 540, and of course that gives it enough and more room to go?
Right. So, Samina, what they've said is that they're seeing that Swiggy might not be able to catch Zomato, but as you rightly mentioned, they've said that that is kind of priced in already in the price that Zomato already came out with its IPO in. This is one of the reasons why CLSA is bullish on Swiggy. Couple of other reasons. They're saying that large and growing total addressable markets is a clear advantage, and Swiggy has been an early mover, so this is to their advantage. Secondly, they're seeing Swiggy's execution improving with accelerating growth and improving profitability going forward. They expect the Indian quick commerce to grow at a pace of 6 times by the end of FY26 and 27, and this will benefit both Zomato as well as Swiggy. They're saying that Swiggy will likely to lag Zomato, but as I mentioned earlier, they see that valuation discount is already reflecting in the price in reality. Now they see Swiggy's gross order value and revenue to grow at a CAGR of 43% and 32% respectively, and they're saying that catching to Zomato is not necessary for a successful investment case, and they're proving this by saying that the market is too big for a single player to see enough opportunity for Swiggy going forward. So all of these reasons combined are making CLSA bullish on Swiggy, but they're also bullish on Zomato as well. So they're bullish on both of these counters.
It's a small, no, it's a large industry with only 2 listed players. So I guess Swiggy and Zomato are now showing up like we were discussing. It's not an either or anymore. It seems to be an and situation with the Zomato and Swiggy. Zomato, of course, valuations have been Swiggy's valuations have been very compelling. Zomato is profitable. Swiggy is a few quarters out. But then again, these are 2 companies that are creating significant wealth. Swiggy, of course, between being unlisted, pre-IPO and then now listing, has been a significant wealth creator. Another company that's in the news this morning is Suven Pharmaceuticals. They've gone out and acquired controlling stake of over 56% in a US-based company called NJ Bio. This acquisition is a large one to the tune of 535 crores and will be completed by the end of this calendar year. The company is looking to fund this through cash reserves, and Vivek Sharma, Executive Chairman of Suven Pharmaceuticals, joins in to tell us the rationale behind this deal. When does this turn revenue accretive, and what does this do for Suven Pharmaceuticals? Hi Vivek, good morning. We've been trying to connect for the last few minutes, but we finally have you. So very quickly, congratulations. I believe this deal would have been in the works for quite some time now. Finally culminated into a successful acquisition of NJ Bio. You want to share with the viewers the rationale of Suven Pharma for going out and making this acquisition?
Yeah, hi, good morning. Thanks for having me with you guys. No, we are very excited to have NJ Bio as part of the Suven Cohance family. As you know, Cohance and Suven has been working on a merger, and this platform has been built for the last several years to become one of the leading tech-driven CDMOs. And in that step, we are really excited that we are able to partner with Naresh Jain, who is a world-renowned scientist in ADC, for having him and his team to be part of the Suven family. Now, we already have ADC capabilities in India as part of our portfolio, and that ADC capabilities allows us to do conjugation, payloads, and commercial product. However, we did not have early stage capability of linker and conjugation. What NJ Bio has, they have been working in this space. They are known as one of the best CRDMOs in the ADC space. They have won a Best CRDMO award for last 4 years in a row, which is very unique and testament to their commitment. It's a science-driven company with 100 plus employees in Princeton, New Jersey, out of which 50 are all scientists. And they bring this early stage capability of early stage development, linker, as well as conjugation, which complements very well with what we do and allows us to become an end-to-end antibody drug conjugate company, offering our customer capabilities that we were lacking and offering their customer capabilities that we are lacking. So we are very excited with acquisition and, partnering with Dr. NJ Bio, who will continue to remain with the company and then lead it to, the potential it has. With the acquisition, we have expanded the TAM that we operate in. With the current business that we were in as Suven Pharma, our TAM was about $200+ million. Now with that acquisition, we have now really expanded, and we are now playing in a $1.5 billion TAM field. And as you know, ADC is a growing field. There's a lot of investment that's happening in the industry. There are a lot of large pharma companies that are investing a lot of R&D dollars behind ADC. There has been very large acquisition by large pharma companies in this space. So we are really excited that we are able to partner with Dr. Jain and NJ Bio and make it part of the Suven family.
Let's start by telling us how soon can we expect this to be fully integrated into Suven's operations, and what synergies do you see between the 2 companies over the next 12 to 18 months? That, of course, is a qualitative question. Quantify also the expected revenue contribution from NJ Bio in FY25 and 26. From what I understand, calendar year 24 sales were estimated at $32 million, right?
That's exactly right. So I think qualitatively, first of all, the integration process started. The deal just got signed, so we have to work on getting it closed, and we expect it to get closed very quickly. In terms of operational synergies and commercial synergies, so I think the number one is the customer synergies. They have a large base of customers, and we have a large base of customers. How can we really offer them more services with our integrated platform now and global capabilities, right? To me, that's a big value creation that will come with both the teams combining. And that part is actually happening very quickly. In weeks, we will start working on that part. While there's a thesis around it, as part of investment, that what we need to do, but now the actual part will start happening. So we'll start working on that part very quickly. In terms of other synergies, keep in mind those same customers are also looking for other services that the Suven Cohen's portfolio is offering to other customers. So I'm expecting some cross-sell that we can offer them broader portfolio of services that we have, from a chemistry perspective and from even oligo perspective, right? So we're looking at a broader relationship with those customers. In terms of revenue, we have disclosed that the company has been growing at a CAGR of about 70% for the last 4 years, and then they will be at 32 million or so this year. We expect them to continue to grow at a higher pace, and hopefully with the acquisition and with the broader capabilities, I think, we look for significant value creation. We're not giving any numbers for our next 2 years forecast, but, the growth rate that we expect that they have been maintaining should continue in that direction.
Also, you did indicate that the deal is valued at low to mid-teens EV EBITDA. Could you then provide specific sort of EBITDA estimates for NJ Bio in calendar year 25? And while you're at it, also tell me how it compares to some of the other peers it has.
Yeah, so it's an early stage company, that has been investing a lot of money and that is investing in building capabilities. So yes, it's an EBITDA positive company. We expect that the EBITDA in CY25, the calendar is a CY25, will be significantly higher than the current EBITDA. And we expect that this year they will be close to about 20% EBITDA. Keep in mind, we are very interested in investing back money in operation, hiring more scientists to really demonstrate growth and to help our customers. So there's a lot of investment going back in the company. And if they can achieve 20% EBITDA, I think we'll be very happy, with that growth that, we will see in the top line as well as in the EBITDA.
Mr. Sharma, good morning, Neeraj here.
Hi, good morning, Neeraj.
Just this whole thought on your acquisition. So you've kind of maybe followed a string of pearls strategy, right? Which is great. Investors love it. You had a CDMO linked acquisition, if I'm not wrong, sometime in the past. This is a CDMO acquisition as well. Does this space become meaningfully large for you as a company over a 5-year period? Because we know that in CDMO, you don't get orders up front. You got to build capacities, take the pain, go through it, and then get order flows. So from where you are right now as CDMO contributing to your business, how large could it become, say, in 5 years' time?
Yeah, so you're absolutely right. I think the nature of the business is such that, it's a chicken and egg situation. We want the business, but the people say, well, you have to build capacity and capability. So it's not just capacity, it's capabilities. And that's why having an acquisition like NJ Bio really helps us, because they come with phenomenal scientific capabilities, phenomenal brand name in terms of science. Dr. Chen is a well-known scientist. He has built a phenomenal capability in Princeton, New Jersey, and he has planned to expand. And, our capability to really help him expand and help those customers really gain is what we are looking at. I think from an industry perspective, there's always buy versus build. And while there are options to really build, sometimes buying is, you use the word string of pearls is very helpful because it comes with experience, it comes with people, comes with customers, comes with credibility, and you can always scale it. So yes, we have done few acquisitions like this in the past. We acquired the platform actually. Suven was there, Suven was acquired, then we acquired Sapala, recently, that is doing very well. And now, NJ Bio to expand our ADC capabilities and make it more end-to-end. In terms of, where it becomes, we have given public guidance that we expect to double the business in 5 years, and hopefully with some of these things that are working on, internally, we are always looking to beat those expectations and expedite that growth path. But right now, we'll stick to the guidance that we've been providing to the shareholders about growing the business and doubling it over the period of 5 years or sooner.
Mr. Sharma, hi, morning. Tamanna here. Just trying to understand, will Mr. Naresh Jain continue to play an executive role and a big part of NJ Bio post the acquisition?
Yeah, hi, Tamanna. Good morning. Yes, he will continue to be the CEO of the business, and he will continue to run. As you know, these are science-driven business, and the business comes, with people, who give their business, the companies, the pharma companies who give their business, they trust in the scientists, and he has built a phenomenal reputation, and he's hired very good talent under him as well. And we're very excited to have all of that part of the Suven family. So yes, he will continue to be CEO of the company. We will work very closely with him. And looking forward to actually, have a more meaningful, broader relationship with him.
And in terms of how the synergies actually play out, will there be an integration of the capabilities? How do they then tie into Suven's broader offerings?
Yeah, so yes, listen, I mean, we've just announced it, so there are a lot of work to be done. Focus is right now on growth, that how can we really leverage our customers and offer to all the customers more and broad offering that now we provide to his customers, to NJ Bio's customer. Now they have a commercial manufacturing capabilities with a US FDA approved plant and with very good experience in commercial capabilities that Suven brings. And to Suven's customer, with the NJ Bio coming in, we can offer them a lot more services that we were not able to offer before, right? So our focus is right now on growth. There will be operational synergies, that comes in bringing in efficiency, looking at managing projects and looking at managing customers and looking at science. I'm hoping that this will allow us to really improve and look at science and, scientific capabilities. So all of that process has started and we're very excited, I think, what we can do. But as I said, our first focus is to look at understand customer needs and how can I offer more and broader services to my existing and new customers.
Mr. Sharma, one final question from my end. This Biosecure Act and not being a part of the defense bill right now, is this a delay or is it uncertain right now? Because the optimists say that while it's not happening this term, Trump 2.0 will probably see a lot more of this. So one, is it a delay or a denial? And two, even if it's just a delay and not a denial, is the delay for about a 6-9 month period or could it happen earlier? Any thoughts?
So yeah, I wish I can predict the future. Unfortunately, I cannot.
No, but
as you all know,
just
right?
just trying to understand.
So I'll give you my views.
Yeah,
I think my
exactly.
personal view is, and listen, I live in Boston. I run this business from Boston. I'm in India frequently, very well connected in the ecosystem. Few things. The damage is already done. Okay, and what I mean by that, if you talk to any pharma CEO in India today, they are all looking for a China-free strategy. People use the word China-free. I was just last Friday at an event and I met a gentleman who is the CEO of a very large company out of Boston. And I just asked him and he used the word that we are China-free. So in my view, and if you really look at the number of RFPs that Indian CDMOs are getting and India is getting and what we are getting is that has significantly increased. So my personal, and everybody is looking for a China-free strategy. Every large pharma company or every biotech is trying to figure it out. Now, whether the act passes or not, and when it passes, I think some of it is beyond our control. I think that the way I look at it, damage is done. I think India should see significant positive traction. India should, find itself in a very positive situation and take advantage of, I think, what's happening. And of course, we have to deliver and we have to, demonstrate that we are ready for it. And that's why the acquisition like this makes sense, that, we have East and West capabilities. We can do science-driven, research and projects, and we can take on scalable projects.
Just, Mr. Sharma, taking forward from that term, it's interesting, China-free. And this is to understand realistically what any kind of restriction, whether it's in the form of the Biosecure Act in the US or in any way, on Chinese imports for this space means for Indian companies. A China-free situation will also be with a significant lag, isn't it? The way the supply chains are set up right now, it's not like any country can cut the cord immediately.
No, you can't. I mean, pharma is a little complicated business. Moving product from one company to other, even within the same country, always takes time. So I think there are two ways to look at it. One is that while companies are looking at this China-free strategy, and by the way, term was not defined by me. I heard this from a CEO of a public company in the US last week. But China-free strategy, for them to really de-risk their, long-term supply chain and then figure out that how they will really work on it. At the same time, listen, there's a lot of new work that is happening. And what I'm seeing the trend is that the new work is not going to China. Everybody is looking for moving it out to countries like India or keeping it internally, whatever their strategy is or whatever their preferred suppliers are, right? So while it is a phased approach, as you rightly said, that it will take time for them to really figure out how they will take existing products that they have keen dependency on. The new business has started flowing directionally in other direction, and India should be a beneficiary of that business.
Thank you very much, Vivek. Good luck. Congratulations. That, of course, is Suvain Pharma Management telling us the rationale behind the acquisition of NJ Bio, the outlook on the CDMO space, and, of course, his thoughts on the Biosecure Act. In the meantime, the markets are not doing very much, continue to remain in snooze mode. 24,655 on the index. The breadth is not too bad. Stock-specific trade is what's driving the markets once again in the session. A quick check on Bank Nifty before we slip into that break. The last 2 days, they've also been seeing some weakness emerging. Today, though, is not too bad. 0.2% higher on Bank Nifty is what we have. A quick check on the dollar-rupee pair before we take that break. Remember, a change of guard at the Reserve Bank of India could have maybe a sentimental impact on the currency and the bond markets, but it's as flat as it gets on the dollar-rupee pair this morning. We'll take a break. We'll come back, continue our conversation, so stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators.
Welcome back. You're watching India Market Open. It's an important day with the new governor, or rather change of guard at the Reserve Bank of India. It is seeming like something that the markets have been talking about and become significant in many ways. In the meantime, the markets aren't doing very much. Some of your auto counters are doing okay. Tech stocks also looking fine. But the broader market sentiment is rather muted, with the Nifty now trading with a 0.2% gain this morning. SEBI, I believe, has implemented a series of new measures regarding futures and options, or F&O more popularly known, in an effort to curb the risk faced by retail traders. Hiral is standing by with us to help us understand what the initial data trends are indicating. Hiral.
Thank you. Clearly, as you mentioned, the SEBI measures that have come in to curb the excessive speculation in F&O has impacted the volumes and the turnover on both the exchanges. However, to be noted, the impact has been way higher on BSE versus what we've seen in terms of NSE. Key aspects that we're looking over here is the premium turnover that has declined on an overall basis. And secondly, some of the premium turnover from Bank Nifty as well as BankX has actually shifted to Nifty as well as Sensex weekly options. Now, let me just reiterate a few of the steps that have been taken. One is increasing lot sizes, two, restrictive weekly expiry contracts, as well as imposing higher transaction charges. Now, these changes have been implemented in phases, where the final set of measures are scheduled for the 20th of April 2025. And they did come into effect from the 20th of November 2024. Now, the data that we've collated so far and the analysis that we've done is from that week to now as to how have the changes happened. Firstly, as we mentioned about the premium turnover that has declined on the overall basis, let's look at the premium average daily trading volume, which is the change that happened yesterday itself. Now, from a 3-month high, the volumes have gone down by almost 94% for BSE, whereas for NSE it is down only 56%. Yes, both have seen the deep growth, but BSE has been higher. If you see in terms of the week-on-week changes for BankX as well as Bank Nifty as well, just look at the weeks from 18th to 22nd, 25th to 29th, and the last 3 weeks, you've seen a major degrowth that has come in with regards to BankX, whereas 98% was the decline versus, Bank Nifty, which has seen a decline of around 33% in the last week. Similarly, it's interesting to see how the premium turnover has shifted to Nifty as well as Sensex as well, because in the week from 18th to 22nd, you have Sensex which saw an increase of almost 141%, whereas Nifty saw an increase of around 21%. Similarly, in terms of 25 to 29, there has been a degrowth in one aspect. 2nd to the 6th of December, again, you've seen some bit of an increase that has come in. If you talk about the overall options ADTV premium, that's week on week for BSE and NSE, that is also interesting because in the week ended 18 to 22nd, BSE did see an uptick of around 64%, whereas NSE saw a degrowth. 25th to 29th, you have BSE which saw a degrowth of 23%, whereas NSE just saw a degrowth of 3%. And from 2nd to 6th, a degrowth of 9% on BSE, whereas NSE did see a growth of around 5%. And very lastly, if you see in terms of if you have to compare it to the 8-week high, again, it's a 99% degrowth that has come in with regards to BankX, whereas only a 58% degrowth in terms of Bank Nifty. Similarly, if you see in terms of Nifty and Sensex as well, a 16% degrowth coming in terms of Sensex, whereas Nifty has seen a growth of around 40%. And if you have to look at about BSE and NSE, 31% degrowth in terms of BSE for that week and a 13% only for NSE. So the data that we have so far is clearly indicating that yes, the impact has started to show. However, the impact has been higher with regards to where BSE goes versus NSE, and that's going to be a downward. And to be noted, in terms of volumes as well, NSE is seeing something higher, and you have the NSE IPO as well that is on the radar.
And that is the erstwhile debate, NSE versus BSE, very similar to what we saw on Swiggy Zomato. Remember, there is expectation and a sense that NSE could be listing in the next 1 year. And the euphoria in the unlisted market space around NSE is also worth noting. NSE has been a significant wealth creator for ultra HNIs in the unlisted space, and also remember it has, or rather focuses or shows up on a number of those 361 funds that are available to HNIs. Well, let's now shift focus to the capital goods space. It's Philips Capital that initiates coverage on ABP, BHEL, Cummins and a few more. Anushi is standing by with more on this. Anushi, what is the year ahead looking like for capital goods stocks?
A very constructive note that we are seeing from Philips Capital in which they've emphasized on a couple of names which would be in focus. Firstly, ABB, a buy rating with a target price of 8,500, 12.5% upside is what we are seeing. BHEL, another 21% of an upside, with Cummins a 9.7% upside. All of these are buy calls, while on the neutral side we have Siemens with a target price of 7,900, which is a 1.5% of an upside from its yesterday's close, and sell on, but however they have a sell rating on Thermax. This is with a target price of 3,900 and a 16.2% of a downside. So what is the point of this report is, firstly, they are emphasizing on the India's capex cycle wherein we are currently placed. It's just what they've said is that we are currently just at the beginning of this stage, and with the expected pickup in private capex in future terms, this is just expected to intensify further. Even if we look at what has happened is public capex is also expected to see a strong boom with the kind of government capex which happened in the first half, which was on the muted side. So obviously the outlook would be on the second half. But other than that, what the note has specified and all these stock valuations will re-rate as they enter the virtuous cash flow cycle with more of these capex plans happening. Diversified players offering a lower risk on on these current valuations, with L&T being their top pick, and they prefer ABB, Cummins India and BHEL in their respective subspaces. However, on cements they have a hold rating. This is on the account of higher valuations in this space, so they would have a neutral approach on this and would wait for a better entry point. While for Thermax also they've emphasized on this on a similar line, wherein they are saying that valuations currently remain on the expensive side and would wait for a lower entry point for the stock to turn their view positive. So this is the overall picture that we are looking for the capital goods space.
Thank you for that, Anushi. Let's some interesting notes this morning, and let's look at what HSBC is saying about the IT industry. They expect growth to pick up to 6 to 7% in FY26 and have changed their ratings on top tier stocks. Puneet is joining us for all the details.
Well, thanks for that. It's a very big report because there are multiple upgrades, downgrades in this particular report. Let's start with the large cap space first. They've, upgraded Infosys to a buy from a hold. They have a target price of roughly about 2,120 rupees per share. An upside of 10% from the previous close. The second one's LTI Mindtree, another big upgrade on the stock. Target price 6,970. It's upgraded to a buy from a hold. And Wipro as well has been upgraded to a hold from previous reduced rating, as you can see on your screen. They've downgraded TCS in this particular time frame, as well as Tech Mahindra as well. Now, this is of course in the large cap space, and mid caps also they have downgraded Coforge to a hold from a buy rating earlier. Target price 8,200, which is a downside of roughly about 8%, and they've upgraded Emphasis to a buy from a hold rating. Now, as you rightly said, they're expecting a 6 to 7% growth in FY26 versus a growth of about 3 to 4% in FY24 and 25. So expecting a better year going forward as well. They're also estimating that while there might be some uncertainty in Europe as well as because of AI-led innovations going forward, they're expecting improving growth standards from here will attract investors into the IT sector again compared to the other sectors. They've also mentioned that they're expecting the IT sector to perform in line with market expectations in calendar year 2025. While they mentioned that less constructive on the mid cap space, they have, as mentioned, upgraded a lot of names in the large cap space. So most of them trading in the green today. Some might be pressure on stocks like Coforge, especially because very high valuations and downside of roughly over 8%, as mentioned before.
Puneet, that's what we're seeing on IT stocks. One space, let's quickly take you through what's happening on the markets before we talk about specific counters. The Nifty is trading with a 36-point up move. It's a 50-50 split almost on the Nifty 50, with stocks like M&M, Trent, Dr. Reddy's, ONGC seeing some profits being taken. And of course, on the buying side, Shriram Finance, tech is looking good. Some of your banks are holding well. Asian Paints is seeing a little bit of a positive up move. In the broader market universe, on the Nifty 500, the breadth of the market there is also more or less biased towards the upside, trading with a 33-point up move. But you've got a whole bunch of counters that aren't doing too badly in trade. You've got ITI that's up 9%. Vinity Organics, I haven't seen that on the gainers list in a while now, is up 6.5%. Triveni Engineering, Nuvama, what we've talked about extensively about capital market play, Nuvama being one case in point, the top pick by Motilal as well, is up 4.5% as we see it. Nippon Life India also looks good, up about 4%. Chola Investment is up 3.5%. So anything in the capital market space is seeing a very, very clear positive move in today's session. Vedanta Fashions, Mastech, Trident, Inox are some of the other gainers in today's trade. 361 also seeing a positive move. Well, pharma is having it quite sweet, and it's all about M&A in that sector. I understand Metropolis Healthcare has acquired Core Diagnostics for a total of 240 crores. The board approved the proposal to acquire 100% stake in this Delhi NCR company over the next 2 months. Varsha standing by with more on this. Varsha, what's the rationale for Metropolis going out and doing an all-cash deal to acquire Core Diagnostics?
Well, this acquisition, as you rightly said, the 100% acquisition will actually help Metropolis to increase their oncology segment. So oncology contribution is 4%, but post this acquisition, the contribution will be from 4% to 10%. So this is a positive thing when it comes to Metropolis. Talking about the deal, if you say the 247 crore will be funded by 55% by cash consideration, and the Core Diagnostics will be wholly owned subsidiary, and the transaction is expected to be closed within 60 days. If I were to talk about the valuation details, so the equity value which is 247 crore is 2.2x of FY24 revenue of Core Diagnostics, and this will be an EPS accretive from year 1 itself, that is FY26. Talking about this synergy especially, so one is cross-selling synergies, so there would be wide opportunities for Metropolis to offer the non-onco test to Core Diagnostics hospitals and lab clients, and of course there will be cost synergies as well. The contribution of oncology, as I highlighted, to revenue grows from 4% to 10% for Metropolis, and 70% of Core's oncology revenue is from high-end tests compared to 40% for Metropolis. So this may increase, EBITDA margins for Metropolis going forward. Lastly, about the Core Diagnostics, if I were to tell you about, so they're leading oncology testing lab player in India, dominant player in super specialty, and the diverse mix, if you see, their B2C contributes almost 51% and B2B at 49%, and the revenue CAGR for Core Diagnostics stands at around 22% for FY22 and 24.
Okay, the other big story this morning, honestly, is the change of guard at Mint Street. Shaktikanta Das is expected to address the media today. He's the outgoing RBI Governor. Santosh Malhotra will take charge from him. Shubhana is joining us live from the RBI headquarters, and Varun, in fact, from North Block, because you're going to expect the new RBI Governor to exit from North Block. Maybe Varun will have a chance to catch him. And of course, then I believe there will be a handoff ceremony later today. So let me start with Varun on, whether we have any sense of the timeline for the new RBI Governor.
That's right. So we're standing here in front of the Finance Ministry at North Block, and we're waiting for Mr. Sanjay Malhotra, the new RBI Governor, as Mr. Shaktikanta Das demits office today. Now, the RBI Governor is expected to be there in Mumbai for taking charge in the evening, but as of now, we can't see him over here. But we're still waiting for him, and we're expecting to get a hold of him as and when he arrives before the North Block today.
Okay. And all right, so hopefully, Varun, you will get a chance to catch Sanjay Malhotra there outside North Block. But then the action shifts to Mint Street, like I said, where Shubhana is standing by. Shubhana, what are we expecting through the day today?
Hi, good morning. Yes, so Shaktikanta Das is, likely to demit office today, where they're likely to hold a conference at 11:30. We're waiting right outside the RBI. The expectation is that, he's going to bid farewell. He's already, written a post on X, wishing his gratitude to the Prime Minister and to the whole RBI team, over his 6-year term. So that is what is expected. I think he will also talk about, the smoother transition, of his to his predecessor, Sanjay Malhotra. So that is, I think, they're going to speak at the press conference.
Okay. Well, this is, of course, the big story, and we are tracking it through all lenses possible and from all fronts possible, if you will. Thanks so much, both of you, for getting us that update as well. Big momentous day and in interesting times as well.
11:30 we hear, I think that's the big update coming in. We should put that out. 11:30 we hear from Governor Das. And of course, we'll get you that press conference live. He did tweet out today saying how grateful he is for the opportunity. And I think the big takeaway that, and you guys will remember this, it was always about North Block not agreeing with Mint Street, different view between the governor and the finance minister. That's not happening anymore.
And what a guy. Took us through the difficult times of COVID and more, did something else when the global central banks were doing something else, and quite stunning really in terms of policy making. whether the Reserve Bank of India or otherwise, right? Even the government, to fair credit, during COVID, everybody gave this stimulus. India refrained from doing so. What amazing policy decisions have been taken in the last 3 or 4 years. Quite stunning, really.
Yeah, and to stick your head out and keep that high. Even look at the currency. The rupee has been one of the most stable currencies in the last decade. Growth has been on point, while inflation was a worry. I remember a lot of it, while some of us may argue could be food inflation and holding on rates may or may not have contributed to that. But our trajectory on growth, on FI flows, on the dollar rupee pair, on the bond market has been commendable. And the one man who should take and deserves all the credit is Shaktikanta Das, who now steps down as the RBI Governor. He, of course, had a long term as the Governor for about 6 odd years, now stepping down and handing over the reins to Sanjay Malhotra, who is serving as Revenue Secretary and is an IAS 90 batch officer, I understand, and also very instrumental not just in running REC, but also achieving the recent buoyancy in tax collections. So I guess the focus comes back on GST and revenue now for the next few years.
Yeah, and maybe full tilt on growth as well. You never know. So could be very interesting times on this one for sure. Big change of guard, of course.
And I think different resumes, different legacy. This is a man whose career spans in public finance, energy reforms, again, a big focus for the country, economic administration, along with the leadership of the Department of Revenue. So that is very, very crucial in terms of experience. So he's not just the man who gets economy, but gets the focus of the nation, which is energy, revenue, and of course public finance.
I mean, yeah, in his role as governor, and I think this is what has become interesting about our system, it's now a committee, a monetary policy committee, which makes that ultimate decision. And of course, the governor always has the veto. But the fact that both are working lockstep and in sync becomes important. We'll obviously hear from Governor Das at 11:30 a.m. And then what I'm told is that you will have an official sort of ceremony of handing over the baton. So for the incoming Governor Sanjay Malhotra, day one actually starts tomorrow, and 5 p.m. today is when Shaktikanta Das officially gets off the clock.
Must be quite heartening for him as well, right? I mean,
it's a long tradition. And I mean, I don't know, knowing Shaktikanta Das's role, I don't think we would have heard the last of him in government yet. I mean, he's a very trustworthy person.
Was an able government person before his role as the Reserve Bank of India governor. So does this mean
that I think people may have forgotten, but he's steered everyone through demonetization
as well.
So that goes back way 2016.
So we may continue to see him. Maybe in a political avatar after this.
I don't know. That's too much kite flying to do. But quick look at what's happening in the markets as well. I mean, look at Varroc Engineering. Varroc Engineering really catching my eye, and I think they've just put out their investor presentation, which could be one reason why you have those shares up. Varroc Engineering about 11.5%, and their investor presentation possibly looking very, very positive, which is why you're seeing this kind of a move. They've talked about their business contribution here. Their revenue has been $910 million. 87%, of course, is coming in from India, while global is 13%. The vision, etc., is all put in. But I'm just wondering what has been the reason, or what have they said in their investor presentation, which has been so exciting for the street. The EV product offering is becoming a big driver, as well as are their end-to-end capabilities across design, engineering, testing, validation, etc. So that's something that we should look at, and we'll get you a detailed report in just a bit on what exactly Varroc Engineering is saying in its investor presentation to excite the street. But meanwhile, Ajay Srivastav, MD of Dimensions Consulting, joining us on the show. Ajay, great to speak with you as always.
Good morning.
Good morning. So what do you think is going on? December mood has set into the market, everyone in holiday mood, or a little worried about what's happening next?
Worried? Do you think anybody is worried? I can't believe anybody is worried in this market.
You never look worried, so.
Oh my God. With God's grace, and I think what's happened to all of us, I think the equity investors had a good deal in the last 2 years. This year has been exceptionally well, of course, and therefore, one should take the glass half full and says, we made a lot of money, let's go enjoy ourselves. and rather than worry about what's going to happen next year. I'll tell you what's going to happen next year. US is going to do extremely well. It'll take the world economy up. We will have our own set of problems, but as always, economy is different, market is different. So if you're a stock market investor, I don't think you need to worry anything about next year. What changes we are seeing in our economy makes our stock market a little more impervious from what's happening in the general economy. So yes, growth is down, but your portfolio will do well. Because why will portfolio do well? Because you are investing in the companies which are changing the market structure today. So it doesn't matter, economy can grow 5%, your companies are going to grow 40%.
That will be an interesting set. But yeah, Ajay makes this telling point. Viewers, in case you didn't know, the S&P 500 is on track to outperform global stocks for the 14th year out of the last 15. This is the longest streak in 75 years and would tell you why it shouldn't surprise you that global money wants to be in the US, because that market is doing so bloody well. So no harm in being there. Ajay, I heard you say that the US may do well, but our markets also may do well even if the GDP doesn't, and your portfolio could grow 40% because you are investing in new age companies. Now, not everybody is doing that, so would love to understand from you, how are you building a portfolio which is dominated by new age companies, Ajay?
See, without recommending any company, let's take a very simple example, right? The quick service company which are coming into, whatever you want to call them, whichever way, including home catering, right? What are they doing? They're replacing your kirana market. Now, kiranas are hundreds and millions of people who operate small shops everywhere. Now, as they get replaced, there are millions of people who will drop out from the consumption line, who were earning a decent living, but now need to go back to the dole or whatever. But the companies who are consolidating this whole move, they are going to make tons of money. And if you're an investor in those companies, you gain a lot. So, the same market structure change of consolidation of quick deliveries into your homes, which will unfortunately hurt millions of people who run kirana stores and therefore can impact the economy. On the other hand, it does the reverse impact on your portfolio. You're going to make money because the companies which are doing this work are going to make serious amount of money. So, so the same thing, which is going to be bad for millions of kirana is going to be very good for some of the companies. And if you're invested in those companies, you got to be making dividends out of it. The second point is these companies are well capitalized. That's a more important point. That, they got capital, they're able to bring in more capital, they're growing, they're new ideas. Therefore, you are seeing an exponential growth rate, not only in terms of the business volume, but in terms of acceptance mainline. You've seen how Bitcoin has come up to 100,000. It took a long while for Amazon is hitting new highs globally. It was in the dumps for a long time. Same is happening to our companies. Hardly anybody that invested in the company worried about the losses, new age, don't understand this enough, and so on and so forth. Gradually, you are accepting it. People are saying, yeah, I think we need to get away from cement and steel and all those old foggy companies and dodgy companies and say, go on to the new age. So I think, so therefore, if your portfolio is geared toward newer companies, newer age, companies raising serious capital, new IPOs, you would do a much better than general market. Nifty 50 by and large is fuddy-duddy at this point of concern. If you're focused there, I think you're in the wrong place in the market.
I'm just wondering right now, Ajay, are you finding any interesting opportunities, considering that the economic outlook also is a bit of a downer? So you see what happened with the GCPL yesterday, HUL, etc. Any of these consumption spaces that you would touch right now?
Not at all. For been 3 years, I've touched a consumer stock. I will not touch them. I told you, fuddy-duddy, it's an old age. You don't go back to Fiat, right? Do you want to own a Fiat? No, you don't want to own a Fiat. You want an electric car at this point of time. That's why I said very clearly, economy will do its own thing. It's got a problem. Economy's got a serious problem. And, there's no mystery why it doesn't matter which political party, has to give doles or helicopter money to get the votes, because a lot of this developments is passing by millions of people at the end of the day. They're not invested in the market. And if you're not invested in the market and you don't own gold and you don't own real estate, I think you're in a terrible place thanks to inflation. So therefore, by nature, without passing, what's equity, not equity, but the reality is that if you're owning equity, if you're owning gold, if you're owning real estate, you're on the winning side of the market. So don't worry about the economy will not do well. Capital expenditure, the biggest theme for last 2-4 years, is gone. Government's growth of capital expenditure cannot be more than 5-10%. So what was growing 40% 2 years back is going to grow 10%. So if you're still in the infrastructure stocks, Your returns may come, but it will be much, much lower because government cannot keep spending the money. And the money which is required to give, you got new elections coming up in UP, etc. By the time the toll of this 2,500 rupees per person goes out, I don't know how much will be left to spend on development. So our worry always been this fiscal profligacy of giving out doles is going to haunt us one day. Now, it may not haunt the equity investors, but certainly going to haunt the economy.
Then, okay, you're not touching consumption with a barge pole. You're saying upgrade from the fiat. So then Zomato, Swiggy, Nykaa, PB Fintech, is this the new age cars? What is Ajay Srivastav buying right now?
If you don't own it, you got to be living under a bunker somewhere at this point of time. I'm not recommending you go buy it today. Please, I can't recommend. But if you don't own these companies, where have you been living, my friend? Are you in a bunker with the Second World War? You know, the point is again the same point, that if the economy grows by 5% or 6% or whereabouts, how much can a cement industry grow? How much can a steel grow? If government's capex budget cannot grow more than 10%, companies downstream cannot grow more than 15-20%. But companies reordering the market structure, newer age companies, the new engineering companies coming on board. You know, it's amazing. I'll tell you something. I've never seen a more vibrant equity market than the last 12 months. So many new themes coming up. Today or tomorrow, we are opening an issue called Indian Gemological. I'm not recommending it again, which is called rating of diamond. When did you think of these companies coming? Koreans, they are minting money out of this country, man. It's horrible to see them taking money out, but that's the reality of the market. They've 18,000 crores Hyundai, 15,000 crore LG Electronics. You know, and so many new names and themes. I tell you something, if you're still in the old companies, get out, my friend. The world out there is beautiful.
Ajay, so one last question from my end. Are you that portfolio is completely dominated percentage-wise and number-wise by the new age space, or are there some other sectors, let's say chemicals, let's say pharma, etc., which might also be there?
Okay. No, there is one larger sector which we have, hospitals. We have a fairly large investment in hospitals. We have added up in this year significantly. And again, the same theme, that at the end of the day, as wealth goes up, as population ages, you need to go for your health services. Now, government is not spending enough on the health. We all know that. You saw the budget numbers. There's not enough hospitals for people there. And if you try to get a bed in the hospital, any of you, unfortunately, you'll realize how much shortage there is in the market. So yes, I call it hospital the new age because that's the way they run these companies. They're running for utilization. I hate to use the word, but they do run it to make money for investors. Now, patients may hate it because you may do 4 procedures instead of 2. But the fact is, for investors, it's good time. So hospital is the biggest sector that we are in among quote unquote old age. But primarily, the question is, everything that we've got, 80% of the portfolio we've got and recommend at this point of time is companies which have been in the market less than 3 years.
Wow. That's a telling statistic.
Yeah.
80% of the portfolio in companies which have been listed for less than 3 years. That takes away a lot of the listed space.
So what is the next big listing that you're looking forward to, Ajay? Or are you not looking at these listings at all?
It's insane season. One listing is happening just now for life sciences company. It's crazy listing. I can't even understand how anybody's paying, but well, people are paying for it, so it's okay. So listing, again, back to the point that, you need to be opportunistic about listing. We just had a new age company listing literally at the issue price, and then flew next 4 days, it flew 20%. So it gives you chance to get in. But you got to be careful where you're buying in. If you're buying in on an old business, guys in a new model, that's the bad place. CDMO, it's okay, but nothing very great about it. It's not going to give you exponential growth or any kind. So even in listing companies, you got to be careful what you're doing, and you will not do a new themes. Like, company I just mentioned, I don't know enough about it, so please, I've not done research. But prima facie, when the guy told me that this is the company doing, gemological certification. It's a new company. You don't have a competition. It's kind of some stuff which new things do. So perhaps something like this is good in a portfolio. So, you have to choose your listing. That the company are new in a true sense of the word, not old age guys as a new company. And I think, remember the old logic that everybody put .com once upon a time, everybody putting AI right now. So you got to be careful of that.
Yeah.
As long as you're careful, you're fine.
Okay, so ditch the fiat, come out of your bunker, and don't be worried. Three lessons from Ajay Srivastav that you should not miss at the end of this very exciting conversation. Thank you so much, Ajay.
Thank you very much.
Always fun speaking with you, Ajay Srivastav, the MD Dimensions Consulting. We'll take a very short break. If you cut those pictures very quickly, and we'll come back after the break with them. The RBI Governor will take charge from tomorrow. Sanjay Malhotra exiting North Block. There he is, on his way for his new assignment in Mumbai. With that, it's a wrap on India Markets Open. Stay tuned. Up next is Ask Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential.
Welcome, you're watching Ask Profit, a show where we answer all your stock related queries. I'm Mahima Vacharjani and with me is Puneet Jhaveri. Well, before we move on to your queries for the day, let's take a quick look at how the markets are panning at present. Well, it's a quiet day for the markets. The Nifty has a range of roughly 70 odd points, currently trading around 0.12% higher. Let's also pull up the Sensex. Sensex has a range of around 250 odd points, trading around 0.1% higher. Let's also pull up the broader markets. The broader markets results are also in tandem with the benchmark indices today. The mid cap 150 is almost flat, trading at 0.06% higher. The small cap 250 is up around 0.12%. Let's also pull up the Bank Nifty and see what are the levels Bank Nifty is trading at. There you go, it's around 0.2% up, hovering around the 53,500 levels. Let's pull up the contributors on the Nifty and see what are the counters weighing in and weighing out on Nifty. There you go, there's stocks like RIL, Bharti, Airtel, M&M, some stocks which are weighing down on the Nifty, but Infosys, ICICI Bank, Kotak Mahindra and HCL Tech are some counters in green and keeping the Nifty in check. Let's also pull up the advanced decline ratio and see how that's panning out in trade today and see where the market is skewed towards. There you go, the graph is very narrow, 1100 odd advances versus 1000 odd declines. So the ratio is almost 1:1 when it comes to the advanced decline ratio. Let's pull up the NSE 500 if we can and see what are the top losers and gainers on the NSE 500 today. There you go, Varroc Engineering is seeing significant gains, up around 12%, ITI up 7%. Some counters in the textile space like Vaibhav Global, Raymond are doing well again in trade today after the Bangladesh +1 yesterday. Some counters which are not doing well today and have been under pressure is Info Systems down around 5%. HEG seeing profit booking now down around 4%. Oracle Finance down 3%. CET down 3% after the rally it saw yesterday. LIC down around 3%. Let's also pull up the sectoral index and see what sectors are buzzing in trade today, which are the sectors in green and which are in red. There you go, Nifty Metal gaining the most, up around 0.8%, Nifty IT up around 0.8%, Nifty Realty also up around 0.8%, but something that's not doing very well is Nifty Media, down around 0.5%, Nifty Energy down around 0.3%, Nifty Auto down around 0.2%. But moving on to our queries for day, and of course I'm welcoming in our guests for the day. We are joined by Astha Jain, Senior Research Analyst at Hen Securities, and Swati Hodkar from AVP Technical Research. Nirmal Bang, who joins us now. Welcome to both you beautiful ladies. My first question from the day is on Protein e-Government. Raju from Vijayawada is joining us, and he is holding Protein eGov around 800 shares at 980 a piece, and he's a long-term holder and he wants to keep holding it for another 1 year, and he wants to know a view on this. Astha, I'll come to you for this one. Your view on this particular counter?
The view is definitely positive because it is one of the leading technology solution provider. And we have seen few days back also the OFS came and it has got a very strong response. So my idea here is if the horizon is purely long term, then there is no need to worry in this counter, because this counter we are expecting with sales growth as well as bottom line growth to be at a CAGR of more than 10%. So I think going ahead, we are expecting the stock price momentum to be continued in this counter with a price target of more than 2,000 at the upside. So my idea here is to remain invested in this counter with a price target of more than 2,000.
Well, remaining investors, what Astha's view is on Protein e-Government. Now, let me get in, the second query as well. It's on sale, the metal counter. This query is coming in from Raja Kumar from Chennai. He has, holding 200 shares, roughly at about 116 rupees per share. And he wanted a view for the next 3 months, whether to hold or to get out of the securities. Let me get in Swati for a quick check based on, the 3-month view. Swati, what do you think of sale, and what should be the query going forward? 3-month time frame, any kind of view that you have on the stock?
Yes, the view is positive at the current market price, because already we have seen a sharp correction from almost 170 to 110 levels. Now from there onwards, the RSI is showing a positive reversal from the oversold zone. So I believe we are likely to witness some more bounce back rally from the current market levels, at least up to 145 to 150 levels. The view is positive as long as the stock holds the support of 115, is acting as a very strong support levels provided by swing supports. So by maintaining that stop loss, you can definitely hold on your long positions for immediate target of 150, and beyond that 160 levels can be seen.
Right, so hold is the view on sale. The next query is on ONGC. Pranil is writing in, and he has a time frame of roughly 2 odd months to keep holding ONGC. So Swati, I'll stick with you for this one. How does ONGC look on charts right now?
As of now, my view is little bit cautious on this particular counter. No wonder the stock has shown a sharp corrections from almost 345 to 250 levels. But I believe if you look towards on a larger degree, more corrections can be witnessed in the overcoming trading of sessions. I believe because what I'm saying that the counter is trading in the pattern of the low top, slow bottom, doesn't showing any sign of a reversal from the current market price. If it breaks 250 level, then selling pressure will get intensified, which might take a stocks towards to 240 and so levels. So not to create any long positions at the current market price, if the stocks find out a support nearby 240, that level will be act as a good support levels, and it will be a risk reward ratio will be a little bit comfortable at those levels. So try to take a long positions on every tips towards to 240, and at the current level, I will not suggest to fresh buy calls.
Right, that's the view coming in on ONGC. We have our first caller for the day. Akhil Saraf from Mumbai is calling us. Akhil, thanks for calling in. How can we help you?
Yeah, hi, good morning. Thank you for having me on air, and I'm trying to answer my query. My query is I'm holding 525 shares of Vedanta, and I'm holding it for over 16 years since the time it was known as Sterlite Industries. I know the company is giving good dividends, but I believe the company is going to be going into demerger.
Okay.
So is it better to hold it right now or sell it and encash it and, reinvest somewhere else?
All right, Akhil, I'm just curious at what levels did you buy Vedanta? Because 16 years ago, I believe the price, I don't even know what the price would be. What's the price at which you bought it?
I honestly, it was given to me as a gift. So.
Okay. Okay, I see. So, if you can disclose that to us, at what kind of profits are you sitting at present, and what's the kind of time horizon that you're looking for?
I mean, I am making a profit of over 1 lakh rupees.
Okay.
That much I know.
Mm-hmm. Okay, and what's the time horizon that you're looking for?
Nothing. Now I can encash it.
All right. So then, Swati, I'll come to you for this one. Should he book profit at the moment, because he's sitting on a significant profits of around 1 lakh rupees?
First of all, I congratulate him. He's holding for so long period very patiently. And I believe if we are looking for at least 14, 15 years back at that point of level, the stock was sitting in nearby 70 to 80 levels. So probably I'm assuming that was your buying price. Currently, the counter is trading at 501 levels. The view is definitely positive on the technical front. The monthly chart is forming the flag pattern, the body of the flag pattern. Now, if it manages to give the breakout of 510, definitely a new reversal or new trend will get started, which might take a counter towards to 550 to 570 levels. So my view is definitely positive. I will suggest to stick on your long positions. Try to maintain the profit stop losses, which I will give it to you at around 470. That will be acting as a very crucial support level. Unless and until it doesn't trigger that levels, definitely the view will remain positive, and such kind of a rally will continue down a higher side. So by maintaining a stop loss of a 470, you can hold this particular counter for a target of 570. And so if the stop loss get triggered, then you can encash your profits and invest into some other quality stock.
Well, that's the view on Vedanta. I just want to move on to the next query as well. This is on Zomato, another investor favorite stock. We are getting this query from Mamta from Chennai. Now she is holding roughly about 58 shares, bought at 217 rupees per share. And her query is more on the fundamental side. She has said she wants to accumulate more stocks of Zomato. She's looking for a good level to enter from here and wants to know if there's any inputs from the fundamental side averaging upwards, going forward as well. So let me get in Astha, any view on Zomato and what could be a level to, increase your allocation going forward as well?
I think in Zomato, one can increase the allocation, but slightly at the lower level, first of all. Now, talking about the fundamentals of this counter, the gross order value, it has shown a rise, and now with the management's, efforts, I think this GOV, that is gross order value, will reach around 1,000 crore mark, I suppose, in coming few years. It is roughly somewhere at around 300 to 500 crore. So now the management has aspirations to reach those levels. So definitely when management set such kind of aspirations, it signals towards the strong growth in the financials. And I think on the basis of that, definitely the financials will be the EPS accretive performance going ahead, which we believe. And on the basis of that, we think that the stock price momentum will continue to rise. So my idea here is to stay invested, first of all, whatever quantity the investor have, with a price target of 320 to 330 at the initial levels. But for the accumulation purpose, it's better to wait for some fall, maybe at around the level of 290 or 285 odd levels. It is a good level to make an entry into the counter as well. So accumulation can be done at the lower level, but continue in the investments with a price target of 320 to 330 at the initial levels.
Asa, quickly, just your view on Swiggy as well, because CLSA has come out with a note giving a target price of 708. Do you also kind of agree with that?
So for Swiggy, when the IPO came, we were positive on this IPO, and I really stick my neck out, and I told even all the viewers, investors that go for the listing gain also. It was a bold call for me, but we were positive on this company. There were two basic points. First of all, the kind of strategies this company is taking in order to increase their performance. I think if those strategies materialize in a proper way or execute in a proper way, definitely the company's financial performance will get a strong jump. Secondly, the valuation at which they have bought the IPO, it looks reasonable when I compare it to the Zomato. So all in all, but yes, the profitability was a concern at that time. So my idea here is we are continue to positive on this counter on Swiggy, but the price target which we would like to set is not 700 because it seems to be very high as of now. But yes, initial price target can be set at around 600 to 620 odd levels.
Got it. We have our next caller, Debashish Ghosh is calling in from Kolkata. Thanks for calling in. How can we help you, Debashish?
I want to purchase Wipro at this time. Whether it is right decision or wrong.
All right. What is the time horizon that you're looking for? How long can you hold these shares?
More than 3 years.
Sorry?
More than 3 years.
More than 3 years. Okay, so long-term view. Asa, I'll stick with you for this one. Wipro, is this the right time to enter for next 3 years?
I think one can make an entry to this counter, but at the level of around 300 to 295 first of all. Now, the reason behind is, yes, the management has seen a strong rise in the deal wins. And on the basis of that, we expect this company to perform strongly in the coming because they have various large deal win orders. So I think on the basis of that, if anyone has the mind set up for this counter in particular, then one can go ahead. But there are various other IT companies also which are looking good at the same time. So idea here is if someone has particularly suppose lakh rupees, then 50,000 in the Wipro and the remaining 50,000 in the other good companies in which right now Tech Mahindra is looking very good to us. And we are suggesting the price target of around 1900 to 1950 at the higher levels. So idea here is partially enter into the Wipro of whatever money one needs to allocate there, but partially invest in other IT majors also.
Well, that's the view coming in from Astha on Wipro, and we also had an HSBC upgrade today as well on Wipro. They had a reduced rating earlier, now it's a hold, so they've upgraded that as well. Got that view, Astha. The next query we are coming in is on IDFC First Bank. Now, we're getting this query from Romani MV from Chennai. Now, they haven't mentioned the time frame, but the mid-sized private sector banks have also seen some correction. The stock is IDFC First is also down on a year-to-date basis by roughly 25%. Let me get in a quick view from our technical guest as well. What is your view, Swati, on IDFC First Bank, and is there anything else apart from that you like in the private mid-tier private sector banks as well?
My view on the IDFC First Bank is a little bit cautious. Why I'm saying that since 2023, we are continuously witnessing that the stock is under the pressure. We have seen a fall from almost 97 rupees to 60 levels. Now it is currently trading at an oversold zone. Probably we are likely to see a reversal over a period of time, but as of now, it is not showing any sign of a reversals. The stock might went into the consolidation phase. We might witness consolidation phase, and after that, some sort of a reversals can be witnessed. So my view is cautious as long as the stock trades below 68, 69 level. Those are acting as a very strong resistance levels. So any move above that level will only witness some sort of a fresh buying can be witnessed in those stock which might take a counter to 75 to 80. At the current level, I will suggest not to invest at the CMP, but definitely wait for the breakout of 67 rupees on the closing basis. Then you can take a buy call in those counter.
All right. The next question is, I believe, on the MobiKwik IPO. Bala from Chennai is asking this as to, what is the outlook for this particular IPO? Asta, I'm not sure if you're covering this IPO. Do you have a view on this?
Yes, in fact, we have started covering it. So my report work is going on. But yes, prima facie, I find this IPO to be good enough to invest the money in. But there is one point. There are various IPOs which are coming in right now. because tomorrow only we are having 2 or 3 IPOs opening, I suppose. So now one really need to allocate their money because there are various good IPOs also which are coming. So now idea here is in all, total 5 IPOs will be opening in this week itself. So first choice will be Vishal Mega Mart. Sorry, I'm deviating the stock towards the other IPO. But now coming on the MobiVic, even we are giving a subscribe rating to this IPO also. But if anyone is a limited fund, then Vishal Mega Mart is our first choice, followed by Indian Gemological Institute, which will be opening on 12th or 13th of this month. And then Inventurous Knowledge, and fourth number or fourth rating we will be giving to MobiVic. Now talking about this counter, the fundamentals, I think the financial performance is pretty good. Why? Because they have shown operating profit positive. I mean, the operating profit itself signals that it is a positive on the EBITDA front and bottom line in FY24. And they have a very strong users, and they, without spending much on the marketing, in fact, they are able to garner such kind of profitability. In fact, if I compare it to 197 Communication, that is Paytm, then their price to book value ratios also seems to be reasonable. So MobiVic is a subscribe from our side, but just for the additional knowledge, since 4 or 5 IPOs are opening, first rating should be given to Vishal Mega Mart, followed by Indian Gemological Institute, third one is Inventurous Knowledge, and fourth is MobiVic, followed by Sai Life Sciences at the fifth position.
Thanks, Asta, for that view on all the IPOs as well as MobiQuick as well. Definitely, IPO heavy week, and expect that we will be just talking to you more on these IPOs going forward as well. But let's take in a query. We have another call coming in from Chennai from Shankar. Now he has. I just wanted to take a chance to speak to the caller as well. So, Shankar, what is your query and how can he help you?
Very good morning.
Good morning.
I have 755 shares, Motherson Sumi. That means Samvardhan Sumi. The rate of 202 rupees.
Got it.
I am ready to wait minimum 3 years.
Got it.
What is the outlook for the technical outlook for the share? Short term, medium term, long term.
Okay.
Thank you, sir. I listen from TV.
Got that, Shankar. Got that. So I'll just take both, our guest view. Let me start with the technical view first on Samavardhan Motherson from Swati. Any kind of view that you have on this auto ancillary company?
Yes, my view is a little bit cautious at the current level because I am saying that from the last few trading sessions, the stock was witnessing a very strong resistance nearby 215 and so levels. Now, if you look towards the longer term horizon degree, the stock has given the breakout of a upward sloping trend line, which gives some sort of a cautious sign. Downside, it may come down up to 145, 140 level. Up to that level, we might witness some selling pressure. Then we can see some reversal from that level. As of now, my view is cautious, not to create any long position. If you're having for longer term horizon, definitely you can hold on. A pullback rally can be witnessed up to the 200 levels. So for a medium term purpose, my view is cautious. For long term, definitely you can hold on your counter for a target of 200 and so levels.
Astha, do you also have a fundamental view on this? Because we have seen some problems in the export market, and all auto ancillary companies who have a lot of exposure in Europe and USA are seeing some pressure. Any kind of fundamental view that you have on Samvardhan Motherson?
Yes, there are some issues, but what we believe that due to the premiumization as well as EV transition, they can perform their global, peers. They can outperform their global peers. So first of all, that although their results were quite muted of Q2 FY25, but now as management has also guided that H2 is always better due to the seasonality also in the business. So we are expecting H2 FY25 to be a better, half year for this company. And on that basis, maybe the financial performance can pick up because they have an order backlog also. So we are believing that this counter has a potential to move upwards, provided everything goes well for this company. So one can take a chance and remain invested in this counter. Initial price target can be set at around 185 to 190. But if the results come in favor, then definitely this counter has a potential to move till the level of 200 and beyond that also.
All right. I hope that answers your query, Shankar. We have our next caller. Sandeep from Hyderabad is calling us. Thanks for calling in, Sandeep. How can we help you?
Ma'am, I'm holding 80 shares of Cochin Shipyard at 1707.
Okay.
I can hold it for next 3 months.
Okay.
So my just wanted to check. My target was around 1950 or 2008 because it has already fallen to a level of 50%.
Right.
Just wanted to check what could be the view of.
All right. I'll quickly go to Swati. Swati, 1950, is that target achievable in the next 3 months?
That targets will be achieved, but it will take a long time. As such, I can suggest you within a span of 1 month also it may achieve, but it's depend upon the volume game and the price momentum game as of now. Because over a period of a 4-5 trading session only, we have seen a very strong rally from 1300 to almost 1750 levels. Now the stock is under the formation of the flag pattern, which indicates that it's forming the body of that flag pattern, which indicates that the stock is under the consolidation phase. Downside, it has a very crucial support nearby 1600, and upside it has been stuck within a range of 1600 to 1740. So as long as it stays between that range, will not get some clear indication on the technical front. Any move above 1730, 1740, definitely we are likely to witness the positive momentums towards to at least maximum 2000 level within a very short span of time. So as of now, view is definitely positive. It will take a time to give the breakout. As of now, I will suggest to hold on this particular counter by maintaining a strict stop loss of 1600 for a target of 2000 levels.
Taking your view, Swati, thanks for that. So let's move on to our next query. We're getting this on credit axis, Gramin. Now, this query we're getting in from Ahmedabad from Mr. K.J.K. Chaudhary. He has roughly 200 shares holding at roughly about 1275 rupees per share. We have seen some steep correction from those levels. In the past year also, it's down 45%. Let me get in Astha for a quick view. Astha, what's your view on the stock? It has seen some pressure in its Q2 results as well. What's your outlook on credit access Grameen right now?
So the outlook is a bit cautious. Now, why I tell you? Because first of all, the management itself has reduced their guidance. And we have seen the stress in their MFI portfolio, and that is really affecting the credit growth, also the quality of credit growth. So I think this will be a phenomena which can continue till 3 or 4 months. So idea here is bit cautious for at least coming quarter. But if the longer term is there, I mean, if the time horizon is for more than 6 or 9 months, then one can remain invested in this counter, because over the longer period of time, maybe this counter has a potential to move upwards, and the cost price of around 1200 can also be seen. But the time horizon should be purely long term, that is more than 9 months.
In fact, Nomura had also downgraded the stock, and the stock did see a lot of beating, and they had given a target price of 950, and the stock is right now hovering below that levels as well. So I think the stock is seeing pressure since the past few days. But it's time for a quick break. Astha and Swati, don't go anywhere, and viewers also don't go anywhere. We'll be right back and answering all your queries on the other side.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes by.
Welcome back to Ask Profit. Viewers, if you're just joining us, you can send us your queries on the number flashing on your screen, or also can call us for your queries as well. Let's move on. We're getting a next caller. This is Shweta joining us from Hyderabad. Hi Shweta, what is your query?
Hi, good morning.
Good morning.
My query is regarding Texmaco Rail. I bought 362 shares at 277 apiece.
Right. And what is
my
your
time horizon is
Yeah.
3 to 6 months. I would like to, exit. It means if I want to exit, then at what levels, till what levels can I wait and exit?
Got it. Let me get in Swati for a view on, Texmaco. The price that she's bought it at is rupees 277. What is your view for the next 3 to 6 months, Swati?
My view is definitely positive, but Shweta has bought it at elevated levels as such. The stock is under the formation of the W pattern, and it is on the verge of trailing that CD leg of that particular pattern. I believe it has maintained the very strong support at around 190 and so level, and showing a positive divergence on the charts as well. So any move above 230 levels on the closing basis will extend the rally up to the 270 to 280 levels. So my view is positive. No need to sell off at the current market price. You can hold on this particular counter. Very soon we will get a breakout of 230 levels on the closing basis, and then we can see the extension of this pullback rally towards to 270. So it's a hold from my end.
Right, the next query is from NS Rao, who's from Hyderabad. He's writing in to know about IRFC. I don't think he holds any IRFC shares, but he wants to know that he's saying that IRFC is on an up move, and is this the right time to enter or not? Asa, I'll take a funda view on this. Is this the right time to enter?
So we are positive on the IRFC. So yes, it is on the up move. So one can definitely make a exposure in this counter, but slightly at a lower level of around 150 or 148 also. So one can enter into this counter because we believe that upcoming results will also be very favorable for this counter. And we all know that now the government capex, which is long pending, if it starts in H2 of FY25, then definitely the railway companies will get a boost, and in turn IRFC will also show a positive momentum in the financials. So all in all, one can make an entry into this counter, but slightly at a lower level with a price target of 180 at the initial juncture.
Well, price target of 180 on this particular stock, IRFC, coming in from Astha. The next query that we're getting is on Godavari Power. Now, Monica is writing us from Raipur. She has bought at a price of roughly about 188 rupees per share. She's bought roughly 124 shares, and she just wants to know whether she should hold or sell. While she did not mention a time frame, let me get in Swati first on this particular stock. It has seen a very good run over the last 6 months, up almost 48%. What's your view, Swati, going forward on Godavari Power? Any kind of view that you have on the same?
No, my view is positive that the way the stock has shown a rally is really very admirable, and we have seen a very fresh breakouts with a very decent volume. The counter is trading at 230 levels. It's above the support levels. Downside, it has a very crucial support at around 210. So as long as this particular counter holds the support levels, I believe we are likely to see the extension of this pullback rally towards to at least 270 or 280 levels. So you can definitely hold on, or even you can take the long positions at the current market price by keeping a stop loss of 210 for a target of 270 and about at 300 levels can be seen.
All right, so it's a hold for Godavari Power from Swati. We have our next caller. Ram Rajan is calling from West Bengal. Hi, thanks for calling in, Ram. How can we help you? Hi, Ram, can you hear me? Okay.
Hello.
Yeah, Ram, can you hear me? Okay, I think we've lost the feed for Ram. I'll take the next WhatsApp query then. Sushila from Bellary is writing to us about knowing about Morpin Lab shares, and she's bought it at 84 a piece and she's holding around 167 of them, and she wants to know the targets going forward. Sadi, I'll come to you for this one. What should be the target and stop loss for this particular counter? Let's say if 1 year is the time horizon.
The stock is really looks positive on the technical front, whether we check it on the weekly or the daily or the monthly charts. The counter is doing a very well. This month itself, we have seen a return of almost 8%. As of now, this particular stock is trading in the pattern of the high top side bottom formations in the upward rising channel. I believe it has on a short-term period, it has a very cluster resistance nearby 92 levels. From the last 3 months, we are witnessing that it's not able to bridge that resistance level. Once it manages to give the breakout of level, definitely we are likely to witness a new trend on the higher side, which may take a counter to the 3-digit 120 to 130 levels can be seen. So if you're looking for a longer term horizon, at least minimum 6 to 1 month to 1 year, then definitely you can hold on downside. It has a good support of 78 rupees. So by maintaining that stop loss, you can hold only your long positions.
Well, got that view, Swati. Now we're getting a very interesting query now on Reliance Industries. We're getting this as an international request coming from USA. They've held the stock from 1985. They're holding roughly a very high quantity as well, 6,000 shares at rupees 4.80 rupees per share, sitting on very, very handsome profits. Let me get an Astha first. Astha, your view on Reliance Industries, definitely a very big profit that the investor is sitting on. What's your view on the same?
The view is definitely positive, but first of all, would like to congratulate the investor for such a good investment. So this itself portrays that if you invest for a longer term horizon, the kind of wealth making it may do in the portfolios. Now, talking about the Reliance Industries fundamental seems to be okay. Although the Q2 of FY25 was a mixed set of bag, but we believe that due to the recent tariff hike, I think their geo will perform good, and on the back of good festive demand, the retail segment will perform in a more better way in the upcoming results, which can be seen. So all in all, for the Q3 of FY25, we are more positive result-wise and recommend a hold on this counter with a price target of 1500.
All right. I think the kind of patience that you require to hold the stock since 1985, it's really commendable, Mukesh. So congratulations for that. We have our next caller, Pankaj Chaurasia, is calling in from Kolkata. Hi, Pankaj. Thanks for calling in. How can we help you?
Hi. Good morning, everyone.
Good morning.
I have a share of KNR Construction, and I bought it at a rate of 335.
Okay.
So should I hold or sell?
Okay, what's the time horizon that you're looking for? Sorry?
I can hold it for next 1.5 years.
1.5 years, okay. And is there any rationale behind buying KNR Construction specifically?
It has a very good Q2 result, that's why I bought it.
Okay. Okay, Asa, I'll come to you for this one. Your view on KNR Construction?
So for KNR Construction, the view is positive. First of all, I would like to give the price target, which can be set at more around 550 to 580 odd levels. Talking about this counter, it is a leading EPC player, as we all know, and they have a strong order book. If I take their order book, it is more than 5,000 crore, I believe. So, and it is 1.4x of revenue. So the order to bill ratio is also very decent, and we believe that this counter, although they have not performed strongly in their Q2 results, but upcoming results can be good because H2 of FY25 will be positive for all the infra companies. This is what we believe. So yes, one can remain invested in the counter. Price target can be set at the initial level at around 350 to 380.
All right. We have our next query that is on Cummins India. Senthil from Chennai is writing in to know as to what should be the status for Cummins India going forward. Swati, I'll come to you for this one. How does it look on charts?
Chart really looks very promising. The stock is under the construction of the inverse head and shoulder formations, and it's on the verge of forming the right shoulder. It's very technical term as such I can say, but definitely the view is positive in this particular counter. 3580, 3590 is the breakout level, the neckline of the pattern. I believe that the rally can be seen on higher side up to at least 3800 and then 3900 levels on the higher side. So you can definitely hold on. Downside, it has a very crucial support of 3400 levels provided by its 20 days moving average as well. So by keeping that stop loss, you can definitely hold on long positions for immediate target of 3800 rupees.
Got that view, Swati. Now, the next query that we have is on Jayaprakash Power. Now, the investor has bought roughly 5,000 shares at 18.26 rupees per share, very close to the current trading levels. They want a view on the long term. So let me get an Astha for a quick view on Jayaprakash Power. Astha, what's your view?
So long-term view is really positive on this counter because power space is really looking good to us. Now, talking about this counter in particular, the reason behind their muted performance was the poor Q2 of FY25 results, because there was a degrowth in the bottom line of around 25%, we believe. And that is why we have seen not very strong momentum in these stock prices. But going ahead, as I've already discussed in the previous query, that now the power space is in the great demand. So definitely this company will really get the help from the industry tailwinds, and that's why maybe the results can be expected on the positive side. So remain invested in the counter, no need to worry. I think this counter has a potential to move till the level of 20 to 21 rupees.
Right, that's the view coming in on JB Power. Anish from coaching is calling us and he wants a view on Reliance. Anish, we've already answered your query on Reliance. Astha has already answered it. So I hope we've addressed your query already. Moving on to the next question, Nimesh Shah is writing in from New Jersey, USA. We've got a lot of international viewers today, and he's bought 100 SRF shares at 2,300 from a medium term perspective, but he wants to know the fundamental outlook for the share. He's saying that the share price has remained range bound, and this is despite of the capex investment that the company is doing. So I mean, Asa, he's already analyzed the company quite a bit. So I think he's put in a lot of thought process before investing into SRF. But what's your view on this counter?
So there is one major reason behind the range bound or the muted performance and the stock price momentum, and that is the weak quarterly results which this company has posted in the Q2 of FY25. Especially their chemical business is not able to garner that much of positivity, and that is why we have seen the stock not performing so strongly. But going ahead now, this company has a strong capex plan of around 160 to 180 billion over next few years. So I think on the basis of these capex plan which this company is going for, the financial performance can see a jump or can see a push back. So I think that is why we can say that in the longer term this stock can perform, and hence one can hold this counter. Initial price target can be set at around 2550 to 2600 odd levels.
Got that Astha. Let me quickly just take in a quick WhatsApp query first before we get to our next caller. We're getting in a query on Exide Industries on the battery maker from Amir Ali. He's holding roughly 20 shares, incurring a loss of 10%. While the buy price hasn't been mentioned, he has a 1-year time horizon going forward. Astha, what is your view currently on Exide Industries, as well as anything you can add on Amar Raja as well? Both of them have been doing very well over the past year, but there's been some recent pressure in the Q2 results as well due to higher raw material cost. What's your view, Astha, on both these battery makers?
Yes, results were in the pressure, but their order book is very robust. So this is one of the major attraction point of this company is their order book, and on that basis we expect the coming, because order book always gives the strong revenue visibility, and that is where we are expecting the decent financial performance from this counter in their coming results. Recommending a hold on this counter with a price target of around 510 to 515.
That's the view coming in on Exide, so it's a hold from Astha. We have our next caller. Jagannath is calling in from Maharashtra. Jagannath, hi, thanks for calling in. How can we help you?
सर मैंने हिंदुस्तान कंपोजिट के सितंबर में लिए थे 616 से 90 से आपला 49 शेयर्स है सर. अभी होल्ड करना है या सर लॉस में है सर अभी 7%।
अच्छा, और अभी कितने टाइम तक आप होल्ड करना चाहते हो? और
सर मुझे 5% प्रॉफिट ये है सर।
5% प्रॉफिट बनाना है?
हाँ
ठीक है। स्वाति, आई विल कम टू यू फॉर दिस वन। डू यू थिंक हिंदुस्तान कॉम्पोजिट लुक्स गुड ऑन द चार्ट एंड 5% प्रॉफिट बना सकते हैं क्या जगन्नाथ जी?
जगन्नाथ जी का नो वंडर हाँ थोड़ा बाइंग हायर लेवल्स पे हुआ है। आज ये पर्टिकुलर काउंटर हम देख रहे हैं कि ऑलमोस्ट 20% अपसाइड है। जिस हिसाब से वॉल्यूम के साथ आज प्राइस मोमेंटम हुआ है काफी स्ट्रांग है। इसने एक इनवर्स हेड एंड शोल्डर पैटर्न का फॉर्मेशन का ब्रेकआउट दिया है। मुझे लगता है कि ये रैली कंटिन्यूड हो सकती है 620 उसके बाद 640 के लेवल्स होते हैं। तो मैं रिक्वेस्ट करूंगी जगन्नाथ जी को आप अपने लॉन्ग पोजिशन होल्ड कर सकते हो। 620-630 के आसपास आते हो तो आप अपने प्रॉफिट्स बुक कर सकते हो।
Profit book कर सकता है Hindustan Composite पे is the view coming in from Swati. Let me go to the next query is coming in on Paradeep Phosphate. Now this stock has been bought by the investor Mr. Subramaniam. He's calling us from Chennai. He's bought it at roughly about 89.7 rupees per share. He's holding roughly 30 shares. Let me get in a view from Astha first on this because he's asking whether he should hold or accumulate more. So looking to add further on any kind of correction. Astha, what's your view currently on Paradeep Phosphate and what should an investor do going forward?
So here the accumulation can be done at the lower level. First of all, I mean he's making good profit as of now because the cost price is 87 as far as I remember, and the stock is quoting at around 110. So congratulations on that investment. But for the accumulation, what we believe that if the stock falls to the level of 100 or so, then it is a better level to enter into this counter. Talking about the fundamental seems to be quite average for this counter, but going ahead, we can see a rise in their margins, which can help the company to post strong numbers. So for the longer term, it's a hold from our side, but for the accumulation, wait for some more dip to come and then make entry into this counter. However, price target can be set at around 125 to 130 at the initial levels.
Well, that's the view from Astha. 125 is the target that she's looking at for Paradeep Phosphate. We have a next caller coming in, from Kochi, and his name is Ravindra. Ravindra, what's your query?
Yeah, I have got KROSS Cross shares through IPO at 248 rupees.
Okay, and what
shall I hold for further some time?
And what is your time horizon, Ravindra, on this?
3 to 6 months.
3 to 6 months. Okay, let me get in Swati very quickly on Cross Limited. It's a very recent listing, Swati, but there has been very wild price movements on the stock in such a short time frame as well. What is your view coming in on Cross Limited?
In my view, whatever the data I have it as of now, my view is a little bit cautious since the counter is trading nearby the resistance level. Whenever the stock has listed, we have seen a very sharp corrections, and we have seen that it has formed the bottom at around 150 and 160 levels. So V-shaped recovery has been witnessed in this particular stock. Now the very strong resistance is around 250 to 260 levels. As long as it doesn't give the breakout of that level, my view is will be bit cautious, and we're likely to hit some sort of a profit booking as well, because already the stock has given a very strong rally from 160 to 240 levels. So profit booking cannot be denied at the current market price. So we might see some downfall towards to 220, 250. From there onwards, we might see again pullback rally up to 270 or 280. So not to book your losses, also not to create a fresh positions as well. Wait for the breakouts, then we can take a particular call. But as of now, you can hold on this particular buying call by maintaining a stop loss of 220 levels.
Right, wait for the breakouts to enter for Cross Limited is the view from Swati. We have our next viewer who's Karthik from Telangana. He's bought around 70 shares of Infosys at 1860. Let's pull up Infosys and see at what price it is trading at. He wants to know whether he should add more stocks or should I sell once it reaches the price target of 2000. He's sitting on a profit of roughly 6,500 odd rupees. Asa, I'll come to you for this one. Should he continue to keep holding Infosys going forward, considering how the IT space is performing?
I think he should continue holding this counter, and I think if the number comes on the positive side for the Q3, then definitely we can see the price targets of more than 2000. So I think there is no need to, book profit at the current juncture because it is a good long-term story. Now, talking about the fundamental, Q2 FY25 results were very good, and especially now we have started seeing a positive performances from these segments like retail, etc. So that will be beneficial to the company in the coming quarters also. My idea here is to remain invested in the counter. Price target can be set at above 2000 level. So there is no need to book profit at this point of time.
Got that view, Asta. The next query on WhatsApp that we're getting is on Titan. Now, we're getting this query from Ms. Reshma Bhatia. She's holding roughly 40 Titan shares and currently is at 15% profit. She's not mentioned a buy price, but she is a short-term investor. Let me get in Swati on a quick view on Titan. What's your current outlook in the short term? Because she is, looking at some good profits of 15%, but has seen some correction from, because of increased competition from other players like Kalyan. What's your outlook, Swati, on Titan going forward?
My outlook is definitely positive. We are likely to witness more uptick for almost 100 points from here onwards. Currently, the counter is trading at 3500 levels. If you look towards the past history, the stock has shown a very strong correction, and after that, we are witnessing this kind of a pullback rally. The overall trend on a positive side is intact. You can hold on your long positions, but if possible, try to keep up profit stop loss of it around 3450 levels. By keeping that stop loss, you can carry your long positions for immediate target of 3600, and beyond that level, 3800 can be seen very soon.
All right, that's a view coming in on Titan. We have our next caller, Ekam Barai. I hope I'm pronouncing your name correctly. From Hyderabad is calling us. How can we help you?
Hello.
Hello, hi.
Yeah. It's not coming on the TV, this separate?
It's coming on the TV, sir.
No, I'm not. There's a time lag.
Yeah, there might be a time lag, but you can ask your query and then you can listen in your query.
Okay.
Sure.
Hello?
Hi, I can hear you, Mr. Yeah.
Okay. See, I'm holding IRFC about 250 shares.
Okay.
At the rate of 167.
Okay.
So, should I average at this stage?
Okay. What's the time horizon that you're looking for?
I'm looking for another 6 months.
Another 6 months. And when did you buy this?
This is 1 year back.
1 year back. Okay, Swati, I'll come to you for this one. IRFC for the next 6 months?
I know my view is a bit cautious as of now. No wonder we have seen a strong pullback rally from 133 to 160. But 160, 165 is acting as a very cluster resistance zone, and it's not able to give the breakout of same level from the last 3 months, which indicates some sort of a cautious sign on the technical front. If you're looking for average it out, I will suggest wait for any dips towards to 140 to 135 levels. That is a very strong support level we are witnessing from the last few trading sessions. So that level will be a very good levels to take your average route positions, not at the current market price. If you're getting any breakouts of 160, 165 level, then we can witness the resumption of the uptrend towards to 200 levels. So wait for a time being, let the stock settle down at the 135 to 140 levels, and you can definitely take a average route position.
Well, wait for the timing is the query, is the outlook coming in on IRFC. Let's take the next query now on GMR Airports. We're getting this query from Bhaskar. In his view, he's currently mentioned that he can hold the stocks for the next 3 years. Let me get a fundamental view first from Asta. Asta, the company is very interesting one. Airports, not a lot of listed peers. What's your outlook on GMR Airports? It's seen roughly 16-17% returns in the past year. What does the future outlook look like for the company?
So future outlook is looking positive for this company, and that's why we are recommending a hold on this counter with a price target of 95 at the initial level. Now talking about this counter, I think the new tariff order at the Delhi airport, and I think that will be really, helping this company in showing the good numbers. And we are also expecting the rise in the traffic. And if there is a rise, because now this season is going on, and definitely there will be a rise in the airport traffic, and air traffic rise will always be beneficial to the companies like GMR Airport. So positive on this counter, recommending a hold with a price target of 95.
All right. The next query is from Rajesh, who's from Bangalore. He's holding Trident 2585 shares bought at 38 rupees. Let's pull up Trident and see what it's trading at currently. And he wants to know what should be the targets going forward. Swati, I'll come to you for this one. How does Trident look on charts? Today it's gaining significantly in trade.
As of now, in 2024, we have seen that the stock has already corrected from almost 55 to 30 levels, and now the stock has given the breakout of that downward sloping trend line. It means we are witnessing some reversal sign at the current levels. This kind of a reversal can be extended up to 45 levels. So I will suggest to hold on your long positions. If possible, try to keep a stop loss of at around 35 so levels, and you can hold your long positions for immediate target of first target will be a 45, and beyond that 50 levels can be seen. So it's a hold from my end.
Well, we're getting a next query coming on a call. Now Vishal is joining us from Bangalore. Vishal, what's your query?
Hi, good morning, everyone. I have shares of Carborundum, about 150 shares bought for 1598 price. Basically, I would like to know what are the long-term views on the shares, and basically at what point I can accumulate more shares, right? Because I was just trying to add some shares at last time. I think it went to like 1340.
Right.
So right now I was just checking it randomly today,
Got it.
and I saw it is like somewhere around 1360, right?
Yeah.
So I'd like to know, what are the views long term, but I'm okay to keep it for another year or so. It's
Understood. Let me get
I bought it on 6th of June, I believe.
Got it. Let me get an Astha, very quick view on Carborundum. Now, as the viewer mentioned, there has been some stock price correction from the price that viewer has bought at roughly about 1600. What's your view on Carborundum for Vishal going forward, Astha?
View is hold with a price target of 1600. Now, talking about this counter, although results were not very positive because they were below estimates in Q2 of FY25, but what was positive is that the management guidance of around 9 to 11% revenue growth. So that was the major positive for this company, and that's why we believe that this company, if they stick on the guidance, definitely the financial performance will improve in the coming quarters. So idea here is to stay invested in the counter with a price target of 1600.
All right, that's the view coming in on Carborundum. The next query is from Monica Reddy, who's from Raipur, Chhattisgarh. She's bought Lemon Tree at 151. She's bought it at 141 rupees and bought 151 shares, and she wants to know what will be the upper side of this stock. Swati, I'll come to you for this one. What could be the targets for Lemon Tree going forward? The company is adding keys left, right, and center. So the outlook is very positive fundamentally, but how does it look on charts?
You have correctly pointed out the overall definitely view is positive if you consider all the fundamental reasons. As of now, upside, we are likely to witness up to the 158 line, which is the previous all-time high. Up to that level, we can see the extension of this rally. Beyond that levels, definitely the door gets open for the 170 or 180 so levels. No wonder the momentum will be slowly and steadily. We will not witness some sort of a steep rally compared to the other stocks. But on a downside, it has a very strong support of 330. So as long as it's maintained that level, my view will remain a bullish for immediate target of 160, and beyond that 180 levels can be seen.
That view, Swati, the next query that we're getting in is on easy trip planners. Now, we're getting this query from Srinivas, and they are holding roughly about close to 7,000 shares, 6,922 shares, averaging at roughly about 18.24 rupees per share. He is looking for, a long-term scope on the stock. Let me get in Swati very quickly. Swati, this counter has seen some correction over the last 6 months, but, the company has also been making waves, of course, in its industry of travel. But they have also announced that they are going into the EV bus manufacturing space, which is a very nascent stage, but, very complicated process as well. What's your view on the stock going forward on Easy Trip, and something that the investor can, look forward to going forward as well?
My view is positive because from the few trading sessions we have witnessed a very strong pullback rally from 14 to 19 level. The stock has given a bonus of 1:1 ratio. After such kind of a news or the momentum, definitely we're likely to witness some sort of a price correction has been seen. Now it's a time correction. We might see the stock might go under the consolidation phase within the range of 16 to 18 levels with the range of a 2 rupees, and then onwards we can see some sort of a reversal once its stocks manages to give the positive closing above 18 or 19 levels, so then we can witness a very strong upside momentum towards 24 to 28 levels. So at the current momentum, you can hold on your long positions. Stock is not correcting much as of now, not showing any sign of a correction. So as long as the stock holds 15 rupees, you can definitely hold on your long positions for a target of 24 and 28 levels.
Hold for easy trip planners from Swati. The next caller is Kamalakar, who's calling from Andhra Pradesh. Thanks for calling in, Kamalakar. How can we help you?
Yeah, thank you. Recently, I bought Bharat Electronics at the rate of 290,
okay,
which is quantity 3,000 units.
Okay.
So, I'm a short-term trader. Where can I book profits? And
okay. So you want a short-term view. Okay, Swati, I'll come to you for this one. BL, how does it look on charts?
Very promising charts on the monthly chart. Why I'm saying that on the monthly chart is forming the flag pattern, which is a very strong formations on the monthly chart. Whenever such kind of a formation takes place on a larger degree, definitely it will give the breakout, but very slowly and steadily. Whenever the consolidation breakout we are likely to get the confirmations on the higher sides. As of now, the stock is stuck within the range of 300 to 320, but I believe once it manages to keep a breakout of that level, definitely the rally likely to be extended towards to at least 360 to 370. So you can hold on your long positions. If possible, try to keep a stop loss of 305 and hold your long positions.
Got that view, Swati. Now, the next query that we're getting in is from, Mr. Sanjay Sisodia from Mumbai. He has been trying to call us, but, our lines are busy. But thanks so much for sending us that message, Sanjay, on your query. Now, we are taking, Jyoti CNC as a stock, looking forward. He's bought roughly about 1,000 shares at 1,120 rupees per share. Let me get in, Astha for a quick view on the stock. What's your outlook? It's seen a very good, price performance as well, led by fundamentals and its Q2 results as well. What's your outlook, Astha, going forward?
It is one of the leading metal cutting computer machines, Jyoti CNC basically. And yes, the financial performance was also very good, from 330 to 1321. What a strong jump we have seen, because this IPO came, I think, in January this year only. So yes, outlook is positive. One can remain invested in the counter for the price target of 1,500 at the initial level.
Next query is from Jaya, and she's writing in from Bangalore. She wants a suggestion whether it's the right time to enter Waaree Energies at current price, and what's your long-term view. So I'll stick with you for this one. Waaree Energies, is this the right time, and what should be the time period and time horizon that she should keep holding it for?
So long-term view is positive. Time period can be 6 months. Remain invested in the counter or make an entry also for the price target of 3,400 at the initial level. So maybe 10% or 15% upside we are seeing as of now. Now talking about this counter, they have got a very strong distribution network. Their name is well-known name in the energy space. And what we are seeing that the results were also very good. In fact, they have such a strong facilities that their facilities are always, they can always change any new technology come, then their facilities are well placed to adopt those things. So I think this Waaree Energies is looking very strong to us. We have recommended it during the IPO time also, and now also we are continuing our recommendation of hold on this counter. Initial price target can be set at around 3,400 to 3,500 audience.
That's the view coming in on Waaree Energies. Now, the next query that we are getting in, is on Ola Electric, coming in from Arjun. He has bought roughly 200 shares, bought at a price of rupees 90. Now, recently we have seen a very strong correction from, the 69-70 rupee levels. He wants a long-term view. Astha, what's your view going ahead on Ola Electric? Lot of triggers coming in, EV bike launch being one of them. What's your outlook on Ola Electric going forward?
Outlook is again positive. Price target can be set at around 100 to 110 rupees. And yes, in fact, whatever customer companies they were getting, they have taken certain steps to resolve that also. And in fact, EV, the new product launches in the EV space is really helping the company in posting good numbers, because this financial performance was also decent, and upcoming financial performance are also expected to be on the better counter. So remain invested in the counter with the price target of 100 to 110.
Senthil from Nellai is writing in and he wants a view on TVS supply chain. Senthil, just one quick update. You're trying to call us on WhatsApp, but it's not possible to patch in WhatsApp. You can call us on the number that will be flashing on your screen in some time if you want to really call us. But taking your query on TVS supply chain, he's holding, he wants to know whether he should keep holding it or sell it. He's bought it at 196 a piece. Swati, I'll come to you for this one.
My view is definitely positive and we are recommending to our clients as well at the current market price. The monthly chart is very strong. The weekly chart is strong. Quarterly, we have seen a very strong breakouts of a downward sloping trend lines. If you look towards the at least 4-5 studies, definitely it's covering all on a positive sides. No wonder we are getting likely to slowly and steady momentum can be seen in this particular stock. My target is I'm looking forward towards at least 200 to 220 levels. So it's a definitely hold on from my end. If you want any kind of a stop loss, 175 acting as a very crucial support level. Keeping that stop loss, you can hold on your long positions. Immediate target 200 and 220 levels can be seen very soon.
We are seeing some visuals of the RBI Governor in his final press meet. He's been at the helm for the last 6 years, and we are looking at the live visuals coming in from the press conference as well, expected to start very, very shortly. While we are also seeing some flashes of the AMFI data for the month of November, seeing decent inflows of the large cap on a month-on-month basis. It has been lower, but flexi cap funds have seen good net inflows of roughly about 5,000 odd crores, continuing its very strong momentum. While sectoral as well as the thematic funds have seen inflows also very strong, but on a month-on-month it has fallen, but 7,000 odd crores very well. NFO inflows have also been doing very well as well in this particular time frame. While the AMFI data does flow in, we are seeing some live visuals coming in from the RBI Governor's press meet as well.
It's his one last press meet. Yeah, so it can be called as his one last dance probably before
Thank you very much
there you go.
for being here at such a short notice. And all of you have been very cooperative, and I think you have been widely reporting on the Reserve Bank and its activities over the last 6 years. So a special thank you once again to you all, and thank you to your to the wider audience for having been so patient and watching some of my, I presume you have been watching the press conferences of the Reserve Bank. I don't propose to make a statement or anything, but I thought it appropriate that I recall the day I joined in the Reserve Bank of India on 12th of December 2018. At 4 p.m. or so that they had held a press conference. So I thought it would be appropriate and fitness of things that when I'm demitting office later today, I also sort of share some thoughts with you. So I'm not presenting a report card, I'm not making any statement, but just sharing a few thoughts. If you recall, in that December 12th, 2018 what I had said before you, I had made about a few points. I had said that it's available in the YouTube even now. I had said that the Reserve Bank is a great institution with a rich legacy. I had also said that I will do everything to uphold the professionalism, core values, credibility and autonomy of the Reserve Bank. I had also said that the officials and the officials and the personnel of Reserve Bank, they have high level of knowledge, quality of knowledge, core competence and professionalism. I had mentioned about the teamwork, the need for that my approach, I'm not saying it was not there earlier, but I had said clearly that my approach would be to work in a spirit of teamwork within the Reserve Bank of India and take everybody along and work as a team. I had also said that decision making in the modern world is very complex in today's dynamic world, and therefore a consultative approach is necessary. A consultative approach adds value and depth to the decisions themselves. I had mentioned about the challenges in the banking sector. I had also mentioned that there are certain, and this I am saying 2018, I had mentioned about the challenges that time, before us with regard to the banking sector. I had also talked about the liquidity issue which needs to be addressed. And finally, I had said that the flexible inflation targeting, the framework of flexible inflation targeting is very important, and there is always a need to, I had highlighted and stressed the importance of maintaining inflation while being mindful of the growth trajectory. These were the exact words. So in the last 6 years, it has been my endeavor to adhere to these principles which I had mentioned when I took over as the RBI Governor. You would be aware that we have adopted we have been holding wide-ranging consultations on many issues. In fact, the consultative approach behind regulation, behind all decisions that we have taken in the last 6 years, the consultative approach is very much evident. In many cases, we hold face-to-face direct meetings with the stakeholders or their associations. In many cases, we release a discussion paper or a draft circular, get the comments of all the stakeholders, and then move forward. In fact, the same approach was followed with regard to the Regulation Review Authority, the RRA 2.0, where we formed the authority was within the Reserve Bank, but we formed a group of experts to advise the regulatory, the Regulation Review Authority within the RBI. So we have followed the consultative approach, and the teamwork in the Reserve Bank was perhaps, in my experience, I can say, I cannot talk about earlier days. It was perhaps, at a very high level. I got excellent cooperation from each and every member of the RBI team. Each of my colleagues, they did their best. During the trying times of COVID, even at the risk of their own safety, their personal health, whenever required, physically they all came for discussions. Only I and the deputy governors, we were coming regularly, and a few senior officers, of course. But I think that was the level of dedication we saw. It was also evident in the quarantine facility, which we set up here. I have talked about it earlier, which lasted, in fact, more than 1 year, 1.5 years or so. And the entire staff and service providers had absolutely no complaint. And they were very happy to remain there and do their jobs while the families were away at home. Now, that is the level of commitment and the teamwork I saw in the Reserve Bank. So I would like to take this opportunity to convey my thanks to all my colleagues in the Reserve Bank. I would also like to place on record the excellent suggestions, the valuable inputs which we have received in our interactions with various stakeholders. I have already tweeted about it, or X'd, as you call it today. We put up a message in the X platform today morning, so I don't want to repeat on that. My personal journey, it's not a personal journey, it's a journey of a governor of the Reserve Bank. I was fortunate to get this opportunity, and I have tried to give my best to the institution, to its policies in the best interest of the economy. Now, what lies ahead? The key issues in the life of a central bank or any institution or organization, it's always a continuing institution. You deal with challenges, but there are always new challenges. There are jobs which you have undertaken. There are tasks which you have done. Some of it is completed. Some of it would be midway. They will be taken forward. So some issues, important issues ahead of us, not only for the Reserve Bank, but I think for the wider economy also, I would like to list out. First, so far as the Reserve Bank is concerned, I think restoring the inflation growth balance is the most important task ahead of the Reserve Bank. And I am sure the team RBI under the leadership of the new governor will take it forward. Second, there's a changing world order. I have talked about it in my last monetary policy statement. The entire global geopolitical dynamics, the geoeconomic dynamics that is undergoing fast change. The world order is also changing. In this situation, it's always necessary to remain alert and agile, and I'm sure the RBI will certainly be at its best. Third, cybersecurity and its associated risks and threats. I think that is a big challenge for every authority, not only in India, but all over the world, and particularly for a central bank. In the last 6 years, and even earlier also, we have given a lot of attention to this issue of cybersecurity and dealing with cyber challenge, the cyber threats and challenges. That is a continuing task because the challenges are continuing, new challenges are emanating, and that will be a continuing challenge for every central bank in the world, including the Reserve Bank of India. Fifth, our focus in the last 6 years has been to capitalize as much as possible on harnessing the benefits of new technology. We set up the RBI Innovation Hub in Bengaluru. We have a continuing regulatory sandbox where many innovative ideas and thoughts have come, and we have always tried to take them forward. We have given our approval to many of the innovative ideas and thoughts and the projects which came in the regulatory sandbox. CBDC is again another area where RBI, among the central banks, is a pioneer. There are very few countries which have, almost every central bank is dealing with, they're talking about, or they're experimenting, or they're discussing about CBDC, but actual launching of a pilot project has been done by very few. And as I see it, CBDC has a huge potential in the coming years, in the future. In fact, it is the future of currency. Similarly, the Unified Lending Interface, ULI, it is a true game changer. And I'm sure its benefits will get harnessed fully in the near future. And there will be a national level, nationwide rollout. And finally, sixth, financial inclusion. We have given a lot of attention. It's again a continuing responsibility. It's a continuing task. You cannot reach a stage of finality in that. The tasks and the works will have to continue. Under UPI, UPI, the unified, the UPI, we have launched many new innovative products under the overarching umbrella of the UPI, and they are producing excellent results. The UPI today has emerged as a global pioneer and as a global leader in payment systems. And ULI, about which I just mentioned, it will be transformational. It will, I think, play a very transformational role in credit delivery to the bottom of the pyramid. The ease of access, the speed, and the simplicity of procedure are the unique characteristics of ULI, and that I would, sitting outside, I would look forward for a nationwide rollout, and I have absolutely no doubt in my mind that the Reserve Bank, with the cooperation of all central government departments and agencies, with the cooperation of the state governments, will do a nationwide rollout. And finally, I would like to take this opportunity to convey my best wishes to the incoming governor, Shri Sanjay Malhotra, a person with wide-ranging, a very wide experience, and I am sure he will do his best. And from my side, all my best wishes to my successor for success as the 26th governor of the Reserve Bank. So I'll stop here. Thank you very much. And we'll take few questions. I don't want to make it a full-fledged press conference. And after that, we will adjourn for the high tea, and we will. So yes, Deepsika, please.
Deepsika from Economic Times. So when you move to RBI, the relationship between North Block and the Mint Street, as we call it, there were concerns about the divide between the two. As you sign off today, how do you see this relationship now, and what has been your experience in dealing with this relationship?
I would like to mention that I have tweeted about it today morning also. I think the coordination between the Finance Ministry and the Reserve Bank of India, I can't talk about the period prior to my coming to Reserve Bank. I'm talking about the 6 years that I have been here. The coordination between the Finance Ministry, the government on one side and the Reserve Bank, I should not say one side and the other side because ultimately everybody belongs to the, we are all working for the nation, for the economy. But the relationship between the government, in the Finance Ministry in particular, and the Reserve Bank of India, I think they have been at their best. We had excellent cooperation, excellent coordination before COVID, during COVID, after COVID, the multiple challenges which we faced when the inflation spiked following the commencement of the war in Ukraine. The government undertook a lot of supply side measures which helped the Reserve Bank to also check inflation. The same level of coordination continues even as I am speaking to you. Thank you. Yes, Lata, please.
Governor Das, thank you very much for an excellent innings of 6 years in RBI and for all the cooperation you have given to us as interlocutors to the economy. My question is, markets tend to have a simplistic view. When anyone comes from the Finance Ministry, they will do the bidding of the government. They'll cut rates. Can you tell the markets what exactly is, the correct position? And secondly, if Mr. Malhotra were to ask you, what is the mantra? Give me one word, or one advice in this new chair that he will occupy. What will you tell him?
No, first thing is I cannot give any mantra to anyone. And what advice I will give to Sanjay Malhotra, should he ask me? And I'm sure there will be opportunity for interaction between Sanjay and me. But what advice I would give him, should he ask, I think you leave it to, that is something between him and I. So I don't want to talk about it. And the first part of the question is, people have their way of looking at things from outside. It's nothing unusual. But when you take a responsibility, any responsibility for that matter, one is what is expected of that responsibility. The equally important aspect is how do you see the impact of your responsibility, and you have to correlate with the outer world. Perspectives of Finance Ministry or the central bank can differ at times. It happens world over. But in my tenure, I think we have been able to resolve all such issues through internal discussions. I would like to state emphatically that when a governor comes, he looks at the wider economy. He looks at things, yes, definitely from the Reserve Bank's perspective and from the point of view of what is the mandate given to Reserve Bank and how he is going to fulfill that mandate. But while fulfilling that mandate, I can say with confidence and certainty in the past, present if I can say till today evening and in the future, the governors keep in mind the requirement of the wider economy also. So it is your responsibility, it is your mandate given to you because you are occupying a particular position, plus the requirements of the wider economy. I think it's a synthesis of both, and eventually it's a judgment call which every governor takes. Thank you. Could you restrict the questions? I don't know where to. Yes, Mayur.
Governor, there's this idea about the Reserve Bank of India that it's there to provide forbearance to the government to prevent them from excesses in maybe spending or whatever. So, do you think this role of central bank has been strengthened now under this MPC framework and with this consultative approach to regulation?
Definitely, certainly, the consultative approach to regulation, the FIT framework, and I think the Bibal Jalan committee, which was actually jointly set up by the government it was the selection of members was jointly done by the government, the finance ministry and the Reserve Bank. It was constituted immediately after I took over in the Reserve Bank. I think many things have got institutionalized, and as the economy grows, the economy is also getting formalized. A lot of informal sector activities today, and rightly so, are getting formalized. Similarly, institution building and aspects of institutions which were perhaps not formalized, they have got formalized. I mean, it's a process. I'm not finding fault with that it was not formalized. I think, for example, the economic capital framework, that has been formalized. The inflation targeting framework has also been formalized by an amendment to the law. So I think formalization of aspects of an institution is adding strength to our economy. Yeah, Ankur.
Governor, congratulations on your A+ inning, which has been not only been recognized by internal stakeholders but externally as well. My question to you is, what is that one thing which you would have thought is unfinished agenda of Mr. Das? And if I can ask one more, what has Mr. Das learned from RBI Governor during your tenure?
Okay, what is unfinished task? I mentioned about it. In the life of any institution, there will always be unfinished tasks. It's not like, today day starts here and it ends here, because there is always a next day. Tomorrow is another day. There's a next morning, there's a new sunrise. So it's a continuing process. So you cannot, in the life of any organization and including a central bank, there will always be things. I don't call them as unfinished tasks, but I always, because unfinished means, as if everything has to be done within a limited period of time. But I think I would like to call them as works in progress. In any institution, there are always works in progress. And second question you ask is? Okay, I think that question, let's leave it for my memoirs. Should I ever write one? Yes. Yeah, please. That's anyone. Okay, I'll come to you.
Sir, what is your plan now? So will you be interested in coming back to public office after RBI in any capacity?
I think let me first, demit office, then I will think about it. Let me enjoy a few, there is no specific plan as of now. And I'll think about it. I'll think about it. Yes, please. Here.
So I'm Falakna Sayyed from Deccan Chronicle newspaper. What would you like to say to your critics, who will say that as you demit office, growth has been sacrificed, monetary policy has remained too tight, and inflation still remains beyond the central bank's mandate?
You see, yes. Please complete, yeah.
And second question is, on a scale of 1 to 10, how would you rate yourself?
Well, rating is for you to do, and I can't reply. But on the first question, I am constrained by the fact that we are still in the silent period after the monetary policy. That was on the 6th. Even if I demit office, I am still bound by the silent period, because that is embedded in the law, in the regulations. So I cannot comment on that much. But having said that, I will just like to mention a couple of sentences. People are entitled to their views outside. Even within the Reserve Bank, there are always multiple views, and within the MPC also there are differing views, which is quite normal. So everybody is entitled to their views. But as I look at it, I think growth is impacted by multiplicity of factors, not just one factor of the repo rate. Growth, high growth or slowing growth are impacted by multiplicity of factors. I think somebody mentioned that looking at it should not be looked at very simplistically. And monetary policy, our effort has been to follow and make the monetary policy as appropriate as possible keeping in mind the prevailing conditions and more importantly the overall outlook, what lies ahead. Beyond that, assessment of our monetary policy is for others to make. But I think within Reserve Bank we are, and within the MPC and within the Reserve Bank, I think we are convinced that what we have done was the best option available and was the best under the circumstances. Beyond that, I cannot and I should not, because I am bound by the silent period of the monetary policy framework requirements. Now there are too many questions, but I think we need to wrap up.
So this is your last, so key wants us to,
Okay, please there behind. No, I have no problem, but your viewers will all get bored. So.
No, sir, not with you, certainly. Sir, my question is on the banking side. You're possibly one of the few RBI governors to see a lot of bank failures in your tenure. When you came in, we had the ILFS crisis at its peak. People were calling it India's Lehman moment and things like that. You thankfully ensured by keeping liquidity high, etc., that it's not India's Lehman moment. We also had Yes Bank crisis. There was PMC, Lakshmi Vilas Bank, and so on. Each of these banks, you've come up with a new solution to take care of the problem. None of the two are similar. But if in 2024 we are to look back and see if any of this could have been tackled differently, what would it be for you? Or even in the larger scheme of things, if you were given a moment to tackle or look at things in a different way, come up with a different solution, would you want to touch upon any of it, sir?
You see, first our endeavor was not to sort of failure of. In fact, I should say, I should not use the word failure, but crisis or stress in any financial. Incidentally, ILFS had happened, I had, a few months before I joined in the Reserve Bank. But the challenges in the various banking and non-banking institutions which you mentioned, our effort was always to see that public money, taxpayers' money is not burdened. Public sector banks are not asked to, not to merge an institution with a public sector bank. We did follow that approach in the case of the Yes Bank, but the contribution made by the banks, led by the State Bank of India, were limited. And it was a kind of a bank-led resolution. So we tried to deal with each situation. You cannot have a standard template of dealing with such stress situations, because the problems in every incidence of bank stress or NBFC stress, the problems vary. So each issue, each entity, you have to deal with it differently depending on the circumstances prevailing there. But every such challenge that we have faced is also a learning experience. And what we learned from that and what we have done is to deepen our supervision. I think the supervision vertical of the Reserve Bank, the supervisory methods and systems of the Reserve Bank have been really, really improved. And I have talked about it at length earlier. The deputy governors also have been talking about it. Today, RBI is, if I can say with confidence, and I think it is something about which all my colleagues and I, we feel very happy about and draw a lot of satisfaction. I think today RBI's supervision is much sharper, than what it was earlier. Our effort is always to identify a potential problem, not allow it to become bigger, and to deal with it, to nip it in the bud, to deal with it in advance in a proactive manner. I think in a monetary policy statement, I had used the phrase saying that we do not wait for the house to catch fire. So I think that is the lesson which we have learned from these experiences. Yes, please.
सर, आपके टेन्योर में हमने बहुत सारी चीज़ें देखी. यूएलआई के बारे में आपने बताया कि आप आप देखना चाहेंगे कब नेशन वाइड रोल आउट होगा. यूपीआई की ग्रोथ देखी, सीबीडीसी देखा. सर, एक ऐसी अचीवमेंट जो आप अपने साथ रखेंगे ये सोचते हुए कि मैंने ये बदलाव लेकर आया, या मेरी टीम ने आरबीआई में ये एक बहुत बड़ा बदलाव इंडियन इकोनॉमी को दिया, सिटीजन्स को दिया, वो एक चीज़ आप किसको पिन पॉइंट करेंगे?
बहुत डिफ़िकल्ट है, मुश्किल है कहना, क्योंकि बहुत सारे काम हम लोगों ने किया है और कोई भी चीज़ मतलब इंडिविजुअल एफर्ट से होता नहीं. जो भी हुआ है वो सब टीम वर्क का रिजल्ट है. इट्स ऑलवेज अ टीम वर्क. और ऐसा कहना मुश्किल है विच इज़ द मतलब कौन सा ऐसा चीज़ है जो कि सबसे मतलब इम्पॉर्टेंट है, क्योंकि और भी इश्यूज़ है तो वो कहना बहुत मुश्किल है. और लेकिन कई सारे इश्यूज़ है एंड we internally we have been discussing about this issue which you are saying. So सबसे ज़्यादा कौन सा महत्वपूर्ण काम है. एक इंस्टीट्यूशन, एक सेंट्रल बैंक के लाइफ में ऐसे बहुत सारे मोमेंट्स आते हैं और बहुत सारे डिसीजंस लिए जाते हैं. आप 1930 ये 90th ईयर ऑफ रिजर्व बैंक, आप 1935 से अभी तक देखिए, अगर आप एनालाइज करेंगे रिजर्व बैंक कैसा इवॉल्व किया है तो कई सारे लैंडमार्क डिसीजंस कई सारे लिए गए हैं. और ये डिसीजन ज़्यादा इम्पोर्टेंट था या ये ज़्यादा इम्पोर्टेंट था कहना बहुत मुश्किल है. इनफैक्ट उस टाइप का एनालिसिस भी हम लोगों को करना नहीं चाहिए, क्योंकि इट्स ए कॉन्स्टेंटली डायनामिक वर्ल्ड. चीज़ें स्थिति बदलते रहते हैं. आई थिंक वी हैव टू पुट अ फाइनल. यस प्लीज हियर.
Thank you, Governor. This is Gopika from Mint. We have a new MPC with your departure. Do you think there needs to be some sort of continuity in the whole MPC framework, MPC functioning, now that we have completely new team of MPC members? And my second question is, also under your tenure, we've seen that RBI taking business restrictions, the cease and desist orders against banks and NBFCs. Do you think this has been institutionalized within RBI? This is the mechanism of putting in these business restrictions, or was it something that you took that step to give orders and for these actions?
It's always a collective decision within the Reserve Bank, and in the last monetary policy MPC meeting statement, also in the MPC statement, I have talked about the same thing. Putting business restriction is always the last resort. We always try to avoid such a situation. We engage with the individual banks or NBFCs for months together. In fact, in one or two cases, it goes even beyond 1 year. And there are quite a few, not many, but there are quite a few institutions which have not come to the public light. But through the process of direct interaction, we have been able to resolve the problems, and the concerned institutions, they responded very quickly. We don't like to unnecessarily prolong those restrictions. Recently, 4 MF microfinance lenders, we put restrictions, and we have withdrawn the restriction in one of them in less than 2 months. That's because we saw immediate compliance and very quick steps were taken. So therefore, we don't like to sort of unnecessarily prolong it. We adopt this restriction as a last resort after months of engagement, when we don't see the desired results. It's the last resort, and we always, our effort is to, even after putting the restriction, our focus is on directly continuing the interaction with the institution, helping them out and facilitating quick implementation or quick resolution corrective steps. And the earlier, as soon as we see the compliances are visible or almost full, the compliances are visible or completed or near, almost completed, we remove the restrictions. Yes, please. Sorry, MPC? No, MPC is an institution. It will continue. I mean that the new members have already participated in 2 meetings. And there is the internal MPC, the Monetary Policy Department of the Reserve Bank, which does all the research and makes presentations. So I don't think it should be an issue at all.
Governor Vishwanath here from NDTV Profit. 2-parter. Firstly, taking away from Gopika's question, fintech companies in private believe that the RBI is way too tough on them. Would you want to give...
RBI is?
Way too tough on them when it comes to compliance and regulation. So anything on that? And second part, you talked about a lot of the teamwork and the legacy of the RBI and all of that. After the 6 years, is there anything you want to change at the RBI?
It's a continuing institution. There is always room for improvement. That will be my answer to the second question. And the first question you said was fintechs. No, well, I would beg to disagree. In fact, in one of the monetary policy statements or in one of my speeches, I have talked about how many meetings we have held with the fintech companies, either in groups or individually. Now a particular day in the month is dedicated, specifically earmarked for fintech companies and innovators to come to RBI and have face-to-face interaction. There is a separate fintech department. And in fact, the feedback that I have got, not because I am governor and they tell me, because in private, when people come to meet me, either in a small group or individually one company, or when they come and meet me, I always encourage them in those meetings to be absolutely and brutally frank and to share their concerns. My sense is that I think almost all of them are very satisfied with RBI. Those who had some concerns or those who thought RBI was acting very tough, when they interact with us and when we explain to them the background of our action or the background of our stance, my experience and our experience in the RBI is that I think almost all of them appreciate why the RBI is doing certain things. And we have tried to improve our communication also to explain the rationale as to why we are doing certain things. Yes, there. I think this is going too far. I think I'll take another 3-4 questions and we must conclude. Yeah, there, yeah.
Morning, sir. Ashok from the Hindu. In the last 6 years, various approaches to controlling inflation have been spoken about. Apart from the inflation targeting framework, and criticisms about the framework have also come about. In your governorship, have you gotten chance to look at different approaches to deal with inflation, apart from just flexible inflation targeting framework?
You see, flexible inflation targeting framework is embedded in the law. It's there in the Reserve Bank of India Act. So, and different approaches to monetary, to inflation control. Supply side measures government has been taking. We have been interacting with the government. From the monetary policy side, whatever action is required, the Reserve Bank has been taking. Ultimately, the result will be an outcome of the supply side measures, the government side measures, as well as the monetary policy measures, the monetary measures taken by the Reserve Bank. So it is a synthesis, the outcome is a synthesis of both. Beyond that, approach will depend on the prevalent situation and the outlook. You cannot really define. And I would like to say that there is nothing like, it's media or the analysts, they term certain things as hawkish, dovish and all that, names of various birds are used. In fact, I think my predecessor had used the word owl, saying that, Reserve Bank, the MPC keeps its eyes always open. But I think these are, nice ways of describing. As far as I understand, I think the effort of all central banks, and very much in the Reserve Bank, is to take the most appropriate measure in the interest of the economy. So that is the overarching approach. I think this is now going too much, I think we'll have to call a halt. Puneet, you have to take charge. So I think some of the questions we can deal with it during the high tea. So if there is any compelling question, you please come forward, otherwise we can deal with it. Yes.
From Mr. Brijesh, he is sitting towards the end.
Okay, right.
Brijesh, you can have
We have to end now. I think we have really overshot.
Brijesh, yeah.
थैंक यू सर. एक सर आपने बहुत अच्छी चीज़ की थी जो ट्रांसपेरेंसी के लिए, कि आपने आरबीआई बोर्ड मीटिंग के मिनट्स पब्लिक करने शुरू किए थे. उससे बहुत सी चीज़ें देखने और समझने का मौका मिलता था. लेकिन सर एक सवाल जो मैंने आपसे पहले भी पूछा था, फिर से एक बार पूछ रहा हूँ, कि जिन कंपनियों के खिलाफ आप एक्शन लेते हैं, रेगुलेटेड एंटिटीज़ के खिलाफ, आप पब्लिक नहीं करते हैं. तो कई बार ऐसा होता है कि उन जानकारियों का चूँकि इंटरनली कहीं ना कहीं होती हैं, उनका मिसयूज़ होता रहा है. तो ये फैसला ऐसा इस पर क्यों स्टिक रहे कि आपने उन चीज़ों को, जो भी रीजन ऑर्डर होते हैं, वो आप पब्लिक नहीं करते हैं? आपने पब्लिक नहीं किया?
नहीं, हम लोग अभी आपने देखा होगा पिछले कई महीनों में हम जो प्रेस नोट इशू करते हैं, जो प्रेस रिलीज इशू करते हैं, उसमें बहुत विस्तृत रूप में हम एक्सप्लेन करते हैं कि क्यों एक्शन लिया गया है. और बाकी जो आप कह रहे हैं कि ऑर्डर क्यों नहीं रिलीज कर रहे हैं, ये स्ट्रिक्टली बिटवीन द रेगुलेटर, सुपरवाइजर एंड द एंटिटी. सो और उसमें कोई भी अगर मटेरियल चीज ऐसा है, देन जो बैंक है या एनबीएफसी है उनके ऊपर निर्भर करता है. अगर वो लिस्टेड कंपनी है तो उनको सेबी के गाइडलाइन के अनुसार उनको स्टॉक एक्सचेंजेस को इन्फॉर्म करना होता है. बाकी जो है प्रोसेस ऑफ इंटरैक्शन, इट इज ए कंटिन्यूइंग इंटरैक्शन. लेकिन हमारा कोशिश अभी पिछले कई महीनों में, उससे पहले भी हमने शुरू किया था कि विस्तृत रूप में हम कारण बताते हैं क्यों एक्शन लिया गया है.
One last question, sir.
Okay.
Doordarshan Shama, she would like to.
Yes.
Hello, sir. Shama from Doordarshan. Sir, since this is the last question, you've always addressed our Indian economy as a bright spot with Mahatma Gandhi quotes and cricket phrases. How would you summarize Indian economy currently? And as the geopolitical tensions are rising, world order is changing, how would you say what lies ahead for India?
I think the Indian economy today is resilient and robust, with the capacity to deal with global spillovers very effectively. We are much better placed today than what it was in an earlier what it was a few years ago. We are much better placed to deal with all such challenges, and the inherent potential of the Indian economy to grow is very much there. And I always remain optimistic about the outlook for the Indian economy. And precisely for that reason, the last monetary policy statement, I again quoted Netaji Subhash Chandra Bose, which I had done earlier: never lose faith in the destiny of India. Thank you very much. Thank you.
Thank you so very much, sir. With this, we close this press conference. I'll request the media friends to assemble outside for an informal discussion.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Hello and welcome to NDTV Profit. You're watching Hot Money. I'm Hiral Dadia and with me is Puneet Javeri. Puneet, good afternoon. Clearly, if you see in terms of markets, a pretty somber day of trade is what you're seeing. You're still seeing Nifty 50, which is hovering around those 24,600 levels. No major uptick or downtick that has been seen so far. Let's pull up Bank Nifty on the screens as well and see what that is doing in trade. And one of the bigger announcements, there you go, to 0.1% higher in terms of Bank Nifty as well. If you see in terms of the sectoral performance, if we can have the sectoral heat map to understand where is the uptick coming in. IT is up around 0.9%. Real estate continues the up move. You have consumer durables, FMCG, metals. If I'm not mistaken, it's the third or the fourth consecutive session of gains on that front. And the PSU banking space, which is seeing some smart moves. On the downtrend, you have energy, which is down around 0.6%. Infra as well as oil and gas that is trading under pressure. Media, auto and pharma are down and about in trade. If you see in terms of the advanced decline ratio as well, on Nifty 50, that's an interesting move. There you go. You have 1,000 advances over 1,100 decline. So pretty much flat on that front as well. And if you see in terms of stocks, Shriram Finance, the top gainer in today's day, followed by a Wipro, Bajaj Finserv, Infosys, as well as a Tata Steel. On the losing end, you have names like Bharti Airtel. In fact, you did see a block deal that happened in terms of Bharti Airtel. In today's session, Grasim, Dr. Reddy's, Trent, and Adani Ports are down in trade. So that's with regards to large caps. Puneet, very quickly in terms of broader markets, what's the trend that you're picking up?
Let's also look at, the mid cap 150 and the small cap 250 as well. We've seen roughly flat moves similar to what's happening in the Nifty as well. And quickly, let's also look at, similar to in small cap 250. And let's look at the winners and the losers in the Nifty 500 as well, because we're seeing some very interesting moves coming in. A lot of players today on the upside. We are seeing 12% move on Raymond, another 10% move on Varroc. Now Varroc is very interesting. They've released their presentation and they've increased their guidance as well for new business orders. That's what triggering the stock on the upside. We're seeing some positive moves on Clean Science again, while on the negative side we are seeing some downward movements on HEG. Now HEG has run up very spectacularly because of what's happening in China and the restrictions on exports to the USA, while CAT is also seeing some 3.9% fall after a really strong session yesterday, upwards of 11% on the new acquisition that the company has made. But we are discussing a lot of key themes here today in session. The first one's of course India Inc. on fundraise, but what are the other ones that we are going to discuss today?
Right, so let's look at the key themes. One, as Puneet mentioned, you're talking about India Inc. That will be in focus on the back of the fundraise spree that we are going on. Order wins continue as well on number 2. On number 3, you have CDMO and renewable energy contracts that have been tied up with companies. So that's a segment that we are watching out for. Acquisitions are absolutely hot in the pharma sector today. So Metropolis and Suven are in focus. Plus you have NSE, BSE that is in focus on the back of the impact of SEBI curbs on F&O trading. Insurance data is out for the month of November and the private companies continue to outperform. LIC is a downer and you have the key brokerages of the day. But to start off with, in terms of fundraising, 3 stocks that we are watching out for. One is Bharat Forge, followed by PG Electroplast as well. And in terms of Bharat Forge, Puneet, what are the details that you're picking up?
Yes, definitely. It's a very big, announcement on the QIP side that the company has done now. They're raising roughly about 1,600. They've successfully closed the QIP, raising roughly 1,650 crores. In this particular tranche at roughly about 1,320 rupees per share. So of course it's positive from that standpoint. The key reasons that the company has mentioned is they are repaying roughly 1,000 crores of long-term debt, as well as looking to the proposed acquisition of another company called American Axle India that they announced back in October of 2024. So they'll be using roughly 549 crores for that as well. What's interesting is that the company's current debt is at a very manageable level of about 2,500 odd crores. So they're reducing the debt substantially, while this will lead to interest cost savings, which will be visible in FY26 as well. Apart from that, they also have a very strong cash balance of about 3,000 odd crores. So it'll be interesting to see if they are looking and open to acquisitions as well going forward, something that's not strange for the company in the past. And just finally on the new entity, the American Axle India, they have mentioned it's axles for light, medium as well as heavy commercial vehicles, and this acquisition will give them 2 additional manufacturing facilities in Pune as well as Chennai as well. So overall it's very positive on that. Just a quick word on PG Electroplast as well. They've raised roughly 1,500 crores via this new tranche of QIP. They have closed their QIP at roughly about 699, so very close to 700 rupees per share. And it's been a very strong QIP in this sense. And yesterday we just had a very interesting note by Equirus as well. They have initiated coverage on the stock. They have a higher target price of about 980 rupees per share. So definitely a lot of upside from these levels as well. And what they mentioned is that the EMS space as a whole is expected to grow roughly about 35% CAGR over the next 3 to 4 years, and they see someone like a PG Electroplast being one of the key beneficiaries. They also mentioned that the low margin plastic from 70 to 25% now, and they're increasing their allocation to higher segments such as ACs as well as washing machines. So overall, we have seen a decent move. By, if you can show the 6-month and the 1-year chart for PG Electroplast as well, you'll see the very strong move that the company has seen. I'm guessing it's over 200% Hiral that the share price has seen. But it's a theme of, like, there you go, 193% share price movement in the last 6 months itself. But it's been a very interesting time in the market for all the capital raises that have happened via QIP.
Absolutely. In fact, there is NHPC as well, who's considering a 2,600 crore fundraise, and this will be via bonds. Apart from that, you have a Torrent Power as well, and they've successfully completed a QIP worth around 3,500 odd crores, and the demand for it was almost around 5 times. So these are a few of the names that we've been watching out for. In fact, let's welcome in Lancelot Dicuna, CIO at ValueX Wealth Connect LLP. Lancelot, good afternoon and welcome to the show. We have been talking a few of the companies in terms of the fundraise. You have Bharat Forge, NHPC, Torrent Power, PG Electroplast. How are you looking at all of these?
I think, since markets have been good, most of the companies are looking this as an opportunity to raise funds from equity. And some of it can be utilized, if it's utilized well and productively, I think it becomes very advantageous for the companies, because especially those companies which are in a growth mode, this equity can help them in terms of being able to leverage when they require it further. And a lot of them can put this money to use, like Bharat Forge is looking at acquisitions, and they will probably spend about 550 crores in this acquisition, and that should be sufficient for them to sort of take their plans forward. So I think it's a positive feeling that yes, it is positive for the company since they're able to raise capital. That gives them an opportunity, especially those companies that are in a growth phase or growth mode.
Got that answer out. We'll also look at some of the other themes that we discussed at the start of the show. We are looking at a lot of order wins that a lot of companies have announced. GE Vernova, BEL as well as RailTel. Let me get in we have seen a very strong guidance as well of these particular companies as well. But let me get in Anushi on all these order wins. Anushi, what are you picking up on these orders?
Hey Puneet, so these order wins that we are looking at continue. Even yesterday there were a couple of order wins and today also they are in focus. I'll start off with GE Vernova T&D first. The company has received an order worth about 400 crore from Sterlite Power. This is order for supply and supervision of 765 kilowatt of power transformations and reactors, along with order for Kavdas for 2 years. Now BEL is in focus after it has received an order worth about 634 crore. Now major orders in this include maintenance of Akash missile system, telescopic sites for guns, communication equipment and more. With this, the accumulated orders a total about 8,828 crore. BEL has also been in focus in the past on their recent order wins, wherein they had secured a 500 crore in order win recently. Other than that, RailTel Corp, we are seeing a smaller order win from this counter. About 24.5 crore work order received from Haryana State Electronics, and this is for the Development Corporation for CAMC. But the order execution period for this is a longer one. It's the order will be executed by December 29. So we are looking at a 4-year period, 5-year period in fact for this. So these are the 3 couple of order wins that should be in focus today.
Thanks for that, Anushi. Let me go to our guest, Lancelot. Tell us, any of these companies, RailTel, GE T&D, we've seen very strong moves as well as BEL also back in focus. What's your view on any of these companies that you might have, for the next few months as well?
So I think these companies are in a growth mode, and I think BEL is in a long-term bull market in terms of growth, because the defense story is yet to play out completely, and we will see significant growth in many of the defense companies over the next 3 to 5 years. BEL has a unique position that it is focused in high technology areas, which are basically with signaling and radars and the various areas that they are involved in, and that can give them significantly higher profits. There's also an export market being developed in the in the defense space. So people are looking at being able to export part of these technology to different countries, and that would keep sustain the growth irrespective of domestic orders. So I think from a growth perspective, BAL is probably poised to look at significant growth. The question then comes out as to whether at this point in time valuations are reasonable, or whether they are a bit on the higher side. Given that this the rise in the prices have been significant over the last 12 months, it's probably the stock has almost doubled from its 12-month in the last 12 months. There can be a case made out that it's going to be in a period of consolidation, so that earnings will take maybe the next 12 to 24 months to grow and then bring the multiples down. Thereafter, you would see significant growth, in the stock price thereafter. So I think this is a period when one should accumulate this stock at every low and build into position, keeping in mind the long-term, growth story in this sector as well as in the company.
Right, so accumulate a BEL and the stock has nearly doubled in the last 1 year as well. But stay with us, Lancelot. We'll quickly slip into a short break and discuss the other themes that are absolutely buzzing in trade today. We'll be right back.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your.
Welcome back. You're watching Hot Money. But moving on, we've seen contracts and tie-ups that are happening across categories, out of which you have a Bajaj Healthcare that is in focus today, and they've entered into a CDMO contract, and this is for 15 new APIs. Now, the new CDMO pipeline is a mix as well. Clearly, if you see in terms of Bajaj Health, the stock is pretty much flat. However, DCF Shriram is up 11%, and this is on the back of the agreement with JSW Renew Energy. And this is a pact for setting up of wind solar hybrid renewable power project with an investment of up to around 60 crores. Overall, with both these counters, two separate sectors, Lancelot, what's your view?
Well, Hiral, I think the healthcare sector is more in favor, at this point in time, considering that one has to look at, over the next 3 to 4 years how this theme will play out. And I believe that you are seeing, definite moves, especially in the contract, manufacturing space, which is where Bajaj Health is there. You have Syngene, then you have, Divi's Labs. These are the people who are major players in this space. And I think you also must have had news that, the US has decided that while they will keep, they will not restrict China from from access to biotechnology orders that they may give. It still means that there's a lot more business coming from US and Europe for these companies, and as globally the companies are able to perform and provide a capable platform for their execution, more and more pharma companies will tie up with them, and you will see a lot more business coming in. So long term, yes, it is a good option, and maybe when valuations correct a bit, this is a time to start, adding some of these stocks to the portfolio. The other space in the healthcare spectrum is the hospital space, because we've been looking at the trends over the last 9 months to 12 months, and we're seeing that there is a good amount of traction as far as hospital utilization, as far as new procedures are concerned, and profitability of hospitals. Many of these companies have also embarked on an expansion, some of it which is domestic, and part of it which is overseas. So we have seen recently, there was a news about acquisition in the UK by a leading chain of hospitals. So you are seeing growth coming into this space. Well-managed companies are able to leverage their positions as well as their capabilities across geographies. And one should look at increasing some exposure into this space as well.
Got the view, Lancelot, as well as on healthcare, as well as on hospitals as well. And let's continue with this theme of pharma, because we have seen acquisitions has been one of the key strategies employed by a lot of companies. Let me get in my colleague Varsha to talk about Metropolis and what's the latest update on the same. Varsha?
Yeah, thanks Puneet. So Metropolis has acquired 100% stake in Core Diagnostics at 247 crore. Now 55% of this will be funded by cash consideration and 45% by equity swap. Now Core will become a wholly owned subsidiary, and the transaction is expected to be completed in next 60 days. Now if I were to talk about the valuation, as I said, that equity value assigned to the Core is 246 crore. So this is 2.2x based off FY24 revenue of Core Diagnostics. This will be an EPS accretive from year one itself, that is by FY26. Now let's look at what is the rationale behind this, why Metropolis has acquired this company. One is cross-selling, so there will be wide opportunities to offer non-onco tests to Core Diagnostics clients, and of course cost synergies will be there. And the important highlight here is Core is mainly into oncology segment. So here for Metropolis, the oncology segment contributes almost 4%, which will increase to 10% post this acquisition. This is the highlighting point for the company. And the 70% of Core oncology revenues from high-end tests compared to 40% for Metropolis. So because of this, the margins for Metropolis may go up because of the high specialized tests that the Core Diagnostic has. About Core Diagnostics, it's a leading oncology testing lab player in India, dominant player in super specialty oncology and companion diagnostics. And if you see the diversified mix, so B2C contributes almost 51% for Core, followed by B2B, and the company has almost 22% revenue CAGR over FY22 to 24.
Right, so that's with regards to where Metropolis goes, but you have Suven Pharma, who also announced an acquisition of around 56% stake in US-based NJ Bio. We did speak to the management. Let's listen in.
In terms of revenue, we have disclosed that the company has been growing at a CAGR of about 70% for the last 4 years, and then they will be at 32 million or so this year. We expect them to continue to grow at a higher pace, and hopefully with the acquisition and with the broader capabilities, I think we look for significant value creation. We're not giving any numbers for our next 2 years forecast, but the growth rate that we expect that they have been maintaining should continue in that direction.
Well, that was the management of Suven Pharma. But let me also go back to our guest Lancelot. You did mention about the pharma space as well as what's happening in the hospital space as well. What's your view on Metropolis as well as Suven Pharma, and anything that you can add on the diagnostic space in general, because you've seen the competitive intensity go up very much in this particular space. What's your outlook on both these stocks as well as the diagnostic space in general?
Yes, Puneet, I think there is enhanced competitive intensity in this space, and we are seeing mergers and acquisitions take place. So we saw Dr. Lal Path Labs acquire Suburban Diagnostics in Mumbai. as well as in this thing. We are seeing Metropolis and Suven now, merge and Metropolis take over their core diagnostics. So you are seeing this space actually begin to become more solid in terms of, there were many diagnostic companies, and it is actually getting consolidated, and that consolidation will drive profitability going forward, because the bigger companies will be able to leverage their operating, they'll gain out operating leverage out of the enhanced capacity, and it will become more, solid in terms of being able to sustain earnings growth going forward. So I think this process is a good time to for the companies as well as for investors to look at which are going to be the large dominant players going forward, because there is significant growth in the space, and we are seeing, the long-term outlook for diagnostic companies remain very attractive. So yes, one needs to look at the space and look at the major players and then decide which ones one can accumulate for the long term.
Right, so that's the view coming in with regards to where Metropolis and Suven Life go. But moving on, you have a BSE that is in focus, and this is on the back of the SEBI measures that have been implemented, and this is with regards to curbing, volatility in terms of the F&O segments. Now, overall, if you go to see the kind of impact that has come in is the steps that have in fact been taken is increasing in lot sizes, restricting your weekly expiry contracts, as well as imposing higher transaction charges. Now, the strategy is to implement curbs, and the regulator is implementing them in phases. The final set will be effective April 25. They actually came into effect on the 20th of November 2024 onwards. Now, what is the key impact that we've seen so far? Clearly, if you see in terms of the major impact is that the premium with regards to the turnover has declined on an overall basis. On number two, if you see in terms of the impact, what has happened is it's moved from Bank Nifty as well as Bank X to Nifty as well as Sensex. That's the shift that's happening. And thirdly, the impact on BSE has been higher versus NSE. If you see the fall from the 3-month high, which is on the screens, the fall is almost 94% versus NSE, which is at around 56%. Now, taking this into consideration, let's just pull up BSE on the screens as well and see what's happening with the stock, because, you have the IPO in terms of NSE that's on the radar as well pretty soon. But 1.5% is the kind of downtick that you're seeing on BSE. Now, on the sidelines, for the Thai Global Summit, my colleague Haripriya also caught up with Ashish Chauhan to understand what the impact is and what his view is. Let's first listen in to him before we head across to Lancelot.
Last few days since the new measures have come into effect, of course, there are many measures yet in the pipeline over next 4 or 5 months, but we have seen a drastic decline in the total volumes on all exchanges which have traded derivatives in India, and probably that is the purpose with which SEBI has prepared this regulation. So perhaps the purpose is being served now.
That could be quantified, sir?
Yesterday was like almost 40-45% from the peak, has fallen for NSE. For other exchanges, even higher, I've been told. So effectively, it's a very large decline in terms of the volumes that have gone down.
Sir, the option values for the Bank Nifty has been decreasing while the Nifty options have been increasing. Do you see this as a trend that's been following up, and do you think that this will continue?
It's bound to happen, because I think the Bank X has almost become zero. Bank Nifty is also gone to a monthly cycle, and that's why the Sensex is a weekly cycle. That's where you will see slightly larger volumes. But overall, the transaction intensity and density has gone down.
Right, so that's exclusive that we're picking up with regards to SEBI measures. Go, Lancelot, your view on the BSE as a stock?
So I think, exchanges as a stock, whether it is BSE, NSE, will continue to grow. If you look at the number of new demat accounts opened in the last couple of years, it's almost doubled in the last few years. And we are seeing the number of demat accounts and new investors coming into the market really grow significantly. Yes, these measures taken by SEBI were more for the protection of small investors, because in F&O space, it was the small investors who actually lost out significantly. And they said, I think some of the numbers were saying that almost 70 to 80% of small investors have lost money trading in F&O and retail investors. So I think that's what necessitated the change in terms of these regulations to increase the size and to make it a little bit more difficult for small investors to try and speculate in the market, and that would actually have an impact on the volumes as well. And like we heard, the peak volumes drop has been almost like 70-80% for BSE as well as NSE. So yes, valuations had been on a higher scale at this point in time, because everybody was trying to benchmark the NSE pricing based on the actual prices or the valuations that were applied for applicable to BSE. So I think given that background, valuations of both these exchanges seem to be a little bit expensive at this point in time, and over a period of time, these would normalize. As the high growth which you're seeing sort of comes back to more normal levels. So there is an opportunity to wait for the correction in the prices before one can accumulate these stocks. At this point in time, definitely look a little bit expensive.
That's the view coming in from Lancelot on BSE. Valuations definitely expensive on the back of growth. We saw the chart at 122% returns of that BSE has given. Now, let's move on and look at some of the themes as well as sectors that are in focus. Now, brokerages have initiated coverage on certain stocks as well as sectors, Phillip Capital being one of them on capital goods. Apart from that, CLSA have also come out with a very positive note on something like a Swiggy, while Kotak Institutional Equities have initiated coverage on Hyundai Motors. Let me get an Anushi first on on talking about Phillip Capital's note on capital goods space. Anushi, what are some of the picks of Phillip Capital and about the sector as well?
Hey Puneet, so a clutch of picks that we are seeing from the capital goods space, and this is on the outlook that Phillip Capital has given for the next 7-8 years as we speak. Firstly, they've initiated a buy call on ABB. This is with a target price of 8,500, 13% of an upside that we are seeing. BHEL and Cummins also another buy calls from Phillip Capital with about 20% and 8% of upside potential respectively. L&T remains as the top pick in the space with a target price of 4,400, and this is with a 14% of an upside from current levels. However, on the other side, they have a neutral rating on Siemens with a 7,900 target, which is a 1.5% upside, and a sell call on Thermax. This is on the basis of expensive valuations that the company currently has, and with a target price of 3,900 and a 16% of a downside. So what essentially the note is saying is they believe that this is just the beginning of India's capex cycle, and with more thrust on private capex pick up from year onwards, this is just expected to intensify further till 2032 picture as we speak. So with this, all stocks in this space will re-rate, their valuations will re-rate as they enter with better cash flows going forward. And in this space, diversified players will offer a lower risk on the current valuations, with L&T as discussed before being their top pick. While for ABB, Cummins and BHEL, they have a positive outlook on the sector subspace in which they're currently operating in. They have a hold rating on Siemens on the back of valuations and would wait for a lower stock price for a better entry point for the same. However, on Thermax, as mentioned above, they have initiated a sell call given the expensive valuation on the stock, and would wait for lower stock price to see whether their view turns positive or not. So this is the overall picture that is building in the capital goods side, and how the capex cycle would benefit some of these counters.
Well, thanks for that, Anushi. We have seen some very interesting price move on all these companies as well. But Lancelot, what is your view on the capital goods sector as a whole? We did see some of the very positive names like ABB, BHEL, as well as L&T, that's some of the top picks of this particular brokerage. What is your view on the space in general, and what is some of the stocks that you like in capital goods?
So I think at this point in time, we have been seeing a trend that capital goods or India private sector capex has been improving over the time. However, that capex has not really taken off in a big way at the moment. Most of the capex in the past year or past couple of years have been driven by the government spending. Going forward, however, we see that most of the companies, having reached their the capacity utilization of about 70 to 75%, are beginning to look at expansion and spend money on further capex. And so we should expect this particular sector to see a lot more traction in terms of order wins as well as in growth. In this space, I think valuations have been a little high over in these stocks, especially with companies like Siemens, ABB. But I think L&T still offers significant upside even at these levels, because valuations have been relatively reasonable as compared to the growth that L&T has been seeing. And I think if there is some kind of, let's say, resolution on the situation in the Middle East, we could see L&T get a further upside based on, whatever order wins and implementation of the, the capital goods in those markets. So I think one can definitely look at, L&T from a 2 to 3 year perspective, and maybe wait for the other capex good companies for any kind of correction. That would give an opportunity to add those stocks into the portfolio.
Right, so L&T in focus as well. But moving on, you have CLSA, which has gone ahead and initiated coverage with the outperform on Swiggy. My colleague Mahima stands by to get us more. Mahima, what is CLSA talking about in terms of Swiggy? Because that's an interesting stock that is on everyone's radar now.
Absolutely. So CLSA is bullish on Swiggy as well as Zomato, but they've initiated coverage on Swiggy today with a target price of 708, and they've rated it outperform. Now they've mentioned a couple of reasons as to why they're bullish on Swiggy. To name a few, they're saying that overall the quick commerce space and the food delivery space is large, and it is growing in terms of total addressable market, with a clear, and Swiggy has a clear early mover advantage in both of these segments. They're seeing Swiggy's execution improving and accelerating with growth, and seeing profitability also improve going forward. They expect the Indian quick commerce to grow at 6 times by the end of FY27, and what they're saying is that Swiggy will likely to lag Zomato, but they believe that the valuation discount adequately reflects this in reality as well. What they're saying is that Swiggy's gross order value and revenue will grow at a CAGR of 43% and 32% respectively, and they're saying that catching Zomato is not necessary for a successful investment case, and they're supporting this by saying that the market is too big for a single player to exist, and they see enough opportunity for both Swiggy as well as Zomato. So CLSA is bullish on both Swiggy as well as Zomato, and these are the reasons as to why they are bullish on Swiggy.
Right, thanks Mahima. In fact, Lancelot, between a Swiggy and a Zomato, where would your bets be?
So I think, if you look at maybe the valuation gap, Swiggy is a lot more undervalued as compared to, say, Zomato in terms of valuation, because, but then that valuation also is justifiable to an extent because Zomato has been a more dominant player in the space. Plus, if you look at it from a risk perspective, Zomato already has, a much larger cash profits in their books, and as well as they've recently raised sufficient money for their expansion into Blinkit, which will drive the next leg of growth for both Swiggy and Zomato. So given that background, I think Zomato does make a more compelling case in terms of more stability with lower risk, while Swiggy, one can look at it if one has a little bit more risk appetite. Then even Swiggy can be looked at from a high risk investment option.
Well, that's the view coming in on Swiggy as well as Zomato. But Lancelot, I also wanted to ask you your view on Hyundai Motor India. Now we have seen that Kotak has initiated coverage on the stock. The target price is roughly about 2,025 rupees per share, 11 to 12% upside, and they have been preferring something like a Hyundai over Maruti Suzuki based on valuations, as well as something like Hyundai's strong parentage to premium products such as SUVs. They have roughly about 68 to 70% of the sales coming in from SUVs as well. So what is your view on Hyundai, a recent listing as well, and do you also have a preference of Hyundai over some of the other players like Maruti Suzuki?
Well, I think the issue about Hyundai is that while the company is a strong player in the space, the space itself has seen some amount of slowdown over the last couple of quarters. And going forward, it will take some time, for the inventories that were there in the system to get completely utilized, and then you'll probably see further growth coming in. So when the sector is growing, or is in a slowdown and growing at a slower pace, it becomes very difficult to justify the higher valuations for individual stocks in that sector. Now, if you look at the decision whether to look at Hyundai versus Maruti, I think Maruti still offers a more, let's say, compelling investment opportunity because valuations have corrected and it has a much larger reach, as well as it's present in with a lot of hybrid models, which is actually at this point in time, more preferred by customers as compared to pure EVs. So we should see probably benefit, whatever growth coming in, Maruti would continue to benefit, maybe more than Hyundai would. And then given the valuations that you are servicing, I don't think that the premium that Hyundai is generating or is trading at over and above valuations Maruti should make it a compelling buy at this point in time. So I would probably stay with Maruti for the longer term till we start seeing some change happen in that sector.
So Maruti preferred bet in terms of where the auto space goes, Hyundai being number 2 so far. Another stock that's buzzing in trade, Lancelot, today is Varroc Engineering. In fact, they've gone ahead and hiked the guidance with regards to where the new order wins go. An interesting move that's coming in on this counter. Lancelot, how are you looking at a Varroc? Because clearly a couple of commentary with regards to where FY26 new business orders is concerned, that is expected to be around 1,750 odd crores, which was earlier at around 1,450 odd crores. And they will be adding to their revenues in the next 3 years. That is what they have indicated. In terms of their net debt to EBITDA, that is down to almost 1.1 times versus 2.1 times in FY23. And their first half FY25 return on capital employed has gone up by 19%. But clear commentary over here, which is important, is the new order wins guidance. How are you looking at this specifically from an execution perspective, translating into revenues and valuations? Do they recommend a buy right now?
So I think, yes, there has been good growth, announced by Varroc Engineering. They also came out with their investor presentation as to how things will unfold over the next 3 years. We have seen that the company is, pretty well managed because it has brought its debt down to 0.5%. So 0.5 times, which is actually quite reasonable for a company that is growing at their size. So from growth perspective, I think they hit all the right buttons in terms of bringing the cost of growth down, increasing the leverage in terms of operating leverage, as well as new order wins, which make it an attractive investment proposition. At this point in time, yes, you are seeing the stock move, to by over 10% today. But I think one can look at accumulating the stock because it seems to have considerable upside, especially when you are seeing other players, sort of taper off or struggle on the downside. So I would still say that yes, Varroc is actually a good opportunity to accumulate the stock.
Well, Lancelot, thanks so much for your view on all these stocks across the auto, pharma and hospital space, and we look forward to our next conversation. But another interesting stock and soon to be listed company is IGI India. Its IPO is set to open for public on the 13th of December, and we spoke to the management about the company's services as well as global footprint. Listen in to what he has to say.
First of all, we have an entire comprehensive range of services in the gem and jewelry industry. We do lab-grown certification, we do natural diamond certification, we do jewelry certification. Incidentally, jewelry certification has been invented by IGI. What happens is you have to understand the consumer doesn't buy a loose stone. The consumer buys a stone mounted in a jewelry piece, and we give out 6 million jewelry certs every year. So, and this goes entirely to the end consumer finally. And also we are there in the entire supply chain. Supply chain by means the manufacturer and now the grower to the wholesaler, to the jewelry manufacturer, and the retailer, the jeweler itself, and finally the end consumer. So we are there completely in the entire value chain. We are there in the comprehensive services, and also we have an extensive global footprint. So that makes us formidable to be one of the best certification bodies in the world.
Interesting company to watch out for, but completely running out of time. That's a wrap on this edition of Hot Money. Lots more lineup on the other side. Please stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know.
Shaktikanta Das bids farewell to the Reserve Bank of India, ending a successful 6-year-long tenure at the Mint Street. In his final press meet as the RBI Governor, Das lauds the teamwork at the RBI and highlights the key challenges that lie ahead for the new RBI Chief, Sanjay Malhotra. Benchmarks trade lower at noon, slipping from highs after a flat opening. Nifty is below 24,600 mark, whereas Sensex is below 81,400. Broader markets in line. Sectoral action mixed. Auto, media, oil and gas under pressure, whereas Realty Index stands firm with gains over 1%, following by gains in IT. And Swiggy shoots higher after the CLSA projects nearly 31% upside and ascribes a target of 708 rupees. The brokerage is also anticipating an improvement in Swiggy's execution along with better growth and profitability. Hello and welcome to NDTV Profit. You're watching Market IQ and I'm your host Mika Barve. Up first, let's just take a quick look at how markets are faring right now. Well, the Nifty 50 is trading. We're seeing cuts of 0.2%. It's down, and it had a flat opening to the start of today's session as well. When you look at some of the, the top losers on the Nifty 50, it's Bharti Airtel's down about 1.7%, followed by Trent, Adani Ports, and DRL seeing cuts of over 1.5%. Some of the counters that are showing some strength on the benchmark. We have Shriram Finance, the top gainer, up 2.2% in trade right now, as well as Wipro, Bajaj, Finserv, as well as Infosys seeing gains of 1 to 2%. When you look at the advance to decline ratios, we have 34 declines on the benchmark against 16 advances. When you look at the broader markets, well, the Nifty Mid Cap 150 is performing better than the Nifty 50, but it's the Nifty Small Cap 250 which is the underperformer today. It's seeing cuts of over 0.5% right now. When you look at some of the significant negative movements in terms of stock performance on the Nifty Small Cap, we have CE Infosystems down about almost 5% right now, as well as CEAT, HEG and Just Dial, down about 4%. Some of the counters that are doing well, however, is Raymond, which is, surged over 10% right now, as well as Varick Engineering, similar trajectory. They're up 10.5% in trade right now, and ITI, which is gaining 7%. But it's time to put the spotlight on IndusInd Bank. Now, the stock has been underperforming versus the Bank Nifty for the last 6 months, and my colleague Hiral Daria joins us with a deep dive on what's pulling the stock down and the road ahead.
Absolutely. If you see IndusInd Bank, yes, it has been an absolute underperformer. Let's just quickly pull up the performance and see what's happening. The stock is down over 30% in the last 6 months versus Bank Nifty, which is up nearly 3%. Now, from here on, if you see in terms of what's causing this stress, right, the loan growth, which has been dwindling. If you see in the first quarter of FY24, the loan growth was around 22%. It's come down to almost 13% in the second quarter of second quarter of FY25. Moving from the loan growth, if you see in terms of the deposits as well, they have been under pressure. So a tepid loan growth and a deposit growth has resulted in moderation in the CASA growth. Let's understand what is CASA. CASA stands for current account and savings account. That's the aggregation. That is what has been impacted. In fact, they are a major source of funds for the banks since they are cheaper than the term deposits. Moving on, if you see in terms of the CASA growth that we're talking about, that has moderated from 40% in the first quarter of FY24 to 36% in the second quarter of FY25. Now, with this kind of moderation, if you see in terms of the net interest margins, that has been weak not only for an IndusInd Bank, but that has been the trend across the sector. But the weakness is higher in terms of IndusInd. From 4.29, it's come down to almost 4.08. Now, with the weakness in net interest margins, the credit costs have gone up. So if you talk about the credit cost from 45.86%, it's gone up to almost 52.21%. And the reason this has happened is because overall the stress on the asset quality on the back of, the stress in the microfinance and the vehicle business is what has led this. Now, if you talk about the asset quality deterioration as well, from 1.94%, it's gone up to almost 2.11%. So that's with regards to where the asset quality goes. And from the asset quality, if you see in terms of the other factors that are not working, now as a result of the high stress in the microfinance lending, provisions have surged. Let's look at what the provision picture looks like, right? Before that, provisions, funds set aside to cover potential losses from loans that may not be repaid. That's what provisions are. So provisions have gone up from 991 crores, they've nearly doubled. Now, the current quarter, it was almost 1,820 crores. And if you see in terms of the next parameter, all of this has led to lower profitability. So the profitability has nearly halved to 1,331 crores from a 2,124 crores. So that's the kind of impact that we've been seeing. But moving on, let's look at the Common Equity Tier 1 ratio or CET ratio. That has remained high. Let's see what that stands for as well. Now, CET ratio is a key indicator of a bank's financial strength and solvency. Let's look what that numbers look like. A CET ratio of 16.33% has moved down to 15.21% in terms of where IndusInd Bank goes. And very lastly, what has happened so far now? What's causing this pressure and what's in store? They're planning to, the idea is that the company is expected to miss the planning cycle 6 target. Now, what is the planning cycle 6 target? This is the loan growth guidance of 18 to 23% that the bank had given for FY26 is expected to be missed. That is what the management has indicated in their conference call. On the back of which you've seen a lot of downgrades that have happened and target prices cuts. So you have ICICI Securities, Nuvama, Kotak, MK Philip, all of them have gone ahead and cut the target price on the counter post their Q2 numbers. Now the key questions from here, what an investor needs to watch out for is, will the challenges persist for an IndusInd Bank? Number two, is the company missing consistency? Because consistency is expected to be key if a re-rating has to happen for the bank. Because there's no quick turnaround in sight. Main reason, they're not expected to achieve the 18 to 23% loan growth guidance that was given as a part of their planning cycle 6. If they're able to change that in the coming quarters, probably you'll see some re-rating, but till then, the pressure is expected to continue.
Thank you so much, Hiral, for giving us that perspective of IndusInd Bank. It's trading fairly flat, but with a negative bias on its side. But we'll move on and talk about Bharat Forge, which has allocated 1.25 crore shares for fundraise via QIP. And we have Puneet joining us. Puneet, what can you tell us about this QIP?
Well, it's a very interesting time where the company has chosen to, do a QIP as well, because the company has sufficient cash balances as well, but they have allocated roughly about 1.25 crore shares at roughly about 1320 rupees per share. So it's, the current price is much higher than that. They've also said that they've raised roughly 1650 crores via this QIP. What's interesting is that the company is stated to repay roughly 1000 crores in debt and about 549 crores out of the 1650 crores will be used for, funding an acquisition that the company had announced back in October of 2024, which is of American Axle India. Now, what's interesting is that the company, of course, is raising 1600 crores and they have long-term debt of about 2394 odd crores. But they also maintain a very strong cash balance of 3000 crores, which can be used for further acquisitions as well. It's something that's not strange for the company's history as well. Now, just finally on, the new acquired entity, American Axle India, is of course in a very related sector of building axles for light, medium as well as heavy commercial vehicles. And axles are a very important part of any kind of vehicle. So one of the most, this will also give us a lot of technological prowess to someone like a Bharat Forge. Apart from that, while they are awaiting CCI approval, they have mentioned that one of these acquisitions going forward will help the company's growth rate also. So Mika, overall, it's a very interesting time as mentioned for the QIP because they are flush with cash, but it puts someone like a Bharat Forge on, a stern footing as well going forward on the financial side.
Thank you so much, Puneet, for giving us those details. But, stay with us because we're going to head straight to the one of the buzzing sectors today, and that's the Nifty IT. And, it's seen gains of 0.7%. It's gained 6% in the past month. But today's move is because HSBC expects the IT industry growth to pick up 6 to 7% in FY26. And they've also changed the ratings of their top tier stocks. So, Puneet, how have they changed their portfolio in the IT pack?
Well, it's very interesting because they've, in the large cap space specifically, they've upgraded stocks like Infosys, LTIMindtree as well as Wipro, while they've downgraded a TCS and a Tech Mahindra. So you can see on your screen right now the upsides as well as the target prices as well. Very bullish on going forward on Infosys versus, TCS is they've downgraded to a hold from a buy earlier. When you look at the mid-cap IT stocks as well, that's also very interesting. They've downgraded something like a Coforge in this particular time frame, while they've upgraded Emphasis. So Coforge, they have downgraded to a hold from a buy earlier. They have a target price of 8,200, a 7 to 8% downside, while they've upgraded Emphasis to a buy from a hold rating earlier with a target price of 3,600. They mentioned that outlook for 2025. They mentioned that they're expecting industry to pick up growth in 2026 FY26 to 6 to 7% versus a 3 to 4% seen in this fiscal year of FY25. So that's a positive. They've also mentioned that while there are uncertainties of what's happening in Europe with regards to the demand of the IT products, as well as Gen AI and new uncertainty with newer startups also coming in, the improving growth prospects for an investor is quite large on this particular sector versus the other sector, which wasn't the case before. Apart from that, they've also mentioned that they're expecting the IT sector to perform in line with what the estimates are of most of the analysts, and they've also said that while they are less constructive on the high valuation of mid-cap IT peers, they are positive on something like an Infosys as well as LTIMindtree, HCL Tech as well as Emphasis going forward as well. So very interesting note, very interesting upgrades and downgrades, but most of these stocks are buzzing in trade on the back of this note as well.
Thank you so much, Puneet, for giving us all those details and joining us for the same. But we move on to an NDTV Profit exclusive. The NSE is about to set up a data center to monitor algo trading. And we have Charu joining us with the details. Charu, what are sources saying?
Hi, so as per the sources that spoke to NDTV Profit regarding the algo trading regulations which are slated to come out soon, NSE is going to be the exchange that sets up a data center that will be taking information from all other market infrastructure institutions in general to have all the requisite information that will be required for the validation of all these algo trading platforms. Now that validation process is going to be done by a performance validation agency. That role is going to be undertaken by the qualified credit rating agencies. However, the data center to acquire all the information required for this process of validation will be with the NSE. NSE's subsidiary administration and supervision is the one which will be taking up the responsibility of dealing with this, and the initial preparations for the role have already started, and in fact we have also been told by our sources that an allocation of considerable amount of fund has also taken place. So let's see how it rolls out once proposal paper about the same is out.
Thank you so much, Sharu, for giving us those details. But we move to the sidelines of the TIE Global Summit, where my colleague Haripriya has caught up with the NSE MD and CEO Ashish Chauhan and spoke to him about what are the changes seen post SEBI's recent move to tweak F&O norms and the developments on algo trading regulations. Let's hear what he had to say.
Last few days since the new measures have come into effect, of course, there are many measures yet in the pipeline over next 4 or 5 months, but we have seen a drastic decline in the total volumes on all exchanges which have traded derivatives in India, and probably that is the purpose with which SEBI has prepared this regulation. So perhaps the purpose is being served now.
That could be quantified, sir?
Yesterday was like almost 40-45% from the peak, has fallen for NSE. For other exchanges even higher, I've been told. So effectively it's a very large decline in terms of the volumes that have gone down.
Sir, the option values for the Bank Nifty has been decreasing while the Nifty options have been increasing. Do you see this as a trend that's been following up, and do you think that this will continue?
It's bound to happen because I think the Bank X almost become zero. Bank Nifty is also gone to a monthly cycle, and that's why the Sensex is a weekly cycle. That's where you will see slightly larger volumes. But overall, the transaction intensity and density has gone down. In a way, algorithms are here. They have been there for now several, in an IT format. They have been there for almost 15 years or more. And today, because of the regulatory the way it has happened, many more retail people have also started participating in algorithm, and SEBI has become now more concerned. That's why they have issued a consultative paper. It remains to be seen what kind of obligations finally are put on the people who are providing those algorithmic services, but also the brokers who allow their customers to finally use those algorithm-related services and provide order flow to the brokers. So there will have to be some understanding of the role and responsibility of each part in the chain going forward.
Shifting focus to the pharma space, Metropolis Healthcare will acquire Core Diagnostics for a total sum of over 240 crores. The company's board approved the proposal to acquire 100% stake in the Delhi NCR headquartered Core Diagnostics via a combination of cash and stock. Now, Varsha brings us all the details.
Metropolis has acquired 100% stake in Core Diagnostics at 247 crore. Now, 55% of this will be funded by cash consideration and 45% by equity swap. Now, Core will become a wholly owned subsidiary, and the transaction is expected to be completed in next 60 days. Now, if I were to talk about the valuation, as I said, that equity value assigned to Core is 246 crore. So this is 2.2x based off FY24 revenue of Core Diagnostics. This will be an EPS accretive from year one itself, that is by FY26. Now let's look at what is the rationale behind this, why Metropolis has acquired this company. One is cross-selling, so there will be wide opportunities to offer non-onco tests to Core Diagnostics clients, and of course cost synergies will be there. And the important highlight here is core is mainly into oncology segment. So here for Metropolis, the oncology segment contributes almost 4%, which will increase to 10% post this acquisition. This is the highlighting point for the company. And the 70% of core oncology revenues from high-end test compared to 40% for Metropolis. So because of this, the margins for Metropolis may go up because of the high specialized tests that the core diagnostic has. About core diagnostics, it's a leading oncology testing lab player in India, dominant player in super specialty oncology and companion diagnostics. And if you see the diversified mix, so B2C contributes almost 51% for core, followed by B2B, and the company has almost 22% revenue CAGR over FY22 to 24.
I now want to highlight Swiggy, which has seen some significant gains in today's session because CLSA has initiated coverage with an outperform on Swiggy with a target of 708 rupees. Now Mahima joins us to tell us why CLSA is bullish on Swiggy.
Absolutely. So CLSA is bullish on Swiggy as well as Zomato, but they've initiated coverage on Swiggy today with a target price of 708, and they've rated it outperform. Now they've mentioned a couple of reasons as to why they're bullish on Swiggy. To name a few, they're saying that overall the quick commerce space and the food delivery space is large and it is growing in terms of total addressable market with a clear, and Swiggy has a clear early mover advantage in both of these segments. They're seeing Swiggy's execution improving and accelerating with growth, and seeing profitability also improve going forward. They expect the Indian quick commerce to grow at 6 times by the end of FY27, and what they're saying is that Swiggy will likely to lag Zomato, but they believe that the valuation discount adequately reflects this in reality as well. What they're saying is that Swiggy's gross order value and revenue will grow at a CAGR of 43% and 32% respectively, and they're saying that catching Zomato is not necessary for a successful investment case, and they're supporting this by saying that the market is too big for a single player to exist, and they see enough opportunity for both Swiggy as well as Zomato. So CLSA is bullish on both Swiggy as well as Zomato, and these are the reasons as to why they are bullish on Swiggy.
Thank you, Mahima, for giving all those details. We now move on to the government, who on Monday appointed Sanjay Malhotra as the new governor of the Reserve Bank of India. Now, fizzed out rumors of an extension of the term for the incumbent governor, Shaktikanta Das. Now, NDTV Profit's Vishwanath Nair got the opportunity to talk to the outgoing RBI governor, Shaktikanta Das, and asked him about his tenure and if RBI is being more stricter toward fintech's company. Let's take a look.
Companies in private believe that the RBI is way too tough on them. Would you want to give...
RBI is?
Way too tough on them when it comes to compliance and regulation. So anything on that? And second part, you talked about a lot of the teamwork and the legacy of the RBI and all of that. After the 6 years, is there anything you want to change at the RBI?
It's a continuing institution. There is always room for improvement. That will be my answer to the second question. And the first question you said was fintechs. No, well, I would beg to disagree. In fact, in one of the monetary policy statements or in one of my speeches, I have talked about how many meetings we have held with the fintech companies, either in groups or individually. Now, a particular day in the month is dedicated, specifically earmarked for fintech companies and innovators to come to RBI and have face-to-face interaction. There is a separate fintech department. And in fact, the feedback that I have got, not because I am governor and they tell me, because in private, when people come to meet me, either in a small group or individually one company, or when they come and meet me, I always encourage them in those meetings to be absolutely and brutally frank and to share their concerns. My sense is that I think almost all of them are very satisfied with RBI. Those who had some concerns or those who thought RBI was acting very tough, when they interact with us and when we explain to them the background of our action or the background of our stance, my experience and our experience in the RBI is that I think almost all of them appreciate why the RBI is doing certain things. And we have tried to improve our communication also to explain the rationale as to why we are doing certain things.
Moving on, we did speak to R. Gandhi, the former Deputy Governor of RBI, earlier on the challenges that lie ahead for Sanjay Malhotra. Let's listen to what he had to say.
Luckily, he inherits very calm position today compared to almost in the last 35 years, right from Mr. Venkatramanan time. Every governor, when they came on the scene, there was a crisis, either domestic crisis or international crisis to grapple upon. Hopefully, he won't be asked to do that. We hope that he will be able to take on the base that has been now made available to him and build on that strength.
The question at the end of the day right now is Sanjay Malhotra, his entry at a time when the growth inflation debate is at its peak, right? Like, I just wanted to get your view. As the RBI governor, yes, inflation targeting is the primary role of the central bank. It is inflation targeting central bank at the end of the day. Having said that, the growth question keeps propping up, and so far we've been sure that growth has not suffered, but the Q2 GDP data throws that point a little bit into question. So I just want to get your views. How should maybe an RBI governor look at this?
First thing, I expect that he would concentrate more on whether it is a one blip of the data or it is going to be sustained in the coming quarters. And I think that's where the projections, the analytical output that the Reserve Bank's economic department will be presenting to him, and that will give him a closer look at and looking forward in the next 4 quarters, so to say, both the inflation trajectory and the growth trajectory, how it is going to be there. That will be the first hard look he will be looking at, I would presume. Then based on that, if it comes out clearly that this is a one-off blip, then he must be convincing himself that there's nothing to worry about the growth, and especially and about the inflation also going forward, how it is going to behave, and he will have that ample debt management, because every 2 months the MPC meets, they will be able to take certain tactical corrections also in case if it is needed. But long term, because the country wants to grow, that is expressed in quite a few quarters that he is fully aware of. But as every governor of any central bank will do, their first duty, as I mentioned in case of Mr. Das also, Mr. Malhotra will also immediately absorb that position that my first duty is towards containing the inflation. So if the inflation trajectory is going to be comfortable, then we should expect him to cut rates.
We now shift our focus to the Association of Mutual Funds, which released the November mutual fund data today, with actively managed funds recording an inflow of 35,943 crore rupees. Now, inflows into the sectoral and thematic category dipped for the second month in a row, and we have my colleague Neeraj Shah, who has a roundup of the November data so far.
Well, the headline number of the MF industry inflow for the month of November obviously is a dip because of seasonal factors. If you look at it month on month, 60,000 versus 2.4 lakh crore. But the point being, there are some individual aspects that need monitoring. So, for example, the inflows into SMIDs, which is the small and mid cap funds, has stayed steady, in fact gone up month on month as well. So those numbers are looking okay. But active funds by and large have seen a downtick on a month-on-month basis, and thematic funds have also gone down. So active equity funds saw a net inflow of 35,943 crores. The inflow month-on-month was 41,887. So significant, about 15% dip that has come in. But like I said, that while large caps have seen an outflow or a lower inflow, mid cap and small caps have done well. Flexi cap funds have been steady, 5,084 versus 5,180 crores. But the sectoral or the thematic funds, 2 months on a trot now, have come off. So the data on the month for November is 7,658 crores versus inflows of 12,279 crores. And NFO flows have come down, 4,052 crores versus 6,078 crores. You know, the other way to look at it is, if you're looking for a headline, that the SIP inflow has paused the growth streak for the first time in 16 months. I think since June 2023. It's only down by 2 crores, by the way, but still it had a streak, and that streak is off now.
Thank you, Neeraj, for giving us all those details. Let's just take a quick look at how markets are faring right now. The Nifty 50 continues to trade in the red. So do the broader indices like the mid-cap 150 and small-cap 250. When you look at the sectoral indices, you have the Nifty Realty top gainer up about 1%. Most of the gains actually coming from Raymond, which was surged over 10% in trade today, as well as Phoenix Mills, which has gained 3.5%. We also have some strength in Nifty IT, which was on the back of the HSBC note that we talked about, seeing gains of 0.7%. Nifty FMCG seeing some recovery after yesterday's correct fall. It's trading fairly flat but with a negative bias. Some of the counters that aren't doing so well, we have the Nifty Energy, the top loser in terms of the sectoral indices, seeing cuts of almost 1%. But with that, that's all we have on this edition of Market IQ. Do stay tuned to NDTV Profit. Lots more lined up on the other side.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Hello and welcome to the Mutual Fund Show. I'm Neeraj Shah. Over the next 25 minutes, we'll talk about two specific things. One is the AMFI data, and there is, I think the headline, coincidentally, is that the thematic funds have seen lower flows. You can even argue that active funds have seen lower flows, but I think the bigger drop or the bigger standout for me was the pullback in thematic flows, even as the small and mid cap funds have continued to see higher inflows month on month. The SIP streak, I think, comes off after 16 odd months, June 2023 or from thereabouts. We've had a consistent uptick. There's a 2 crore downtick in the SIP streak as well. So that's one. But the reason I use the term coincidentally is because we are going to be talking to our two experts today, Juzair Gabajiwala, Director of Ventura Securities, and Mohit Gang, who is the co-founder and CEO of Moneyfront, on thematic funds. And what are the kind of thematic funds that you should look at in your satellite portfolio? And why is it that these gentlemen might be liking some of those funds? So, gentlemen, both of you, thanks so much for taking the time out and being with us on the show. Can I briefly talk about the AMFI data first before we talk about the topic that we had chosen? And Juzair, I'll start with you. What did you make of the fact that while small and mid cap funds continue to see increase in flows, thematic funds active funds by and large, even large cap funds have all seen a dip. Do you read too much into the month-on-month data, or you would wait for a trend to develop?
So first of all, thanks Neeraj for having me. And in fact, yeah, I've just had a brief glance at the data. I've not had a chance to dissect it completely. But the view actually what we have is that the small cap, actually the whole narrative has actually undergone a change. If you see the small caps, the size of each companies are much larger. So in fact, we actually like the small cap space much more than the mid cap space. Having said that, we have seen that the SIP flows have stagnated a bit. Thematic, we don't like it that much in terms of because they are more on the riskier side, and maybe I will talk a little bit later on that. But we need to see some more, and just looking at a month-on-month trend, we need to I think wait for, because this again year-end data. Let's wait and watch, and let's see how the whole trend develops.
Okay, Mohit, what about you? What stood out for you? Like I said, for us, the thematic funds getting a bit of a slowdown was maybe the standout. What stood out for you from the data, if you have had a chance to see it?
I have glanced at it, Neeraj. Thank you for having me on the show. So look, I think on the SIP front, I think it's just a kind of a small pause. Perhaps investors have seen market correcting last couple of months, and they're a little wary to add on to new SIPs. Having said which, the SIP book hasn't depleted. Maybe there are few more pauses this month or last month, which we have seen across investors trying to wait, or perhaps few investors trying to time it out in spite of whatever and however you want to convince them, right? So I think those are few cases here and there. So the SIP data remains static. On the sectoral fund, Neeraj, I don't think so. We have seen too many NFOs last month on the sectoral side, and the biggest driver of sectoral inflows has typically through the year been new fund offers. I think there were only a couple of them or three NFOs, if I'm not mistaken, last month, which is what has kind of led to this mobilization of around 7,600 odd crores. But otherwise, the biggest driver of sectoral funds is per se NFOs, and there weren't many sectoral NFOs in the month of November.
Point well noted. Okay. Okay, so Mohit, would you say that therefore a base that is hit sometime in the past, because there would have been a lot of NFO in the thematic side, and that's maybe a bit of a top, but normal parlance or normal monthly flows will never be so high as we might have hit when there were a clutch of new fund offers on the thematic side?
Honestly, I think that's the trend, Neeraj, and we can't dispute it because that's what data says all through the years, that distributor fraternity is completely charged up and aligned for a single NFO when it comes in the market. Investors think that there is something new or unique which has come up. They try and lap up the idea, even so it would be the 10th repetition of the same idea. Right, and that's how the industry has been functioning in spite of all the noise and awareness which we try and create around it. But that's the typical pattern of industry, that NFOs tend to mobilize the resources much quickly on the ground.
Okay, fair call. Now to the topic at hand, because certain thematic funds have done well, and frankly now AMCs are also smart in that they are coming out with thematic funds necessarily when a large portion of the theme has played out. It's happened in the past, and therefore in a satellite portfolio there might be room for the investor who is not too risk averse to take a small exposure to thematic funds. So Juzair and Mohit, we just thought that let's dedicate today's 20 minutes to somebody who is willing to take risks, somebody who is willing to spend a little bit of time analyzing the portfolios, looking at the performances, and willing to take that extra risk for that extra alpha or return in the mutual fund side, and therefore in the satellite part of the portfolio willing to take exposure to thematic funds. So if we had to, if with that as a premise, Juzair, I would love to know what quantum of exposure would you give to a thematic fund for somebody of this nature and willing to take risks, and give us an idea of one of the thematic funds that you may like and why.
So I think, Neeraj, before I get into it, I think a lot of people have, actually mistaken sectoral funds also to be thematic funds, So one actually also should look at all the cons of investing into a thematic fund, before looking at the pros, because the pros are, the narrative basically gets, governed by the returns. And we also should not lose fact of the sight that you need a high level of conviction. So not only it should be the distributor who's has a conviction, even the investor needs to have the same conviction, because we have seen investors running away at the drop of a hat the moment the returns become negative, and then whether the person is willing to take risk or not willing to take risk, it just goes away, right? And what we have also seen is that even a lot of AMCs, have because now they don't have any scope to add funds anywhere else, right? And that's the reason why these thematic funds have become the flavor. So that is another thing which you should look at. And one of the most important thing at any point of time when you're looking at a thematic fund, please understand that a theme is different from a sector, right? A sector will be, the infra is a theme, right? But pharma is a sector. So I think people need to be very, very clear about when they are, looking at the funds. And one should not forget that we had one infrastructure theme which had run up somewhere in 2008, and it took nearly 8 years for the theme to again recover back its NAV. And the same thing had happened even with the PSU fund. Okay, so I hope I have set the context on that part. So ideally, that means this is not a fund for a first-time investor. So it should be for a person who is already, an investor who has already invested some portion of his money in, the diversified equity funds, because the stocks which are there are also available for the diversified equity funds also, right? So having said that, some of the themes which we actually like are, maybe something like a innovation fund, because the reason being why we like innovation is that it's going to be very difficult for a lay person to try to understand, what are the innovations which are happening around at various company levels. So you may just know about one or two here and there, but the second thing is that in many innovative companies, we will not even understand the valuation matrix, right? So we like this space. And the second one we like is the business cycle, because you see that in the business cycle, you need to be quite adept at trying to see that whether the business cycle has run up and whether the new cycle will take over. So these are the two categories which we like. Most of the other categories are, according to me, are more or less nothing great to drive home about. Like manufacturing is, so other than services, everything is manufacturing. So these are the two which actually we can look at.
Okay. Juzair, I'll come back to you for specifics if you can share, but Mohit, to you as well. And yes, I agree, Mohit, that we kind of use these terms interchangeably, right? Thematic funds and sectoral funds, and they both come under this. So a lot of people might actually buy thematic funds or sectoral funds thinking one is the other. But assuming that you try and think of this as a broader umbrella wherein you're following a particular sector or a particular theme as opposed to a diversified fund, if you will, what is your sense of what quantum of exposure do you give or would you recommend to the overall or the satellite portfolio of an investor for these sectoral / thematic funds? And maybe we can start with one of those funds that you may be liking and why so.
Got it. So Neeraj, look, I agree with you that semantics aside, we are talking more of a satellite approach out here, which is more a tactical approach and not a core strategic part of any investor's portfolio. So when we talk of tactical allocation, typically our approach, Neeraj, has been an 80-20. 80 for strategic long-term investments and 20 more for tactical short-term plays, basically in a portfolio where client can assume that kind of a risk and the profile permits, obviously with that caveat. Right. So when we talk of this broader umbrella of 20% tactical approach, I fit in everything. It could be an international allocation, it could be a commodity allocation, it could be a sectoral or a thematic per se. For me, that's a tactical play, which means it's more short-lived and the movement could perhaps be a little faster out there. So from that perspective, Neeraj, if you recall, I think we had a conversation around a month back where I kind of maintained my view with the on IT as a sector. And I was pretty bullish on that. Last 1 month return for IT funds or IT index per se has been almost 7 odd percent. Last 1 year return has been 35 odd percent. But I continue to remain overweight, or what do you say, positive perhaps on IT digital as a theme. Right. So it's a slightly more broader context which I'm taking, not per se the IT index, but perhaps a digital theme overall, which would mean all your digital plays, few large cap and mid cap IT stocks as well. My prima facie, the reason is very straight and simple. I think it's more a part of the overall Trump play globally. US has been seeing a massive resurgence in all the tech stocks, which will kind of percolate down to India also. And with the rate cycle reversing, this is a highly rate sensitive sector. Rate cycle likely to reverse in India and rate cycle already reversing in US means extremely positive. If US companies do well, Indian companies will have a lot of order books flowing abroad. They are the major service providers to quite a number of US companies and European companies. So I think overall our view remains positive on the sector per se. And with respect to funds, if you want to name a few, I would perhaps go with the Franklin India Technology Fund or a Pru ICICI Technology Fund on the same.
Okay. Mohit, what would the risks, major risks be? You briefly may have spoken about it, but if somebody wants to invest in this, what are the major risks that somebody should keep in mind?
Look, Neeraj, if you're talking per se of the IT as a theme, I think a larger part of the rally has got played out, to be very honest, right? A US rate cut of 75 bips has been taken in. I don't know how much the curve permits now further, and India might not have a very prolonged rate cut cycle this time, given the inflationary headwinds and we're all around, right? So the bigger challenge to my mind, is that the rate cycle might not be very prolonged. The larger part of the gains has already been taken in. And I think, look, honestly, out here, the mid-cap IT space seems to be a more reasonable play. And perhaps the bigger portion of bullishness is around the digital plays in the ecosystem, right? So finding a right mix in a fund can be a little challenging out here. My submission would be for investors to be extremely cautious and go only with the advice of a financial advisor and as per your profile. And you have to be fairly nimble if you actually try and get into this space. Then you have to be nimble. The view out here is like a year's view.
Okay. Point well noted. So that's on the tech side. Now, Mohit, I would probably request you to one more, but before I do that, Juzair, I'd like to come to you on innovation funds. There aren't too many out there in the market, right? I mean, are there some particular houses? I'm not asking you to make a recommendation, but give an example of any particular innovation fund. It need not be an exhaustive list, but the one or two examples that might be there so that viewers have clarity. And Juzair, couple that up with what is the kind of holding period that you think of when you think of a fund like an innovation fund? Not too many people would know about, the merits and demerits or the risks and pluses of an innovation fund.
Yeah, so actually, so innovation will also, embrace digital, right? So to a certain extent, the digital play also comes down over there. And to name a few, you have actually, one is Nippon Innovation Fund is there. Then you have Bandhan, then you have Access Innovation. So these are the three as a top of the mind recall. I think there are around six funds is there. I think even Tata has got an innovation fund. So so these are the funds which I could name in the space which you have, and I believe quite a lot of players will start looking at this because I think one, alpha generation will be possible in thematic funds, but you'll have to be very, very cautious. You may be able to you have to be have the willingness to take a hit, right? So that is something which one has to look at also. Like, a classic case has been when you look at the defense sector, HDFC Defense Fund, we saw in a 1 year, guys getting a 10%, 100, nearly doubling the money in 1 year. Whereas in when MOSL came out, the NAV is down to just around $9. So it's a 10% loss. So the timing of entry and exit is also very, very important. And I think once if you get a return which is more than 20-25% in a year, I don't think you should wait for it to play out more. So anybody who's made money in, like, let's say HDFC Defense Fund, he should at least remove his principal out, and then he has a opportunity to play on the entire balance amount of the money. So I would look at a time period of around 1 to 2 years is what it can play out in, because we are looking at more of this as it's not a core portfolio, more of a satellite, and with a 10% type of an exposure to these teams is something what could make sense.
Okay. Mohit, I'm sure I haven't missed it, and we'll need to get to queries in a moment, but aside of the IT thematic, anything else that stands out for you?
Look, Neeraj, I think, and that's more like a consensus trade on the street, the banking, financial services and capital market play is something which is perhaps picking up now. It's already picked up a lot of steam in last one and a half month. And if you see the overall sector, it's been a laggard, stark underperformer for last couple of years put together. So the private banking space, the large names in the private banking space, even few of the PSU names, and more importantly, the financial market plays, the depositories, exchanges, the wealth management plays. I think that's one space which is looking extremely attractive, very reasonably priced to my mind. However, investors have to be cautious that if you buy any large cap or a flexi cap fund, by virtue of they're trying to beat a particular benchmark, they're already having 20 to 35% exposure in financial services as a space, right? So if you're wanting to go to an exclusive banking financial services fund, then you are taking that much more additional risk. So, but other than that, yes, I think that's one space which can be now played out, and it's looking extremely positive to us.
Again, okay. So it's a bucket, and it's interesting because today, or I think last night, Motilal Oswal came out with a very large report as well of the capital market sector, and almost everybody seems to believe that this is a multi-year or maybe a decade and a half story ahead with the kind of penetration levels that India has on multiple such things, and therefore maybe these businesses, capital markets, and maybe even banks which are trading at good valuations. Okay, so keep that in mind. But viewers, remember, for each of these, you need to ensure that it is a part not of your core portfolio but the satellite portfolio. You need to know why you're buying into it, and you need to be, at times, viewers, much as we like to tell you that in mutual funds you should buy and hold for a really long time, in a lot of thematic or sectoral funds, at times it might be prudent to even get out at the right time and not necessarily hold it till maturity, because a lot of times cycles turn and you need to be able to know that before you get into thematic funds. So please bear that in mind. Having said that, I know a lot of you wait for queries to be answered. We are going to take the liberty to ask some of the queries that have come in today's show as well to our guests, and then try and get the answers. So the first one is from Devahuti. Devahuti is aged 26 years. Devahuti's question is that if I opt for a 10,000 rupees per month SIP starting this month, which I believe is December, with an expectation of a 15% return over 30 years, how should I balance my portfolio? Mohit, can I start queries with you?
Yeah.
What would you have to say to Devahuti?
Okay, look, so the time horizon is extremely long, which is 30 years. That's a great time horizon. I would rather advise him to go with a 4-3-3 approach, which means a 4,000 in a large cap index fund. Out there, he can start with a Nifty 50 index fund, a 3,000 in a mid cap fund, and a 3,000 in a small cap fund. And both of those other choices could be active funds. On the mid cap side, you can go with an Edelweiss mid cap. On the small cap side, you can go with a Bandhan small cap. So a large, pure mid, pure small, that should be good enough and to start with.
Okay. Juzair, do you have any advice?
So I would actually be completely aggressive, and I would actually recommend her to do just a split into two parts. One a small cap, and one would be a mid cap, because now the whole small caps size itself has undergone a change. Like, we may see that SEBI's definition of small cap is still the same, right? So the stocks which you see in a small cap funds are pretty large in sizes. And with a 30-year time horizon, it's a fantastic time horizon, and that's a great way to build alpha. Maybe after 20 years, which can change the portfolio, but I would put it more as small cap and mid cap.
Okay. Well, Devahuti, I hope you got the answer that you're looking for. Aggression may not be a bad idea, I think, per se, because of the time horizon and the age being on your side. Not that age is not on Prakash Maheshwari's side, just a little bit later, 53 years of age. And Juzair, I'll come to you on that one. And Prakash Maheshwari asks, is whether if January or February is a good time to load the mutual fund portfolio with a large lump sum investment, or should Prakash Maheshwari make the investment now in the month of December? Now, this is serious timing-led question, Juzair. I'll come to you first on this one. Any thoughts?
So I don't think that any month makes a difference. So for me, all the months are good months, and in fact, so whether January or February, March, April, May, June, all the 10 months are also good months. So I have no idea on what basis Jan and Feb has been considered by Mr. Maheshwari. But so according to me, it depends on what's the time horizon, what he has the money for. So if he is looking at a longer term time duration of 5 years plus and all, and considering his age, I would actually 50% of the money can also be looked at as multi-asset funds, and 50% could be into a flexi cap. So you have and I'm assuming that the duration would be 5 years plus. So you could make a reasonably composite portfolio in the next 5 to 7 years. So that's what I would, and maybe stagger the investment. The multi-asset allocation could be done just now. So that would be 50% of the money, and the balance 50% could be spread in the next 3 months. So by March, you can complete your investments, and at least you will have two major events out. January is you'll come to know whatever Trump is doing, and in by March, we'll be even through with the budget or whatever it may announce.
Okay. The next query is from Bikash Dhali, age 45 years. Mohit, the question is for you. Bikash asks, what are your thoughts on Tata Nifty Travel and Tourism Index Fund? Any thoughts here?
Look, I think the whole play, Neeraj, out there is on the increased mobility of Indians, not just within the country, but also outside the country. And there are, and all these hotel stocks, all your perhaps eating out, staying out, travel stocks, right? And there are multiple other ancillaries to this entire thing, which are doing extremely well, exceedingly well. In fact, I think what do you say, the capacities are overbooked. The flight fares, if you were to check any time from 20th of December to 31st of December within the country, there's nothing which comes to you below 30 to 35,000 to 50,000 range, right? Honestly, sometimes it feels like going abroad is a cheaper option. So given all the scenarios and the way Indians are lapping up to the concept of traveling more and more, I think it's a great long-term idea. Honestly, is it a good bet for next 6 months to 1 year? I'm a little skeptical, because the whole basket per se has risen a lot. Post-COVID, there's been a euphoria on travel, and I think that's got suitably and adequately got captured by a stock market across all the sectors and the stocks which are linked to this entire concept. So my sense is perhaps it's got already built into the price. However, this can always surprise you on the upside. So if you're getting into it, get in with a view of at least 3 to 5 years, not with a shorter term.
Got it. Okay. Thanks for that. Very quickly, Juzair, one final query. I'm trying to squeeze this in limited time, but Prathamesh, age 57 years, is asking, is it practical to expect 20% annual return from mutual funds across 10 years? I think the answer is a no, Prathamesh, but let me get Juzair to answer it. But if it is practical to expect 20%, please suggest good funds that I can invest in. Jose.
No, 20% is not going to be possible. In fact, we had a historical average. If you see even the Sensex return is around 15%. And as we go ahead, I think even that 15% is going to be tough. So, and in fact, always the more return is better. So your expectation should be less. And if you are getting a surprise on the upside, I'm sure you will be able to absorb any good returns which you're getting in. And if you want to do, the only place maybe where you could expect some sort of a better return, because 10 years is a long period, you get the benefit of power of compounding also. But the only place where you could get this type of a return could be being aggressive. So it could be only a small cap play or a pure thematic or a sectoral play. So only if you have that appetite, and if I look at your age profile, it doesn't seem that you should have that type of an appetite. Right? So you should lower your expectation.
Lower the expectation, sure. Okay, we are out of time completely. Gentlemen, thank you so much for taking the time out and being with us. And that's a wrap on this leg of the Mutual Fund Show.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes.
Hello and welcome to KYC, your daily deep dive into the world of India's top companies, only on NDTV Profit. And in an ever-evolving stock market, information is plentiful, but clarity is hard to come by. KYC, Know Your Company, is where change that every day, and we unpack a story, the strategy, as well as the fundamentals of one NSE-listed company every single episode, giving you the edge to invest with confidence. Today, we are talking about Bondada Engineering, which is in focus, and this is a relatively new listing. Of course, the debut has been made just this very year, in fact, in the last few months. And since then, we've also seen some staggering growth coming through for Bondada Engineering. Now, as the name well, suggests that the company is in fact into engineering, procurement and construction services. Also, well, looking at largely focus in telecom and solar. Now, it does produce and supply LED lights and building materials as well. So it does have a little bit of a diversification going on, and that's very evident in the kind of margin profiles that you will still see in just a bit. But for now, this is your overall revenue breakup with well, a majority of your revenue is coming in from the telecommunications space, followed by solar, and then a little bit towards products. That's where your, well, the bulk of your contribution to the revenues is coming through. That said, in every episode, what we try to do is we try to rate the company based on a handful of parameters. This would include something like the income statement, the balance sheet, cash flows, as well as return ratios. And, among the other set of parameters that we also talk about is, well, the order book, shareholding, street cred, as well as street coverage. So, and with that, on that note, also, let me get in my colleague Anushi, who's going to join us and shed more light on the company. And both Anushi and I will take you through the ratings of the company as to what we make of how its performance has been, as well take you through some of the strengths, weaknesses, opportunities, and threats here. So, Anushi, thank you so much for joining in here. Let's start off with the income statement. How are you looking at things develop?
Well, thanks for that, Agam. So, since its listing in September 23, we are seeing pretty strong numbers from Bondada Engineering that's reflected in its stock prices as well. Now, coming to the first metric, which is revenue, we are seeing FY24 revenue stood at about 801 crore. If you look at the last 3 years CAGR, this is at 41%. So a high CAGR growth that we've seen in the last couple of years. Even EBITDA stronger growth here as well. 62% is what we are seeing. 68 crore is their FY24 was their FY24 revenue. EBITDA margins, while they were in 9% of range, in FY24, they've fluctuated between this 9 to 11% range in the last couple of quarters. Net profit also 46 crore of net profit in financial year 24, and this is with a 75% of a 3-year CAGR growth that we are seeing for the company. So pretty strong numbers on the income statement side. But Agam, let's walk through the balance sheet numbers as well.
Right. Well, Anushi, given the fact that we've seen such strong numbers, and especially in terms of profitability, the balance sheet is in a relatively good place too. So if you consider the shareholders' equity, which includes accumulated profits over the course of the last few years, along with, of course, the equity, well, that stands at around 272 odd crores. So that's the net worth coming in. Its gross debt is not significantly large, given the fact that it's in an EPC company, and in fact, it's coming in just about 115 crores. And of this, remember, the cash and bank balance still stands at around 69 odd crores. So the positive is that this debt is actually negligible, and certainly the overall debt to equity is at a very, very low ratio considering the kind of equity that it has and the kind of net debt that the company has. So that's another thumbs up. So far, at least as far as the income statement and the state of its balance sheet are concerned, well, both on, well, pretty stable ground. But what about cash flows, Anushi?
Now, if you look at the cash flows from operations, we've seen a negative amount in this first half. As of September 23, that cash flow from operations stood at 53.3 crore. This is a negative number that we are looking at as compared to 54 crore in as of March end. Now, do note that this is a company where there are high working capital requirements. So this is one of the reasons as to why we are seeing this. So just to take this number as the standalone value would not be pertinent, but net cash flows, however, were 3.22 crore in first half of this year compared to 3.81 crore. So net cash flows have majorly remained in line. So this was aided by higher investing and financing cash flows as we speak. So this is the overall view on cash flows that we are looking.
So, well, obviously a neutral rating here because it's still half the year done, and perhaps you can get a better idea of your overall cash flow situation towards the end of this financial year. But I'm also going to talk about, the return ratio. So we've got the income statement, the balance sheet, and the cash flow statement out of the way. What does it mean in terms of certain operational metrics, profitability metrics? So if you consider the return on equity for FY24, that stands at a pretty stable 27%. Now remember, the benchmark that we are working with is around 20%, and that's what the street also works with. So anything over the number of 20%, certainly a thumbs up. And it's the same for capital employed. In fact, that is an even better number because that stands around 36%. So given the fact that you have such strength as far as your ROCE and your ROE is concerned, again, well, I would give it a thumbs up. So far the company has been doing pretty well. What's also a big positive is the visibility for the company. So Anushi, what can you tell us about the order book here?
Agam, very strong order book that we are looking at. Their order book stood at about 5,342 crore, and this was as of October 24 figures that I'm giving. So just comparing it from the FY24 levels, FY24 they had closed with an order book of around 1,759 crore. So to see this number reaching to this 5,000 crore plus number, seeing a 3x growth in this. So even taking their last year's FY24 revenue into perspective, which was around 801 crore, a significant book-to-bill ratio that we are seeing, and this is expected to get delivered in next 18 to 24 months. So a lot depends on the execution of these orders, which will reflect a higher revenue growth for the company. So a strong order book is what we are seeing for Bondada Engineering.
And you know, at least as far as the visibility is concerned, the company is sorted there as well. Now let's talk about whether or not the company actually shares a rather wholesome scarcity premium. At this point in time, it looks like not really. So firstly, remember that this is a 7,000 crore market cap company, and in terms of its shareholding, what we are watching out for is 63% held by promoters, as you can see, and that hasn't changed over the past couple of quarters. FII holding has gone up by just a tad bit, but again, your overall holding for FIs is not significant. And when it comes to maybe some of the others, well, that particular holding stands at well over 35%, which also means that the float for this particular company is well over a third. And because of that, well, while we could perhaps give you, it's going to be a mix somewhere between a neutral rating and a thumbs up rating. But the fact that, this is a new company and we're just waiting for how things could potentially pan out, we're going to give it a benefit of the doubt and going to give it a thumbs up. So that's as far as shareholding is concerned. But not done too badly, Anushi, since its listing.
Absolutely not. In fact, the investors holding in this company since their IPO times would be having a field day with just this one stock itself. It's gone up over 19 times since its listing in September 23. So what used to be around, even if you just look at the beginning of this year, the stock was trading in the range of 85-90 odd rupees. To see the company from that value to this is just staggering. This is reflected by the kind of financial performance, the metrics that we've discussed, so strong numbers coming in from there. Do remember that since this is a newly listed company, there's no street coverage available on this as we speak. So this was the overall build-up that we are seeing on the street performance, Agam, as we speak. And dividend yield also, if you look at, that was about 0.02% for the company. Of course, this is a high growth company. It's still in the beginning of its phases with the kind of order book it has, with the kind of working capital it requires. So this is what is happening in terms of street cred.
Right, point taken. And again, we must remember that this is, as Anushi's mentioned, it's a company which is continuing to invest in the growth that he is looking forward to, and considering it is also looking at expansion in several other areas, well, is a potential reason why the dividend yield is not very high. Of course, it's also a newly listed company, so you never know that this dividend yield may just improve over the next few quarters, considering its profitability profile is, well, it's pretty stable. Of course, in terms of street coverage, there isn't as much. And it's also a relatively smaller company in terms of market capitalization. So it would probably fall in the small cap universe at the moment in the classification of things. So if you consider the overall ratings at the moment, with all the factors that we've spoken about, as you can see, it's a thumbs up for income statement and balance sheet, along with something like a return ratios, cash flows remain neutral. And among the other factors that we are considering, well, we have the order book, shareholding, street cred as a thumbs up, and street coverage would probably be, a neutral. And on account of all these, I'm assigning about 0.5 point for neutral, which takes the total score for the company, the total rating of the company, at a whopping 7 out of 8. So not bad, at least as far as its will show so far is concerned. But the question really is that where do its strengths, weaknesses, opportunities and threats lie at the moment then? And with that, Anushi, let's talk about the company's strengths and weaknesses.
Now, if you are to look at the strengths, first is the strong order book position. We've already emphasized on that the company has over a 5,000 crore of an order book value currently, which is to be executed in 18 to 24 months itself. So a high book to bill ratio that we are looking at. In fact, if you look at the tenders also, they've submitted over 5,975 crore worth of tenders, with tenders in pipeline of about 2,437 crore. So this remains as a very strong point for the business. Along with that, what is another focus point for the business is its long-term contracts in both its telecom and solar projects, which are its main two business verticals. Even if you look at as of FY23, if you look at how they were positioned with their customers, about 90% of their revenue comes from customers with more than 3 years of relationship. So this is another point we should be considering. But coming to the weaknesses of the business, they are also dependent on a limited number of customers. So any kind of deterioration in the relationships with any of these customers would be a point which could be a pain point for the business. Other than that, as we've seen in this year's cash flows, it was a negative cash flow operating number that we had seen, as the business requires high working capital for the kind of orders it has. So sizable amount of working capital for the continued operation and growth. While it could be a positive also, it could be a negative, impacting the cash flow growth of the company as well. So these are the strengths and the weaknesses that we are seeing. But huge opportunities, Agam, especially when they're talking about that railway space.
Yes, Anushi, actually very interestingly, because if you're considering railways, if you're considering something like green hydrogen, BESS, along with something especially in the renewable portfolio, now we do know that all these areas are high growth areas, something that's been picking up over the past 3 to 5 years, and it does seem like it's still at just about done with its nascency, and it could potentially see a lot of tailwinds in terms of growth, and which is why these are some of the potential opportunities for the company moving forward. It's looking to expand footprints in the international markets as well, in telecommunications and the renewable energy space. So that certainly could be the other area of opportunity. In terms of threats, what we are watching out for is dependency on EPC and O&M contracts, and to be honest, this is just the core of the business, so I wouldn't exactly call it a threat, but perhaps to a certain extent, the threat here is the subject to cancellations, and that perhaps is the problem with all the companies in the sector. And the other one would be intense competition. Well, we do know that a lot of its peers, a lot of its relatively larger peers, have a significantly higher exposure to the many sectors that it already operates in. So the competition could always be a little bit of would always be a little bit of a problem, or would be a challenge in that case. So that's something that we're going to keep an eye on as well, as far as Bondada Engineering is concerned. Anushi, on that note, thank you so much for joining us and taking us through those insights into Bondada Engineering. What we must remember is that at the moment, given the fact that it's shown you a good amount of traction towards the positive end on the various factors that we spoke about, the question really is that how much of it can be sustained. And it does seem like, with the kind of visibility that we're seeing, the kind of order flow that the company has, as well as the plans on the annual, when it comes to not only the renewable space and the telecommunications space, but also its plans to diversify in many of the up-and-coming growth areas, is something that could very well play in favor of Bondada Engineering. On that note, let's shift focus and listen into the management itself. And we in fact caught up with Raghavendra Bondada as well as Satyanarayan Bharatran of Bondada Engineering. And here's what they had to say about the company's growth prospects going forward, as well as the strategy. Listen in.
Yeah, yes, Anushi, we are basically in EPC segment and O&M services in both telecom, EPC and solar EPC, that is renewable energy. The company is progressing in both these segments. Both are very much required for the country. One is Digital Bharat, the second one is the renewable energy mission. And we have been there in this telecom business past 28 years, actually including my previous experience. But this company is formed in 2012, and thereafter we ventured into the solar EPC in 2017 onwards. We have been working on good sizable orders. Going forward, we have very good order book is there for next 3 years. Right now we are having confirmed order book of around 5,300 crores plus orders, and it's a huge amount of solar EPC works are there. As you all know that a lot of renewable energy is to be deployed in the country. Both in solar, wind, even pumped hydrogen, green hydrogen, even pumped storage, battery energy storage systems. A lot of technologies are emerging into the market. So a lot of renewable space is there. We are looking very bright future for next 3 years as well as next 5 years. We have the business plan available. And next 10 years, I am seeing that spectacular growth is going to happen in both the segments, telecom and renewable energy space.
Mr. Bondara, you mentioned that telecom and solar is your core business trends, higher segments that we are looking at. In fact, if you look at this H1's trajectory, also 63% of growth that you've clocked in, even in FY24, 100% plus growth. Want to understand in these segments what is leading to this kind of an upside that we are looking in growth, and is this expected to sustain for the next 1 to 2 years also if we speak? So I want to understand the revenue growth picture for FY25 along with FY26, if you can give a perspective on that.
Yeah, yes, last 12 years our growth has been the 53% CAGR, CAGR 53%. And similar growth we are expecting. In fact, actually this year onwards we are going to make it double. Actually, 100% growth is there. Last year we had done around 800 crores revenue. Even future next 3 years we are going to make it double year on year, because actually we have the confirmed order book which we have to deliver in next 2 to 2.5 years. We have the sufficient order book to make it happen, to make it a double of revenues in year on year for next 3 years.
That's quite a
in both telecom EPC and as well as the solar EPC.
Yes, surely that's quite a solid trajectory that we are looking at. In fact, you've mentioned about the order book. Let's get perspective on that. So in the last 6 months itself, we've seen a 3x jump in your order books that stand at about 5,342 crore. In the last 6 months, I want to understand in this first half particularly what has led to the surge in orders that we are looking at, because if you look at the FY24 number, the number was in between 1,300 mark. So what has led to this growth in orders that we are looking at, and if you can give us a perspective on the breakdown of your order book and the order inflows expected over next half.
Yes, as I mentioned, both these segments, solar, renewable energy EPC and as well as the telecom EPC, the bright future is there. So a lot of tenders are being floated across the companies and across government organizations, even private organizations. A lot of tendering process is happening. So last 6 months, we have been got into the public sector companies, participating in public sector companies tenders, because we have acquired a lot of credentials to participate in central government and public sector companies. That's the reason last 6 years we have participated, we have secured good amount of order book, and similar growth is going to happen. And my order book is going to be almost around 8,500 crores to 9,000 crores by March 2025. After reporting the March 25 numbers, as you already mentioned that projected number of around 1,500 crore of March 25.
Okay, so 5,000 figure moving to 9,000 figure as we speak. How much do you plan to execute in the next half of this order book? If you can give us a picture on what usually is the execution period of this orders that you've received.
Yeah, all these orders, whatever is confirmed orders are there as of now, that 5,300 crores. Out of that, actually around 1,200 crores is our O&M, which is running into another 3 years to the 5 years time. But rest of 4,000 crores order which we have to complete in next 18 months to 22 months time, that we have to complete it.
All right, Mr. Bondada, one interesting thing about your mix, if you look at the revenue mix, now order book 75% is solar, but in the revenue composition, it is telecom, which is the leading one with about 59% of mix. So going forward, with a 100% increase that you expect in the revenues forward, what is the kind of revenue mix also? Is solar going to be the focal point now, or is it on telecom? If you can help us with the breakup between the segments expected.
Yeah, solar is going to be the major contributor for going forward, but I think as of now, whatever numbers, I think you must have those numbers. But going forward, telecom is going to be around 30 to 35%, and solar EPC is going to be around 70 to 75% going forward numbers.
All right, so that is the outlook on the mix that you've given. Another vertical which you plan to expand on is the railway sector, and the plan is to make it as big as other verticals. I want to understand the rationale behind expanding in the railway space, and what is the kind of contribution that you're looking from this area?
Yeah. In addition to this telecom and solar EPC, these are both are growth segments, and even Indian Railways is also coming up with huge budgets on their safety projects. The safety projects means the Kavach and as well as the barricading of those high-speed trains, semi-speed, high-speed, and then Vande Bharat trains by crash barriers. So these two activities we are qualified because of with our past credentials, past experience. Right now we are participating in even in Indian Railways tenders, that is of passive infrastructure services to as a EPC, passive infrastructure services to this Kavach projects. Government of India has given budget of almost around more than 30,000 crores to be deployed in next 3 to 4 years. So we are easily qualified for these kind of tenders. So we are participating even in railways. Now we already identified around 7 tenders. We have participated in 3 tenders. And this is going to be another vertical because railways are going to build their own private network for their LTE network, which is required for Kavach implementation. We are well qualified, well positioned to execute these kind of projects. We are well qualified. So even railways are also, we are looking at railways. Our railway segment is going to be a big vertical, as big as our telecom vertical. Maybe down the line, next 2 to 3 years, we might be growing maybe around 2,500 crores of vertical, railways vertical.
Well, that's interesting. 2,000 to 2,500 crores from the railway vertical. That's what you expect. Mr. Bondada, final question to you, a brief one. I want to understand your capex plans. Also, there have been some board approval on the 500 crore of fundraise. Is it for that? Are we looking at? If you can just give a perspective on that in brief.
Yeah. We have intimated to the stock exchange up to 500 crores, but thereafter we have made a lot of internal discussions. Now we are looking at anything between 250 to 300 crores through preferential allotment that is going on. I think next 2 to 3 days we are going to close that preferential allotment. Rest, our working capital requirement at this point of time is around 450 crores. So 300 crores we are going to pull from this preferential allotment, and another 150 crores we are going to make it from our debt route. So with this 450 crores of working capital requirement, I think we can easily execute our projects well within the timelines. And our prime motto is to execute projects on time. That's what actually we have been striving for it. And none of the project is delayed because of our reasons so far. So we have secured the good amount of order book, and people are there on ground to execute. And now we are in verge of pulling the funds so that actually we can execute these projects well within their time.
Right, that's the management telling us about all the plans on the anvil for Bondada Engineering going forward, being in growth sectors. And just to reiterate, their order book at the moment. Now, as Anushi was mentioning earlier, the order book as on October 2024 stood at a little over 5,300 crores. Do also remember that its annual revenue of the company stands at around 800 odd crores, which means that at the moment, it has a significantly large order book, nearly 6 to 7 times its annual revenues for FY24, and that basically gives you a good amount of visibility. Not to mention that over the course of the next 2 quarters, these 2 quarters tend to seasonally be the ones which have a relatively larger awarding activity coming through, especially the last quarter of this financial year. That's the January through March period, where you will have a lot more awarding for the entire sector. And that's the potential reason why you're seeing such strength in the company going forward. But on that note, it's a wrap on this edition of KYC, but lots more lined up on the other side. Stay tuned to NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know.
Well, thanks so much for tuning into India Market Close. There is a bit of a cool off into select group of stocks, and the markets at large too very subdued. Remember, we spoke about this possibility in the morning that we may have the index consolidating or being subdued, but specific pockets could do well. So the belief was that metals, for example, could do well in the session today on the back of the move yesterday and the Chinese stimulus news today. But if you pull up the Nifty Metal Index, for example, and will come up on your screen in just a moment, you will see that it's in the green, but by a very, very thin margin, if you will. Expectation also was that the capital market stocks could be active today. I think the bunch of them were, but we'll get to the individual names in just moments from now. Keep in mind, the market breadth should come up on your screen. This is what, okay, this is 361 and some as many others which might be active. I'll mark them in a moment from now. The market breadth should come up on your screen. Slightly sluggish and in favor of the declines, but marginally about 6:5 in favor of the decliners. Heat map on the Nifty or the Nifty 50, and I believe a fair degree of red, yes indeed, but as you can see, no big gashes per se. I mean, Bharti Airtel is the top loser with 2%, then a Reddy's, Trent, the Adani Twins, HDFC Life, ONGC, TechM, about 1% kind of a loss. The person or the group, the set of stocks which is putting the real pressure has to be Reliance Industries, down another % in the session today. Heavyweight stock down in trade. What is doing well? Again, not too many. Shriram Finance slightly, a little bit of IT flavor with Wipro and HCL Tech and Infi. So continuing from yesterday's move. The BSE 500 winners and losers very quickly before we get to our guests and try and understand what to do in a scenario like this. So there is some strength in a clutch of life insurance names and asset management names for sure. Varroc Engineering there's an announcement today on Varroc Engineering, and that stock is up about 10-11% today. Some strength in Clean Science, La Opala, Rosari Bio. So selectively, some chemical names too have done well. What has not done well? Taking a pause after a really long time is HEG. So good to see. Trees don't grow to the sky usually. CEAT corrects after yesterday's move. CE Info, after that 10% uptick when they announced that they are not going to follow up with the Rohan Verma, with the subsidiary investment wherein the Rohan Verma would be the CEO. I think this corrects today. But yeah, it's kind of few and far in between. Just before I get to my guests, let's get in what European indices are doing just to see what the world markets are up to. Because remember, US was slightly sluggish yesterday and Europe too, slightly sluggish in trade. Kush Bora joins in to talk about charts and what to make of the sluggishness in the index today. I believe Vineet Bolinchkar would be with us to talk about the fundamentals as well, and Aditya Agarwala along with Kush to talk about what the charts are indicating. Gentlemen, all three of you, thank you so much for taking the time out. Kush, how are you approaching trade today? The Nifty seems a bit sluggish. Is it prudent to not take a trade on the Nifty or the Nifty Bank?
Hey, hi Neeraj. Hi Aditya. Hi Vineet. On the Nifty, you're right. I might just for now, just to see, where this, 3-day mini downturn profit booking session, whatever you want to call it, kind of settles. The view is still bullish. It's just that I just want to see this settle first, because for the last 3 sessions, including today, in fact, the markets have been making a lower high, lower low kind of a formation, which is not a healthy sign. But, to put it in context with the kind of move that we've seen from, late November onwards, this is par for the course. So I'm not too flummoxed by the kind of last 3 sessions that we are seeing, but at the same time I would want to perhaps see where the Nifty is settling and then initiate a long position. Anyway, for me the support zone comes in at 24,300, 24,500 kind of zone, where the Nifty is respecting that level anyway. I am more bullish on Bank Nifty. Just one last point on Nifty. The PCR has actually come close to 0.8, close to those oversold territories. So if we spend some more time consolidating, I think we'll hit those oversold territories and rebound from there. So Nifty, as I said, still bullish, but just waiting for a confirmation to get a long trade. On the flip side, fairly comfortable on Bank Nifty. Here we've got the golden crossover of the 20 and the 50-day moving average. The PCR is sitting pretty at 1. So I think if you've got long positions on Bank Nifty, hold. If you don't, you could still initiate long positions here for targets of 53,800 and 54,400, and your stop loss comes in at 52,700. So Nifty is just a wait and watch for now, given the sideways movement, and Bank Nifty is something that we still play, favor for long.
Okay. Aditya, is your view different? Are you trading the benchmarks at all, or are you sticking to specific stocks?
I would prefer stock specific, and the view remains pretty much the same, Neeraj, because it's a very narrow consolidation that we're witnessing on the Nifty and the Bank Nifty both. And as we move ahead into the month end, I think the ranges will become narrower. That is how usually the December months are, very narrow, thin volumes, and Nifty usually trades in a very narrow band. So I won't read too much into today's correction. Actually, if you pull out the VIX and see, VIX is also down. So that tells that there's no panic in the market as such. It's down about 1.5%. So you can have a pop again tomorrow, if not towards the later end of the session. You can have a 100-point up move in the Nifty tomorrow. So I think this range will continue between 24,400 on the downside, about 24,800 on the upside. On the Bank Nifty too, I think it's pretty much a range-bound movement between 53,700 on the upside, with supports immediately on the downside closer to about 53,300.
Okay, now before I get in stock specific ideas, just one quick Vineet, I'll come to you. Today, one of your peer sets has put out this big note on capital marketplace, right? We've spoken about this space for such a long time, but it's got about some excitement into some of the listed names. 361, there is Nuvama, there is the exchanges, so on and so forth. Vineet, if I had to kind of push you, because it's a very wide bucket now, so if I were to push you, that tell me one or two subsets and maybe one or two names, that's it, within this whole gamut of 15, 18, 20 listed stocks that are there, which ones would you prefer and why?
So 360 and Nuvama are my preferred place. I think that these stocks still have got a lot of intrinsic value in them, and they can easily move about 25 to 30% up from current levels.
But okay, Vineet, that would, okay, which is appreciated. I wanted that view. I'm just wondering, is there a longer term hold into these two, or the brokerages? I mean, there could be Angel One or what have you, or the other asset management firms, or even the pipe companies?
So we prefer the wealth management place.
Okay.
Because there is a lot of traction out there. And that continues. So they've been growing upwards of 30%, even on a larger base. And I think that trend will continue for some more time. So we remain buyers on that.
Okay, so effectively, Vineet Bolinchkar ranking the wealth companies the most amongst these capital marketplace. So that's interesting. Okay, Vineet, thank you so much for that. Stock recommendations. Aditya, I'll come to you first. Your stock ideas for the afternoon.
There were a couple of buy recommendations. The first one is from the two-wheeler space. TVS Motors looks interesting to me after consolidation. Stock seems to be breaking out of a narrow consolidation phase. So at current level, I'll be a buyer in the stock for a target of 2640 on the upside with a stop loss at 2460 on the downside. The second is Gokuldas Exports, GoKex. That is looking very interesting. In fact, the entire basket of textile stocks, chemical, textile, agro, is looking interesting. So GoKex I've picked up for our viewers today for a target of 1230 on the upside with a stop loss at 1010 on the downside.
Okay, interesting. And this actually it's a pocket that I want to talk to Vineet Bolinchkar about as well, textiles. But before that, Kush Bora, your stock recommendations for the afternoon.
Sure, Neeraj. Just before, just a quick update on two stocks that we've discussed in the past. Larsen and Toubro, we had discussed for a second target of 3950. That's been hit. The stock seeing some profit booking. I think this is also healthy. I think this is getting ready for the next leg of up move. So as in when that move starts, we'll give an update on this one as well. But for now, it's hit that second target of 3950. Also, fact FACT. This one also we had discussed has been fairly volatile. But here too, the second target of 1060 has been hit again. This one's also seen a bit of profit booking. But both these, so if the viewers have got these, then not a bad idea to take some money off the table. As in when they resume their up move, we'll share an update or maybe a fresh call on them. For today, how could you not have an IT stock in the list? So I've got LTI Mindtree. Remember, we've been discussing this along with the likes of Persistent, as some of our top picks from the mid cap space. So LTI Mindtree is something that we continue to like despite the kind of moves that it has seen. 69.30, 70 to 70 are your targets. 60 to 50 is where you place the stop loss. Blue Star, that is one other stock that has had a very good run. It's seen a good volume breakout. So this too can be considered for a long position from a positional standpoint. 2160, 20 to 20 are your targets. 2060 is where you place that stop loss.
Okay, well, so thanks for those ideas, gentlemen, all of you. I'll come to Vinit Bulunchkar on the textile companies in a moment. First, I want to get in my colleague Varsha to talk about the top 3 stocks that are there on our radar this afternoon. Varsha, what's standing out?
Well, thanks Neeraj for that. One of the analysts actually mentioned about Gokuldas Expo. So let me start out with that. So textile companies are actually buzzing for the second day in a row. Now this is on the back of where Bangladesh government has decided to sell or lease units of Beximo Group. Now out of 169 companies Beximo owns, 32 might get sold off. Of 32, 16 are garmenting and textile units. So we're seeing kind of liquidity crunch over here. Big advantage for Indian garment makers like Gokuldas Export. Then on my list I have Varroc Engineering, wherein they've came out with the investor presentation. Let's see what are the key takeaways. They've increased guidance of new business orders. For FY25 they're expecting new business orders to reach 925 crore versus guidance of 850 crores earlier. For FY26 they expect new business orders to reach 1,750 crore versus 1,450 crore earlier. Now this new business will actually add to revenue in next 3 years. Then last I have Greaves Cotton, wherein the stock has surged 18% in the last 2 days after investor Vijay Kedia bought 1.2 million shares representing 0.5% of the stake. Kedia Securities acquired shares at price of almost 208 per share.
Okay. Thanks for that, Varsha. And Vineet, it's just coincidental that Varsha mentioned that as well, but I'd like to come to you on some of these textile names. The opinion is split, right? Some people are saying that, oh, the Western companies, the retailers have already stocked up for the season. So this season may not really have too much of meaningful benefit. At the same time, somebody is saying that these issues that have happened in Bangladesh will take a lot longer to resolve, and it's actually a net positive for Indian textile companies. The market is voting with the thumbs up. How are you seeing this?
We are very positive on this set. And, while there are not too many garmenting plays in the country, I think Kitex Garment scores very well from the fact that, they are talking of doing 5,000 crores of revenue from 1,000 crores that they had done over last year. So that's a huge upside from this stock, and we expect this stock to do well. The others, I like the spinning companies because, in the next season, you are going to see a lot of business come to these guys because of not only China Plus One, but also from the fact that Bangladesh business is spilling over onto India. So I think the spinning companies will do really well. Ambika looks good. We like Nitin, as I told you. Vardhaman and Nahar Textiles are also some of the good plays to have a look at.
Okay, so textiles are one sector which is definitely in focus. The other one is capital markets play that we've been talking about. But meanwhile, since I'm now just speaking with Kush and Aditya, let me just start off by getting your take, Kush, on some of the textile stocks that have been mentioned. Fundamentally, yes, maybe a long-term play as Bangladesh seems to be imploding. But on the charts, are you liking any of these?
So a couple of them, KPR Mills had a good run, fair share of volatility, but nonetheless, a good run yesterday and today. If you see, the volumes are above the 30-day moving average, which is also a very good sign. So I think, if you're looking for, a near-term play, I think KPR Mill, that along with, Welspun Living. Now, Welspun Living, I know, is about 1% lower today, but, you have to remember that this is also on the back of very strong up move that it's had over the last 5 sessions. So some profit taking is par for the course. So KPR Mills, for targets of 1040 and then 1070 with a stop loss near 990 is perhaps, a good bet. Also, Welspun Living, I would suggest a rather more positional play on this one for targets of 190 and then 210. And the stop loss on this one comes close to about 155. So these are the 2 stocks that I've got on my radar from the textile space. Gokuldas already, Aditya's mentioned.
So KPR Mill, Welspun is also one that you need to look at very, very closely. But, Aditya, I wanted to ask what you think about CEAT. On fire yesterday, clear profit booking today. Are you seeing more strength coming in on CEAT?
I think, Tamara, it will cover the gap area which it's seen in trade yesterday. It opened with a gap up and it continued to rally, and today we're witnessing a reversal of that. So maybe closer to about 3,200 is where stock might take a pause, and from there it might resume its uptrend. Will take some time. So if you're looking to go long on the stock, maybe wait it out for stock to come closer to about 3,200. That would be a good entry point for you. Place a stop loss just around 3,100 and look for a target of 3,500 again. I don't see a major correction in the stock, but yes, after a bit of a consolidation, maybe for a couple of trading sessions, it will resume its uptrend.
Okay. I think Siat, Vineet, I would be keen to know your view as well, because it's a good acquisition that they're doing. They get into the off-highway tire segment in a big way. It's going to be, a boost for their revenues and margins, as the company told us yesterday. But a bit of a downside today. Do you think that this is a company that you're liking in this space?
So I think, most of the move has played out in this stock. And I might be a slight contrarian out here because, I read one of the notes which said that, they're looking at 8% appreciation. The stock has done fairly more than that. And to my mind, I think the stock can move sideways to down for some time.
Okay, well, the other stock or the business in focus is Metropolis. The company acquired Core Diagnostics in a deal valued at 240 crores. We spoke to Ameera Shah on the potential ahead. Listen in.
We're very excited to have Core as part of the family. It's a good quality business, but one which has not been able to shine on its own from an economic and financial perspective. But we think with the Metropolis umbrella and a very good team at Core, this will hopefully be a great partnership for both. The revenues, like you said, were about 110 crores in FY24. And the first half of this year, the H1 trend has been about 59 to 60 crores, unaudited results, of course. So it should land up at 120, 122 approximately for the year, if you go by the run rate.
Ameera, you mentioned the acquisition will be EPS accretive from the very first year, which is FY26. What is the expected incremental EPS growth in FY26 then from this acquisition?
So currently it will be small. It will not be significant. I think our EPS is approximately, maybe 5% to 7% will be the accretion that will come through Core. But that's because Core is currently not a fully mature profit-making business. If it was, we would have had to pay 700-800 crores, for this business, right? So you're actually buying a subscale business which has not fully played out its profit maturity, and standalone would be difficult for it to do so. But under the Metropolis umbrella, it actually functions as a oncology segment, and that will actually allow it to fully be able to explore its complete profitability. And we believe in 4 years, we should be able to bring it to the Metropolis margin profile. So that entire profit that will be created within our group will actually be the benefit of the Metropolis shareholder, because you're not paying for it upfront.
So, Meera, this will be spread out in terms of the growth, the fact that you said coming under your umbrella, this becomes a profitable proposition even for Core Diagnostics, or do you think it'll be lumpy? You'll do the heavy lifting in year 1 and year 2, and maybe year 3 and year 4 is when you start bearing fruit of it?
No, I think it will be reasonably proportionate. See, year 1, it will move hopefully from a low single-digit profit margin to a, there'll be a leap there, and that will come in from part of the synergies that will come in and play, some of the cost synergies that will come in, but along with obviously just the scale benefit that Core will get by just growing and sort of doing better. So every year, my feeling is that we'll see sort of a leap in EBITDA margin percentage. And that will be because the synergies will take the next 2-3 years, like we said, to fully play out. But it's not going to be that you're not going to see any benefit in the first 2 years and it'll be all back-ended. No, I don't think so.
Okay, Ameera, 55% of the 247 crore is going to be funded by cash, I understand. What is the impact of this on your cash reserves and debt profile?
So currently we have, as of September, we had about 187 crores of cash that we talked about, and obviously with December it will be higher. So frankly, the cash piece we could generate internally through accruals ourselves, and just for the sake of leveraging some debt, we may take some small amount of debt with it, but we could frankly fund it internally completely. And as we said, 45% will be a stock split, which will obviously be by the SEBI-mandated formula for Metropolis.
Also, with Core Diagnostics growing at 22% CAGR between FY22 to FY24, I know there could be an element of a low base over here. Are you revising your growth guidance for the next couple of years?
Not yet at this point. I mean, we look at Core independently. And for core, we believe that number is fairly comfortable going forward. The unorganized businesses like core and others, land up growing sort of faster on the top line, but without too much of governance, without too many sort of constraints. And obviously, under a private public limited business, you're going to put more rigor and more governance to it. So the potential 2-3% dilution that may have happened because of better governance that will come in from us at the growth rate level will get neutralized by better management capability and some revenue cross-sell that will also come in from the Metropolis intervention. So overall, we believe the 22% number is a fair number for growth for the next few years.
We'll talk about synergies and cost synergies as well in a minute, but how soon do you then expect the oncology contribution to overall revenue to grow from 4 to 10%? And what CAGR do you project for oncology specifically to your top line?
So just by obviously simple math, it will go to 10%. And then obviously if oncology continues to grow at the faster pace than the overall company, we'll obviously see the contribution sort of moving up. I wouldn't be surprised if in the next 3-4 years, you would see oncology, rather than being at 10%, which it is today, will get closer to sort of a 15-17% number in the next 4 years. So, certainly excited about that, because oncology is a very fast growing area overall in healthcare. And certainly we want to be the player that makes that difference to people's lives, especially with suffering through cancer. So it's a tough time.
Okay, that's of course Metropolis. It's interesting. Diagnostics have blown hot, blown cold post the COVID bump up that they got, but now the base effects are settled. And after dipping, actually after going all the way to Metropolis case, after going all the way to 3,000, dipped all the way to 1,100, and then now has come back to 2,200. I think the last 1 year maybe, or 1.5 years, Metropolis and some of the others would have had some meaningful gains. But the years preceding that were terrible. So 34% in the last 12 months, I think 18 months, maybe more so, from 1,000 odd all the way to 2,200 currently. I wonder if there is any kind of investment possibility into any of these diagnostic plays, Vineet Bolinchkar, whether Metropolis or Dr. Lal or any other.
So I'll give you a better one. I think Krishna Diagnostics looks very interesting. Company is guided to grow 25% CAGR on top line. Bottom line should grow even faster. And, we kind of think this stock can touch 18 to 1900 in the next 18 months.
Let's just get a chart check on Metropolis. Aditya, why don't I start with you first?
I think this is one space one should clearly focus on. In fact, not a bad space to be in, both Dr. Lal Path and Metropolis. I think give it at least 3 months to about 6 months, you will see decent upside in both the stocks. Talking specifically of Metropolis, I wouldn't be surprised if I see levels of 2,600 on the upside, and beyond that, maybe 2,800 as well. On the downside, excellent supports around 2,100, 2,050. Same holds true with Dr. Lal Path as well. Broken out from a consolidation phase, I think give it some time, stock will test levels of 3,400, 3,500 on the upside. On the downside, 3,050 is a strong support area. So both these stocks within the diagnostic space are looking good, and I think this is one space one should clearly focus on.
Between the two, what would be your preference, Kush?
Between Metropolis and
Lal Path.
Lal Path?
Yeah.
I would. I have Lal Path on my radar, but if I could just speak about Metropolis first. So Metropolis, as Neeraj rightly pointed out, before let's say 2023 early or late 2022, the stock actually has had a very vertical rise and then a vertical fall. So this recovery that we're seeing over the last year and a half, almost 2 years now, is very steady, very encouraging. So even from a trading perspective, it makes sense for someone to be into this. So for targets of 2,400 and then 2,550. Metropolis does look good, and the stop loss on this one comes in close to about 2,100. Between Lal Path and Metropolis, I would pick Metropolis. But also just a quick word on Krishna Diagnostics, since he's put that on our radar, mine especially. For Krishna Diagnostics, the stock had a very good run. We're just seeing negative divergences on the weekly setup here. So maybe on dips, close to 920, 930 odd levels, once you've seen some kind of a pullback, it will make a good re-entry point. The stock's already had a very good run. So maybe close to 925, 930 levels. Krishna Diagnostics also actually makes the cut. So I would actually pick Metropolis and Krishna Diagnostics.
Okay, Metropolis and Krishna Diagnostics is the two favorite picks for Kush. I think a couple of stocks that are in the news or in focus every few days is Swiggy and Zomato and Swiggy. It's almost as if there is no other business that is booming except for Indians that are ordering online. So the latest in that whole space is a note from CLSA, and actually a very, very positive and bullish note from CLSA. They've initiated coverage on Swiggy. Stock up 3% today off its highest points of the day, but still doing well. So they see a 31% upside in the stock price. And on the other hand, HSBC has maintained a hold rating on the stock with a bearish outlook. It gives us the perfect opportunity to do a bull versus bear case on Swiggy, which is in the spotlight, and Mahima is helping us doing that.
Right, Tamanna. So, I'll first start with the kind of numbers that, Swiggy has, and as to, what's the bull versus bear case there. Well, in terms of the gross order value, Swiggy is lacking behind. The gross order value growth is lower than that of Zomato, but it has a stickier customer base as compared to Zomato because it has one integrated platform that offers various services of food delivery, quick commerce, as well as the Swiggy Genie services that they offer. But moving on, in terms of frequency of users, again Swiggy has early mover advantage as well as the integrated app advantage, where the frequency of users for Swiggy is higher than that of Zomato. But in terms of losing in terms of its market shares, lower gross order value growth suggests that it is still losing market share as compared to other competitors like Zomato, and in the quick commerce space also Zepto. Now, in terms of the financial performance, Swiggy still is incurring a loss of around 626 odd crores in the second quarter of FY25. But the outlook going forward by the management is very positive. They are set to double their dark stores capacity by March 25. In terms of another bull case for them is that they've targeted 2,000 orders per day per dark store, which is also kind of a positive outlook coming from the management, which will help Swiggy grow further. In terms of the brokerage views, though, going forward, like you rightly mentioned, HSBC and Swiggy, HSBC and CLSA both have different views. HSBC has a hold rating with a target price of 550. What they're saying is that they do not forecast EBITDA break-even before FY28 estimates, and the food delivery will grow at a CAGR of 16% according to them, and quick commerce will grow at a CAGR of 65%. But on the other hand, CLSA has given a target price of 708 and rated it outperform. What they believe is that both Zomato and Swiggy can coexist, considering the total addressable market being such a big market, and they're saying that execution is improving with improving profits. And lastly, they are expecting gross order value growth at 43% CAGR in FY27. And overall revenue also to go up by 32% by FY27. So this is the overall view as to how Swiggy, has both boon and bane in front of you.
So I don't know if there's an unlimited upside to this kind of a business. Vineet, very keen to know your views.
I think, there are going to be some very interesting plays, just like the Dixons and the Umbers of the world. Very, very strong, focused businesses. They've getting into adjacencies, getting into consumer durables. Anything and everything that you can order online and, where you have a physical connect. I think Swiggy and Zomato would be there. So if you talk about events, you talk about, fast food, or you talk about deliveries. I think everything is going to be there. And, it would be interesting to see how they would swarm the space of other consumer durables as they grow, with their quick services. I think there's a lot of up move left in these stocks, and they only just started.
Okay. What else? I mean, there are a few stocks buzzing. It's a small stock, but watch out for Cineline. That stock has zoomed in trade today. Some really smart moves and locked on an upper circuit. So watch out for that. Stylum is up about in the last few minutes of trade. So a bit of a spike there for Stylum Industries as well. There is, of course, Dishman Carbogen, which is up 6.5% or 7% or maybe more. And all the textile names anyways have done well. So really good going for those as well. Williamson Magger from amongst the other holding companies has actually done well too, up about 7.5%, a bit of a spike coming in the last few minutes of trade. We slip into a quick break on that note. The other side, try and talk about some of these big moving stocks, some BTST ideas and more. Stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past.
All right, welcome back. Markets in that same narrow range. Not too much happening as far as the markets are concerned. I mean, I think there is a struggle here to seriously see a boost. If anything is moving a little bit, it is IT stocks. But beyond that, not too much action that we're seeing. I just want to discuss one more company that we've been talking, and one of the buzzing stocks definitely is Varroc Engineering. And I don't know if you've already spoken about it, but Vineet, I want to come to you. That they, in their investor presentation, have actually increase their outlook on their guidance on revenues, on margins, etc. Varroc Engineering as a company, if you're tracking it, and whether you are as enthusiastic about the outlook they've given as the street seems to be today.
So, I think of late, it's a late bloomer, and I think that with the guidance which they've guided upwards, I think there would be some more room in this stock to move up. But, we don't look at it too much, so, I won't be able to contribute much on this stock.
No, that's fine. You don't really look at Varroc. I'm wondering, Kush, if you are tracking it on the charts?
Well, quite a move, and it has come after a sustained up move. But this big breakout today now puts the risk reward ratio at least from a near to medium term, out of the window, where 600, 610 is a resistance zone, and if you see the high for the day also is within that. So I'll wait for a close above the 610 mark before initiating a fresh long position on Varroc. However, if I do hold it, then this is a very, very welcome move. I'll ride these profits and I'll keep my trailing stop loss close to the 575 mark.
Aditya, are you tracking this company?
Just taking a look, Tamanna, I think I would agree with Kush. We'll wait it out for some time. Let it cross 610 on the upside, though it's a very good up move on excellent volumes. Above 610, yes, I would definitely be a buyer here for a target of 700 on the upside. Maybe place a stop loss somewhere around 560. And I think stock should take out 600, 610 levels, maybe in trade tomorrow or day after.
Why right now, though, after a 10% up move?
Because what if it corrects a bit from here on? 610 is a hurdle. So maybe if it corrects on the downside closer to about 560, then maybe again, good trade to take.
Look at a 560 level if it comes through. But let's take a look at some of the other small cap buzzers in trade this afternoon, and Varsha is joining us for more.
Well, Tamanna, first on my list is Baroque Engineering, which has, so the stock is buzzing. This is on the back of the company which has increased guidance of new business orders. So for FY20, so they released their investor presentation where they're saying that for FY25, they're expecting new business orders to reach 925 crore versus 850 crore earlier. And for FY26, they expect new business orders to reach 1,750 crore versus 1,450 crore guided earlier. Then we have Clean Science, which is buzzing on the back of volumes. Now in Q2, basically the management has anticipated that the capacity utilization will increase and that will eventually improve their gross margin, and the target EBITDA for their subsidiary is projected at 25% at optimal utilization. Then we have Raymond, which is again buzzing on the back of heavy volumes. Now after the demerger of its lifestyle business, Raymond currently holds real estate and engineering a business segment under its umbrella. Then we have JBM Auto, again buzzing on the back of volumes. Now the interesting point here is the order book as of Q2 stood at 5,000 EV buses, and this order will lead to higher capacity utilization. And lastly on my list is Trident, wherein so the most of the gains in last 5 days the stock is up 10%, and most of the gains came yesterday, and today also the stock is buzzing. Now this is on the back of their chairman Rajendra Gupta's announcement of fresh investment plans for an additional of 3,000 crore in Madhya Pradesh textile sector, and this new investment comes at a top of 5,000 already invested by the group in the state. So this is the reason why we are seeing Trident up, and these are all my small cap buzzers.
Thanks a lot for that. You know, chemicals, some stocks like I spotted today have actually done well. Clean Science that Varsha highlighted, volumes are 7 times the average, and that stock has actually gained 8.23%. So really strong show here. Kush Bora, it's not just Clean Science, a couple of others have done okay too. Any thoughts here on chemicals / specialty chemicals from a trade perspective?
I think Navin Fluorine is also looking attractive. This has also had a good move today, about 3.5% up. But the advantage here is that 30 odd was the resistance zone which is being taken out. Looks like the closing will be above this level. So this is another positive for this one. So Navin Fluorine, I've got on my radar, could make a dash towards 37.30 and perhaps 38.20 kind of levels, and has a good support zone near the 35.60 mark. So for a trade, Navin Fluorine above this, a technical resistance zone does sit pretty, so can be considered for a long trade as well.
Okay, so Navin Fluorine in action this afternoon. We spoke about some of those buzzers. I'm wondering if anyone here is tracking Raymond and what is happening to that. Aditya, are you finding that interesting?
Yes, Tamanna. In fact, as I mentioned, the textile is doing well and up on very good volume. So Raymond also does look interesting to me on the chart setup. Can be a buyer here for a target of 2150 on the upside. On the downside, 1700 happens to be an excellent support area. More of a positional trade. I wouldn't venture into it for a day trade. I'll buy, hold for at least a couple of trading sessions, maybe a week, and see those levels of 2100, 2200 on the upside.
Okay, the other buzzer of the day is Religare, and look at what's happening in the Religare stock. Charu is joining us now to explain why. So the Reserve Bank of India has approved the Burman family's open offer to acquire a 26% stake in Religare Enterprises, a move that could resolve the ongoing control tussle over the non-banking financial company. Charu brings us the details on what she's gathered from her sources. Charu, this one's important because this was the pain point, isn't it, for Religare, and a lot in the public domain on the bitter battle between the two sides.
The Reserve Bank of India, RBI, has approved Burman family's open offer for 26% stake in Religare Enterprises. Now, there has been an ongoing tussle and legal disputes before a lot of regulators around this, including SEBI, Securities Appellate Tribunal, Delhi High Court even. And there were a lot of media reports coming out that there were a lot of disputes regarding the control of the entity. Now, the dispute around who will be having the control of the entity seems to be on the verge of getting settled, because the sources are familiar with the matter, and as per the exchange filings also, it has been known that RBI has approved the open offer by the Burman family.
Okay, well, Religare is certainly Vineet, what happens here if indeed there is a management change at Religare. If the Burmans come in control, does it spur interest in the stock? If you were to, let's say, if you were an existing investor, Vineet, in Religare, now would you stay invested? Would you get off depending on what comes out of that potential announcement?
So, we've already got a buy on the counter, and we believe that just the insurance business, healthcare insurance, is valued at about $400. And we think that, with the control aspect going away, if Burmans indeed do come in, they have got a brilliant platforms in place for NBFC lending, affordable housing, direct broking platform. So all the works are there in place, and these are all fresh businesses which will be lapped up very well by the market. And Religare brand is also very well known. They've got a pan-India presence as far as distribution is concerned across all the NBFC arms that I just spoke to you about. And hence, I think this stock can do really well in the coming days.
So Religare is an interesting pick. Now that its biggest problem might be behind it. I'm wondering, on the charts, Kush, are you looking at Religare?
I am, and I would say that this is, this one is not for the faint-hearted, right? While the long-term and even the medium-term trend, if you see for this one, is quite bullish, the stock has had, patches where it's corrected about 30%, 25%, and stayed there for some time. So if you are willing to go through that kind of a phase as well, then from a medium to long-term perspective, not a bad idea to consider Religare. But as I said, it's not for the faint-hearted. On the upside, you could look at, with this momentum coming around, you could look at targets of 325 and perhaps even a 345. And on the downside, you've got support close to the 265 mark. So all in all, the trend is, the major trend is positive for this one, but no stranger to a fair bit of dips as well.
In the list of stocks not for the faint-hearted, I would include a Vodafone. I would include a Paytm as well. And interesting to always get Vineet's view on it. Vodafone off its highs today, Paytm also seeing a bit of a down day. But Aditya, any of these stocks which are not for the faint-hearted on your radar?
None of them, Taman, I would pick. In fact, both, I was just wondering if you're coming to me on that. Idea of definitely no. Just that it doesn't hold on to its gains. Made a dash towards 9.5, again came back to 8 rupees. Same was true with Paytm, has seen an up move. I think there'll be a bit of a profit booking in Paytm. Maybe if between the both, one stock I have to take a look at, maybe Paytm is something that I would look at, but not at current levels. On declines is something that I would look at.
Okay. Vineet, just because, on a Paytm as well, because we've been looking at some interesting news flow coming in from that counter. What is your current take?
So, we have a buy recommendation on that stock. It is almost up 80% from when we, put out a buy. I think, this stock can easily do 1,200-1,300 in the days to come. We continue to be very positive, and in fact, you should see the way it has held out in the entire carnage of October, November, and it has outperformed, and we think that it is here to stay, the business, and should do well in the coming days.
Yeah, no, I remember very clearly your buy call when nobody wanted to touch the company with a barge pole, so there's no doubt about that. Vineet Bulunjkar, and he's still very, very clear on it. All right, we're talking about the IT space, one of the few spaces which is showing some upside this afternoon, and interesting report today from HSBC, which expects the industry growth to pick up 6 to 7% in FY26. They've also changed quite a few ratings of their top tier stocks. Puneet is joining us to take us through that list. Yes, Puneet.
Well, thanks for that. It's very interesting, as you rightly said, in both the large cap and the mid cap space. So let me get out the stocks first. They've been upgraded Infosys, LTI Mindtree as well as Wipro. As you can see on your screen, the updated target prices. Infosys has been upgraded to a buy from a hold. Same for LTI Mindtree, where Wipro has been upgraded from a reduced rating to a hold now. Target prices as mentioned on your screen. And what's interesting is they've downgraded TCS as well as Tech Mahindra as well. On the mid-cap side, they have upgraded something like an Emphasis, while they've downgraded Coforge on high valuations. What's interesting is that they're expecting the industry growth to be 6 to 7% in FY26 versus 3 to 4% in FY25. So expecting a better year going forward. They've also mentioned that while there are uncertainties from Europe as well as what's happening with Gen AI, with newer startups and newer companies also focusing in, they have mentioned that the improving growth prospects is attracting attracting investors compared to other sectors. They've also mentioned that while they are less constructive on the mid-cap IT space, they prefer something like Infosys, LTI Mindtree, HCL Tech as well as Emphasis, and banking on strong growth coming from the US market as well.
Okay. Well, Puneet, thanks for that. And that space has stood out in trade for today. Aditya, would you trade IT names in today's trade? Was active yesterday, was active or is active today? Is there more upside?
Oh, definitely, Neeraj. I think IT is one space on all declines one should look at buying opportunity, not only the mid cap but the large cap stocks as well. Infosys is the top bet within the space. I like it too. On the upside, you can easily see levels of 2,100 or 2,200 on Infosys. Emphasis is something which is also looking interesting to me. Has broken out from a downward sloping channel. A good up move in trade today on good volumes. I think here also you can see levels of 3,300, 3,400 on the upside. And maybe on certain declines, Coforge is something which also is on my radar and should be looked at. From here on, you can see levels of 9,200 and a good support around 8,900 on the downside.
Okay, Coforge on the radar as well. I mean, I don't know, Vineet, if you want to look at some of the mainline ones, or are you veering towards your more mid-cap IT companies right now?
So I think the front line has moved a lot. Mid-cap stocks look good, like Persistent Computers a lot. And there is one company that I would recommend you single-handedly.
Okay. Yep. Well, individual names certainly stand out there. In fact, we're almost at the wrap of the closing trade. We'll just take in closing strategies in moments from now. But the metal names are the other ones. The metal index not quite really strong, but doing okay for itself today. Then individual names which have perked up in trade include Delivery, include Greenply, include Indoco Remedies and Lakshmi Organics. Again, yet another chemical company which is standing out in trade. So some very interesting charts there, Vineet. I think we spoke about some of the chemical names with Kush Bora, but not with you. You have a deep understanding here based on the Q2 con calls or the recent trends that you may have seen. Is there a chemical name that you are actively recommending to your clients?
No, we are staying away from it. I believe that there's too much of flux right now in the global space. And, just stick with a few themes like electrification, manufacturing, IT, and green energy. I think is sufficient enough to put your money to work and rather than hope for a recovery. I think these stocks are expected to do extremely well.
Noted. So staying away from chemicals, but certainly the stocks have done well. I think I'd ask Kush about these stocks, if I'm not wrong. Because a lot more of them are perking up now. Aditya, I would want you to come in from a trade perspective. Any of those chemical names? Kush had liked Naveen Fluorine. What do you like, if at all?
I'll add two more names to it, Neeraj. The first one is Deepak Nitrite. That is also something which is very similar to Naveen Fluorine and which I also like, by the way. So Deepak Nitrite is also something that can be bought at current levels. 2,900 is my immediate target. 2,900, if it's taken out, can test levels of 3,100 as well. So Deepak Nitrite is one which definitely I like. United Phosphorus is something which has been languishing big time. and it's trying to form a base now. And I think at current levels, it offers an excellent risk to reward ratio as well. More of a positional trade here. Buy at current levels, look for a target of 640 on the upside. Place a stop loss somewhere around 530 on the downside. So that is something that will stand out. And I think so. Lastly, PI Industries is also something which does look interesting to me on the charts. As corrected from the peak, it's a good entry point at current levels. The stop loss close to about 39.50 on the downside. Can test levels of around 4,600 again.
Okay, I think good time as ever to take the BTSD ideas of the day. Aditya, let's start with you. Is it getting tougher and tougher to pick those in such a range-bound market?
Not really. There are pockets which are flying away, Taman. And I think one stock which does look interesting to me, though, has been flat in trade today. Polycap, I think, is a good BTST trade. Throughout the day, it's been into another consolidation phase. I think tomorrow it can pop up. So at current levels, I'll buy the stock for a target of 7,600 on the upside. Place a stop loss close to about 73.65.
And Kush, what about you? What is your top idea for tomorrow?
That's Cyient for targets of 2095 and 2120, and the stop loss for this one comes in at 2025.
Interesting, a tech name comes in. But Aditya, I'm just intrigued to ask you, usually a stock should be trending in some fashion for the charts to show an idea, right? How is it that you're buying a stock which has been flat through the day today?
Because Neeraj, I preempt a breakout. So there was a good up move if you take a look at the stock from 6,500 to about 7,300. Then it entered into a narrow consolidation phase, a typical classic chart pattern where post consolidation stock breaks out and resumes its uptrend. So that is the reason for me to pick Polycap.
Fair call. No, not doubting, just trying to understand how you did it. Okay. What else? I mean, today Piccadilly Agro is in the green. Allied Blenders was in the green for a really long time and just moved off the radar completely, but is down. But Piccadilly Agro has done really well for itself. So some of the liquor companies the last few days have had a really good run. So that's one bucket you want to watch. There is strength in AVT Natural Rubber. There is strength in Hudson Agro, 7% higher at 1160. So big move on that one too. In trade has come off from the highs of the day, but certainly perking up. So Vineet Bolinchkar, we are coming to the end of the current quarter, Q3 earnings. Maybe if Godrej Consumer is anything to go by, won't be a great quarter, but maybe some of the other companies have a good one. We have seen one bucket which had an awful quarter two, but since then has seen price stability, and that is cement. You look at it very closely. Have you been enthused by the price stability or select price hikes? And if so, how do you play that?
So we like Dalmia Bharat. You know, it's available at $110 per ton, which is the average, of a replacement value of a cement plant. And they've got some very aggressive expansion plans. Margins are good. And I think that, it's very cheaply valued from a 2-year perspective. And so I'll go with this for a 50% upside over the next 24 months.
Okay. So Dalmia Bharat in focus. I just quickly want to get your view on some of the insurance data, life insurance data we saw yesterday, today some of the general insurance names as well. Vineet, I'll come to you first. LIC obviously taking a drubbing as expected because it's losing market share. ICICI Pru relatively doing okay. Is this a space that you're liking at all? Anything that you'd want to see here in insurance or life insurance, general or life?
The stock that we discussed in the show, Religare, I think, pure play healthcare business, the best in the industry. I think, this stock can easily give you 50% upside from current levels.
50% upside from current levels. That's excellent. Okay, so Religare is something that he's looking at, that Vineet is looking at and likes quite well. We've discussed Religare on the charts, of course, but then let's look at the other big factor that we're seeing on what to watch before markets open tomorrow, the top factors that we need to see. Agam, what do you have on your radar?
Well, the first one, of course, is the OPEC meeting, which is ongoing right now. And the reason why it's important is because it'll give you an indication as to what kind of production levels the OPEC intends to hold and the kind of implication and impact that it can, in fact, have on crude prices. And this not to forget that while we may not have the US inflation data released today, it will be coming up, well, tomorrow. But there'll be plenty of expectations which will also be released overnight in the US markets, which, of course, will give us a better idea of what and how the Federal Reserve could go about, their own interest rate trajectory. But these are the two, relatively important, events that we are keeping an eye on before the open of markets tomorrow.
Okay, so OPEC is definitely one to watch out for. CPI data will come in, PPI data also by the end of the week. So these two things matter. I mean, crude prices have not budged no matter what is happening in the world. So that's one strange thing, and we'll have to see if the OPEC meet actually pushes forward their timelines even further. But I think one more thing that would be interesting to hear from you, Vineet, is whether you're looking at any of the upcoming IPOs. Some smaller IPO names open up this entire week. Any of those that you're finding interesting?
I'm just staying away from that space right now.
Okay.
Just too much of paper in the market, and it doesn't really give you that kind of bandwidth to go and evaluate each and every one of them.
Yeah, no, I mean, that could be some of the reason that you're seeing this lackluster volume. Another could be the kind of mutual fund data that we have seen, and I know you looked at it a little closely, Neeraj. I mean, the numbers weren't great. And I don't know, whenever you speak to Amphi, their point is they don't look at it month on month, year on year, because people also exit their positions in cycles. So you can't really look at it.
Also, October was just an unnatural month per se in the context of the quantum of investments that went in. I mean, such a dip is not, from over 1 lakh crores to the numbers that we had overall. But the interesting trend, Tamanna, to my mind, was that after having multiple thematic NFOs gain a lot of money, for the last 2 months, thematic NFOs have come off. Now, thematic fund inflows have come off. Now, is it because NFOs have been low? Remains to be seen. The heartening fact, though, small cap funds, mid cap funds saw month-on-month increase in flows yet again, which is actually
I think you would run out of themes after a point. Yeah. How many themes can you conjure up?
67 sectors on last count.
If you're sitting in an AMC, I mean, how many? You had the whole defense theme. I think there's a capital market theme. There's this. Yeah. I think there's a limit to the creativity that can come from some of these AMCs. But yeah, that has been a tight situation as well as we're going in. So Amphi data is one to watch out for. This has been a bit of a bummer, I would say, in terms of flows coming in. But then again, wait and watch for this to lift up going forward as well. As we close off for the day, Kush, let's round off with anything that has stood out for you in the closing session today.
Interestingly, it's the Bank Nifty that has actually stood out. Just at the start of the show, we were discussing that, if you want to go long Bank Nifty, your index was flattish about that time, 200 points up. Not a bad idea. This move could continue. So I maintain, that view on the Bank Nifty where 50 to 700, now perhaps you can push it to 50 to 900 is where your stop loss is. And for targets of 54,400 and 55,000, positionally, of course, you could still consider Bank Nifty as, a long trade. Might just help Nifty also, go past the 24,800 threshold, but I'll wait and watch on the Nifty at least.
Well, gentlemen, all three of you, let's start wrap. Thank you so much for joining in. And before we wrap up the markets, just about 1 minute, 40 seconds. So before we end the markets, let's quickly give you a wrap on the large cap space. It's ending flattish, so a bit of a recovery in the last half an hour of trade, you have to admit. Just 0.25%, so nothing too dramatic. But in the green, led by the Nifty Bank, which is actually a very interesting move there. Bring up the heat map if we can. And actually, it won't quite show the recovery that has happened into some of the banking names, but you can see the quantum of green that has come on the screen, because otherwise it was nearly 3.5 rows of red. The quantum of gains haven't been great. Shriram Finance is still about 2.5. IT still Wipro, Infy, HCL Tech, but ICICI Bank, Kotak Bank out there making their way into the green, and HDFC Bank nearly flattening out just shows the late hour spurt that has happened in the banking stocks. Not too much out there in the losing end. Bharti, the top loser, the Adani Twins and Reliance Industries. So those are the principal losers in the session today. But Bank Nifty, very good move in the last half an hour.
Maybe we should pull up the intraday of the Bank Nifty as well. That would be interesting to see. And I mean, no clear trigger there, of course, only that there's going to be a new governor who's taking charge tomorrow. But look at it from the lowest points of the day and ending near the highs of the day pretty much. So as our technical analyst Coach Bora said, just as we close, Bank Nifty is the trade to watch out for tomorrow as well. Let's pull up the sectoral indices very quickly before we get to advanced decline ratio, and then of course top gainers and losers on the broader market. I find it interesting that Nifty Realty is up 1.5%, so a bit of a up move there coming in as well. IT not bad after being slow through the day, is picking up a fair bit, and it's okay. Not a bad close if you look at the broader market. Quickly, advanced decline ratio before we get to the top gainers and losers in the broader market. Yeah, you're even Stevens, completely even Stevens. This is the kind of day. Yeah, not half bad. This is the kind of day.
Simply because we have recovered so well.
Yeah, it seems to be a good recovery coming in there. Raymond buzzing today. Varroc Engineering, after their investor presentation, has shown important and positive upgrades from the management. Nippon Life, remember you've had some of that insurance data coming in, and maybe that's why you're seeing Nippon Life doing well. CEAT is seeing a pullback after yesterday's bump up. LIC also suffering because of monthly insurance data coming in. And CE Info Systems, despite clarifications from the management on how they're using their funds and whether they're having a step down subsidiary, doesn't seem to have convinced investors so far. Well, that's the long and short of how markets have closed today. But from Neeraj, me and the team that put the show together, thank you so much for watching. We'll be back to set you up for the day tomorrow on India Market Open.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What?
Hello and welcome to KYC, your daily deep dive into the world of India's top companies, only on NDTV Profit. And in an ever-evolving stock market, information is plentiful, but clarity is hard to come by. KYC, Know Your Company, is where change that every day, and we unpack a story, the strategy, as well as the fundamentals of one NSE-listed company every single episode, giving you the edge to invest with confidence. Today, we are talking about Bondada Engineering, which is in focus, and this is a relatively new listing. Of course, the debut has been made just this very year, in fact, in the last few months. And since then, we've also seen some staggering growth coming through for Bondada Engineering. Now, as the name suggests that the company is in fact into engineering, procurement and construction services. Also, looking at largely focus in telecom and solar. Now, it does produce and supply LED lights and building materials as well. So it does have a little bit of a diversification going on, and that's very evident in the kind of margin profiles that you will still see in just a bit. But for now, this is your overall revenue breakup with a majority of your revenue is coming in from the telecommunications space, followed by solar, and then a little bit towards products. That's where the bulk of your contribution to the revenues is coming through. That said, in every episode, what we try to do is we try to rate the company based on a handful of parameters. This would include something like the income statement, the balance sheet, cash flows, as well as return ratios. And, among the other set of parameters that we also talk about is, the order book, shareholding, street cred, as well as street coverage. And with that, on that note also, let me get in my colleague Anushi, who's going to join us and shed more light on the company. And both Anushi and I will take you through the ratings of the company as to what we make of how its performance has been, as well as take you through some of the strengths, weaknesses, opportunities, and threats here. So Anushi, thank you so much for joining in here. Let's start off with the income statement. How are you looking at things develop?
Well, thanks for that, Agam. So since it's listing in September 23, we are seeing pretty strong numbers from Bondada Engineering that's reflected in its stock prices as well. Now, coming to the first metric, which is revenue, we are seeing FY24 revenue stood at about 801 crore. If you look at the last 3 years CAGR, this is at 41%. So a high CAGR growth that we've seen in the last couple of years. Even EBITDA stronger growth here as well. 62% is what we are seeing. 68 crore is their FY24 was their FY24 revenue. EBITDA margins, while they were in 9% of range in FY24, they've fluctuated between this 9 to 11% range in the last couple of quarters. Net profit also 46 crore of net profit in financial year 24, and this is with a 75% of a 3-year CAGR growth that we are seeing for the company. So pretty strong numbers on the income statement side, but Agam, let's walk through the balance sheet numbers as well.
Right. Anushi, given the fact that we've seen such strong numbers, and especially in terms of profitability, the balance sheet is in a relatively good place too. So if you consider the shareholders' equity, which includes accumulated profits over the course of the last few years, along with, of course, the equity, that stands at around 272 odd crores. So that's the net worth coming in. Its gross debt is not significantly large, given the fact that it's in an EPC company, and in fact, it's coming in just about 115 crores. And of this, remember, the cash and bank balance still stands at around 69 odd crores. So the positive is that this debt is actually negligible, and certainly the overall debt to equity is at a very, very low ratio considering the kind of equity that it has and the kind of net debt that the company has. So that's another thumbs up. So far, at least as far as the income statement and the state of its balance sheet are concerned, both on, pretty stable ground. But what about cash flows, Anushi?
Now, if you look at the cash flows from operations, we've seen a negative amount in this first half. As of September 23, that cash flow from operations stood at 53.3 crore. This is a negative number that we are looking at as compared to 54 crore in as of March end. Now, do note that this is a company where there are high working capital requirements. So this is one of the reasons as to why we are seeing this. So just to take this number as the standalone value would not be pertinent, but net cash flows, however, were 3.22 crore in first half of this year compared to 3.81 crore. So net cash flows have majorly remained in line. So this was aided by higher investing and financing cash flows as we speak. So this is the overall view on cash flows that we are looking.
So, obviously a neutral rating here because it's still half the year done, and perhaps you can get a better idea of your overall cash flow situation towards the end of this financial year. But I'm also going to talk about, the return ratio. So we've got the income statement, the balance sheet, and the cash flow statement out of the way. What does it mean in terms of certain operational metrics, profitability metrics? So if you consider the return on equity for FY24, that stands at a pretty stable 27%. Now remember, the benchmark that we are working with is around 20%, and that's what the street also works with. So anything over the number of 20%, certainly a thumbs up. And it's the same for capital employed. In fact, that is an even better number because that stands around 36%. So given the fact that you have such strength as far as your ROCE and your ROE is concerned, again, I would give it a thumbs up. So far the company has been doing pretty well. What's also a big positive is the visibility for the company. So Anushi, what can you tell us about the order book here?
Agam, very strong order book that we are looking at. Their order book stood at about 5,342 crore, and this was as of October 24 figures that I'm giving. So just comparing it from the FY24 levels, FY24 they had closed with an order book of around 1,759 crore. So to see this number reaching to this 5,000 crore plus number, seeing a 3x growth in this. So even taking their last year's FY24 revenue into perspective, which was around 801 crore, a significant book to bill ratio that we are seeing, and this is expected to get delivered in next 18 to 24 months. So a lot depends on the execution of these orders, which will reflect a higher revenue growth for the company. So a strong order book is what we are seeing for Bondada Engineering.
And you know, at least as far as the visibility is concerned, the company is sorted there as well. Now let's talk about whether or not the company actually shares a rather wholesome scarcity premium. At this point in time, it looks like not really. So firstly, remember that this is a 7,000 crore market cap company, and in terms of its shareholding, what we are watching out for is 63% held by promoters, as you can see, and that hasn't changed over the past couple of quarters. FII holding has gone up by just a tad bit, but again, your overall holding for FIs is not significant. And when it comes to maybe some of the others, well, that particular holding stands at well over 35%, which also means that the float for this particular company is well over a third. And because of that, well, while we could perhaps give you, it's going to be a mix somewhere between a neutral rating and a thumbs up rating. But the fact that, this is a new company and we're just waiting for how things could potentially pan out, we're going to give it a benefit of the doubt and going to give it a thumbs up. So that's as far as shareholding is concerned. But not done too badly, Anushi, since its listing.
Absolutely not. In fact, the investors holding in this company since their IPO times would be having a field day with just this one stock itself. It's gone up over 19 times since its listing in September 23. So what used to be around, even if you just look at the beginning of this year, the stock was trading in the range of 85-90 odd rupees. To see the company from that value to this is just staggering. This is reflected by the kind of financial performance, the metrics that we've discussed, so strong numbers coming in from there. Do remember that since this is a newly listed company, there's no street coverage available on this as we speak. So this was the overall build-up that we are seeing on the street performance, Agam, as we speak. And dividend yield also, if you look at, that was about 0.02% for the company. Of course, this is a high growth company. It's still in the beginning of its phases with the kind of order book it has, with the kind of working capital it requires. So this is what is happening in terms of street cred.
Right, point taken. And again, we must remember that this is, as Anushi's mentioned, it's a company which is continuing to invest in the growth that he is looking forward to, and considering it is also looking at expansion in several other areas. Well, is a potential reason why the dividend yield is not very high. Of course, it's also a newly listed company, so you never know that this dividend yield may just improve over the next few quarters, considering its profitability profile is, well, it's pretty stable. Of course, in terms of street coverage, there isn't as much. And it's also a relatively smaller company in terms of market capitalization. So it would probably fall in the small cap universe at the moment in the classification of things. So if you consider the overall ratings at the moment, with all the factors that we've spoken about, as you can see, it's a thumbs up for income statement and balance sheet, along with something like a return ratios, cash flows remain neutral. And among the other factors that we are considering, well, we have the order book, shareholding, street cred as a thumbs up, and street coverage would probably be, a neutral. And on account of all these, I'm assigning about a half a point for neutral, which takes the total score for the company, the total rating of the company, at a whopping 7 out of 8. So not bad, at least as far as its will show so far is concerned. But the question really is that where do its strengths, weaknesses, opportunities and threats lie at the moment then? And with that, Anushi, let's talk about the company's strengths and weaknesses.
Now, if you have to look at the strengths, first is the strong order book position. We've already emphasized on that the company has over a 5,000 crore of an order book value currently, which is to be executed in 18 to 24 months itself. So a high book to bill ratio that we're looking at. In fact, if you look at the tenders also, they've submitted over 5,975 crore worth of tenders, with tenders in pipeline of about 2,437 crore. So this remains as a very strong point for the business. Along with that, what is another focus point for the business is its long-term contracts in both its telecom and solar projects, which are its main two business verticals. Even if you look at as of FY23, if you look at how they were positioned with their customers, about 90% of their revenue comes from customers with more than 3 years of relationship. So this is another point we should be considering. But coming to the weaknesses of the business, they are also dependent on a limited number of customers. So any kind of deterioration in the relationships with any of these customers would be a point which could be a pain point for the business. Other than that, as we've seen in this year's cash flows, it was a negative cash flow operating number that we had seen, as the business requires high working capital for the kind of orders it has. So sizable amount of working capital for the continued operation and growth. While it could be a positive also, it could be a negative, impacting the cash flow growth of the company as well. So these are the strengths and the weaknesses that we are seeing. But huge opportunities, Agam, especially when they're talking about that railway space.
Yes, Anushi, actually very interestingly, because if you're considering railways, if you're considering something like green hydrogen, BESS, along with something especially in the renewable portfolio, now we do know that all these areas are high growth areas, something that's been picking up over the past 3 to 5 years, and it does seem like it's still at just about done with its nascency, and it could potentially see a lot of tailwinds in terms of growth, and which is why these are some of the potential opportunities for the company moving forward. It's looking to expand footprints in the international markets as well, in telecommunications and the renewable energy space. So that certainly could be the other area of opportunity. In terms of threats, what we are watching out for is dependency on EPC and O&M contracts, and to be honest, this is just the core of the business, so I wouldn't exactly call it a threat, but perhaps to a certain extent the threat here is the subject to cancellations, and that perhaps is the problem with all the companies in the sector. And the other one would be intense competition. Well, we do know that a lot of its peers, a lot of its relatively larger peers, have a significantly higher exposure to the many sectors that it already operates in. So the competition could always be a little bit of would always be a little bit of a problem, or would be a challenge in that case. So that's something that we're going to keep an eye on as well, as far as Bondada Engineering is concerned. Anushi, on that note, thank you so much for joining us and taking us through those insights into Bondada Engineering. What we must remember is that at the moment, given the fact that it's shown you a good amount of traction towards the positive end on the various factors that we spoke about, the question really is that how much of it can be sustained. And it does seem like, with the kind of visibility that we're seeing, the kind of order flow that the company has, as well as the plans on the annual when it comes to not only the renewable space and the telecommunication space, but also its plans to diversify in many of the up and coming growth areas, is something that could very well play in favor of Bondada Engineering. On that note, let's shift focus and listen into the management itself. And we in fact caught up with Raghvendra Bondada as well as Satyanarayan Bharatran of Bondada Engineering. And here's what they had to say about the company's growth prospects going forward, as well as the strategy. Listen in.
Yeah, yes, Anushi, we are basically in EPC segment and O&M services in both telecom, EPC and solar EPC, that is renewable energy. The company is progressing in both these segments. Both are very much required for the country. One is Digital Bharat, the second one is the renewable energy mission. And we have been there in this telecom business past 28 years, actually including my previous experience. But this company is formed in 2012, and thereafter we ventured into the solar EPC in 2017 onwards. We have been working on good sizable orders. Going forward, we have very good order book is there for next 3 years. Right now we are having confirmed order book of around 5,300 crores plus orders, and it's a huge amount of solar EPC works are there. As you all know that a lot of renewable energy is to be deployed in the country. Both in solar, wind, even pumped hydrogen, green hydrogen, even pumped storage, battery energy storage systems. A lot of technologies are emerging into the market. So a lot of renewable space is there. We are looking very bright future for next 3 years as well as next 5 years. We have the business plan available. And next 10 years, I am seeing that spectacular growth is going to happen in both the segments, telecom and renewable energy space.
Mr. Bondada, you mentioned that telecom and solar is your core business trends, higher segments that we are looking at. In fact, if you look at this H1's trajectory, also 63% of growth that you've clocked in, even in FY24, 100% plus growth. Want to understand in these segments what is leading to this kind of an upside that we are looking in growth, and is this expected to sustain for the next 1 to 2 years also if we speak? So I want to understand the revenue growth picture for FY25 along with FY26, if you can give a perspective on that.
Yeah, yes, last 12 years our growth has been the 53% CAGR, CAGR 53%. And similar growth we are expecting. In fact, actually this year onwards we are going to make it double. Actually, 100% growth is there. Last year we had done around 800 crores revenue. Even future next 3 years we are going to make it double year on year, because actually we have the confirmed order book which we have to deliver in next 2 to 2.5 years. We have the sufficient order book to make it happen, to make it a double of revenues in year on year for next 3 years.
That's quite a
in
solid.
both telecom EPC and as well as the solar EPC.
Yes, surely that's quite a solid trajectory that we are looking at. In fact, you've mentioned about the order book. Let's get perspective on that. So in the last 6 months itself, we've seen a 3x jump in your order books that stand at about 5,342 crore. In the last 6 months, I want to understand in this first half particularly what has led to the surge in orders that we are looking at, because if you look at the FY24 number, the number was in between 1,300 mark. So what has led to this growth in orders that we are looking at, and if you can give us a perspective on the breakdown of your order book and the order inflows expected over next half.
Yes, as I mentioned, both these segments, solar, renewable energy EPC and as well as the telecom EPC, the bright future is there. So a lot of tenders are being floated across the companies and across government organizations, even private organizations. A lot of tendering process is happening. So last 6 months, we have been got into the public sector companies, participating in public sector companies tenders, because we have acquired a lot of credentials to participate in central government and public sector companies. That's the reason last 6 years we have participated, we have secured good amount of order book, and similar growth is going to happen. And my order book is going to be almost around 8,500 crores to 9,000 crores by March 2025. After reporting the March 25 numbers, as you already mentioned that projected number of around 1,500 crore of March 25.
Okay, so 5,000 figure moving to 9,000 figure as we speak. How much do you plan to execute in the next half of this order book? If you can give us a picture on what usually is the execution period of this orders that you've received.
Yeah, all these orders, whatever is confirmed orders are there as of now, that 5,300 crores. Out of that, actually around 1,200 crores is our O&M, which is running into another 3 years to the 5 years time. But rest of 4,000 crores order which we have to complete in next 18 months to 22 months time, that we have to complete it.
All right, Mr. Bondada, one interesting thing about your mix, if you look at the revenue mix, now order book 75% is solar, but in the revenue composition, it is telecom, which is the leading one with about 59% of mix. So going forward, with a 100% increase that you expect in the revenues forward? What is the kind of revenue mix also? Is solar going to be the focal point now, or is it on telecom? If you can help us with the breakup between the segments expected.
Solar is going to be the major contributor for going forward, but I think as of now, whatever numbers, I think you must have those numbers. But going forward, telecom is going to be around 30 to 35%, and solar EPC is going to be around 70 to 75% going forward numbers.
All right, so that is the outlook on the mix that you've given. Another vertical which you plan to expand on is the railway sector, and the plan is to make it as big as other verticals. I want to understand the rationale behind expanding in the railway space, and what is the kind of contribution that you're looking from this area?
In addition to this telecom and solar EPC, these are both are growth segments, and even Indian Railways is also coming up with huge budgets on their safety projects. The safety projects means the Kavach and as well as the barricading of those high-speed trains, semi-speed, high-speed, and then Vande Bharat trains by crash barriers. So these two activities we are qualified because of with our past credentials, past experience. Right now we are participating in even in Indian Railways tenders, that is of passive infrastructure services to as a EPC, passive infrastructure services to this Kavach projects. Government of India has given budget of almost around more than 30,000 crores to be deployed in next 3 to 4 years. So we are easily qualified for these kind of tenders. So we are participating even in railways. Now we already identified around 7 tenders. We have participated in 3 tenders. And this is going to be another vertical because railways are going to build their own private network for their LTE network, which is required for Kavach implementation. We are well qualified, well positioned to execute these kind of projects. We are well qualified. So even railways are also, we are looking at railways. Our railway segment is going to be a big vertical, as big as our telecom vertical. Maybe down the line, next 2 to 3 years, we might be growing maybe around 2,500 crores of vertical, railways vertical.
Well, that's interesting. 2,000 to 2,500 crores from the railway vertical. That's what you expect. Mr. Vondada, final question to you, a brief one. I want to understand your capex plans. Also, there have been some board approval on the 500 crore of fundraise. Is it for that? Are we looking at? If you can just give a perspective on that in brief.
Yeah. We have intimated to the stock exchange up to 500 crores, but thereafter we have made a lot of internal discussions. Now we are looking at anything between 250 to 300 crores through preferential allotment that is going on. I think next 2 to 3 days we are going to close that preferential allotment. Rest, our working capital requirement at this point of time is around 450 crores. So 300 crores we are going to pull from this preferential allotment, and then 150 crores we are going to make it from our debt route. So with this 450 crores of working capital requirement, I think we can easily execute our projects well within the timelines. And our prime motto is to execute projects on time. That's what actually we have been striving for it. And none of the project is delayed because of our reasons so far. So we have secured the good amount of order book, and people are there on ground to execute. And now we are in verge of pulling the funds so that actually we can execute these projects well within their time.
Right, that's the management telling us about all the plans on the anvil for Bondada Engineering going forward, being in growth sectors. And just to reiterate, their order book at the moment. Now, as Anushi was mentioning earlier, the order book as on October 2024 stood a little over 5,300 crores. Do also remember that its annual revenue of the company stands at around 800 odd crores, which means that at the moment, it has a significantly large order book, nearly 6 to 7 times its annual revenues for FY24. And that basically gives you a good amount of visibility, not to mention that over the course of the next 2 quarters, these 2 quarters tend to seasonally be the ones which have a relatively larger awarding activity coming through, especially the last quarter of this financial year. That's the January through March period, where you will have a lot more awarding for the entire sector. And that's the potential reason why you're seeing such strength in the company going forward. But on that note, it's a wrap on this edition of KYC, but lots more lined up on the other side. Stay tuned to NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Sensex ended flat after a 2-day fall. Most sectoral indices end in the green. Media dragged the most and IT added to the most gains. One has to understand the place and do what's best for the economy, says newly appointed RBI Governor Sanjay Malhotra, adds that he needs to understand the turf first. Shaktikanta Das bids farewell to Reserve Bank of India, ending a successful 6-year-long tenure at the Mint Street. In his final press meet as RBI Governor, Das lauds the teamwork at RBI. Berman family's open offer for 26% Religare stake gets RBI nod, a move that could resolve the ongoing control tussle over the non-banking financial company. SIP inflows slow down for first time since June 2023, according to November's AMFI data. Equity inflows also cooled in November as sectoral and thematic funds lose charm. India Bloc moves no confidence motion against Rajya Sabha Chairman Jagdeep Dhankar, alleging partisan functioning of the House. The notice with 50+ signatures was submitted to the Rajya Sabha Secretariat. Israel unleashes barrage of aerial attacks across Syria, battering key military sites amid a security vacuum after opposition forces ousted President Bashar al-Assad. Hello and welcome. Good evening. This is Profit 360 on NDTV Profit, and I am your host, Malika Mishra. Along the next half an hour, we'll bring you the latest on markets as well as national and international news. To start with, Nifty and Sensex ended flat after a 2-day fall. Most sectoral indices ended in the green. Media dragged the most, and IT also added to the most gains. Neera joins in with a wrap of all the action on the bourses. Take a look.
Quiet day, very quiet, but recouping losses towards close of trade. And if you look at almost all the charts, they show you the same thing. So look at the Nifty 50 chart. Let's get the intradays. And the Bank Nifty, of course, led this up move. But if you look at the Nifty 50 chart, just that surge in the last few minutes of trade, half an hour maybe, bringing it to an even keel. Led by the Bank Nifty, of course, big tick from the Bank Nifty and ending close to the day's highs. So very good showing. Even the market breadth, if you see, was in favor of the declines, and then towards the close just narrowed down, and even Stevens on the green versus the red. So really good going thereof. Real estate, IT, the best performers. The good part, volatility stays low. So India VIX down about 2.34% yet again. So the last few days, VIX has stayed lower, which is actually a really good sign. Let's get the heat map up on the screen. You will see Bharti Airtel a top loser. The Adani Twins, Adani Ports and Enterprises being losing out as well. Reliance losing out about 0.7% on close as well. And that's the nature. I mean, nothing too dramatic really in the markets, but a late recovery, like I said, for the banks. So Kotak and ICICI make their way into the top 10 winners list, but the day was held out by IT by and large. So you saw an Infi, an HCL Tech, a Wipro, and a few others doing well for themselves. The mid-cap end of the market was, well, some life insurance names certainly stood out, 0.28% higher, but the winners and losers will come up on your screen, and you will see a peppering of some life insurance names and some chemical names as well, by the way. So Nippon Life up 10%. Clean Science had gains, as did Rosari Bio, up about 7%. So chemical names that I was talking about, but Naveen, Deepak Nitrite, etc., all of them went up in trade. Raymond Lifestyle had 11% up move. Intellect Design 8% higher as well. What lost out? CET corrects after yesterday's up move. So does C Info after yesterday's up move. HEG after a number of days of an up move. LIC because of the insurance data down about 4% as well. So this was the nature of the key movers in trade today. So not a bad day, a bit of a recovery in late trade. Let's see if the Bank Nifty can continue the upswing that it showed in late trade in tomorrow's early trade.
Right, Neeraj, thank you for that market wrap. Now, senior government official Sanjay Malhotra has been appointed as the new governor of the Reserve Bank of India. This has led to speculation in the markets about how India's monetary policy will unfold, especially as the country faces slowing growth and high inflation. In his first statement after the appointment, Malhotra highlighted the need to understand all aspects of the economy, saying, one has to understand the situation, consider all perspectives, and do what's best for the economy. Economists and experts are now keenly watching how the new RBI governor will tackle these challenges and also work towards creating a stable and strong economic environment for India. As outgoing RBI Governor now Shaktikanta Das delivered his final press briefing today, Sanjay Malhotra is set to take charge as the new governor tomorrow. NDTV Profit's Vishwanath Nair shares a report with the key highlights from Das's last address.
The RBI Governor, outgoing RBI Governor Shaktikanta Das has just completed his last press meet as the RBI Governor. Of course, Shaktikanta Das will demit office later today, and then Sanjay Malhotra, the new RBI Governor, will take charge tomorrow, which is Wednesday, as he comes in with a lot of expectations from what exactly the RBI Governor will do to balance that inflation growth dynamic, but also to ensure that the RBI's, as a central bank's autonomy continues as is. Now, during the press conference, Shaktikanta Das pointed to a lot of things that were achieved during his tenure, but certain challenges which will continue going ahead, and these include the geopolitical tensions, these include cyber threats, cyber security issues, these also include things like CBDC and ULI, which were started during Shaktikanta Das's tenure, but have still not seen a nationwide rollout. So, in fact, Shaktikanta Das made it a point to say that ULI is something that he will watch from the outside, the nationwide rollout of, because that he believes will be a true game changer. ULI, if you remember, is a special credit delivery mechanism created by the RBI, which believes to be the same thing as what UPI is for payments, ULI will be for lending. But going ahead, of course, he's not giving any clear advice to his successor, at least not publicly. He said that whatever advice I would like to give Sanjay Malhotra, I'll give that to him in person and not in a public forum. But as things stand, he believes that the economy is on a strong footing. Inflation control still remains the primary objective of the RBI, and that the MPC will continue doing that depending on the data that they get. Going ahead, of course, growth and inflation dynamics, that's something that they will have to watch out for. Inflation control is important, but growth is also very important for the RBI.
Well, Vishwanath Nair also got the opportunity to talk to the outgoing RBI Governor Shaktikanta Das and asked him about his tenure and if RBI is being more stricter towards fintech companies. Let's take a look at that conversation.
Companies in private believe that the RBI is way too tough on them. Would you want to give...
RBI is?
Way too tough on them when it comes to compliance and regulation. So anything on that? And second part, you talked about a lot of the teamwork and the legacy of the RBI and all of that. After the 6 years, is there anything you want to change at the RBI?
It's a continuing institution. There is always room for improvement. That will be my answer to the second question. And the first question you said was fintechs. No, well, I would beg to disagree. In fact, in one of the monetary policy statements or in one of my speeches, I have talked about how many meetings we have held with the fintech companies, either in groups or individually. Now a particular day in the month is dedicated, specifically earmarked for fintech companies and innovators to come to RBI and have face-to-face interaction. There is a separate fintech department. And in fact, the feedback that I have got, not because I am governor and they tell me, because in private, when people come to meet me, either in a small group or individually one company, or when they come and meet me, I always encourage them in those meetings to be absolutely and brutally frank and to share their concerns. My sense is that I think almost all of them are very satisfied with RBI. Those who had some concerns, or those who thought RBI was acting very tough, when they interact with us and when we explain to them the background of our action or the background of our stance, my experience and our experience in the RBI is that I think almost all of them appreciate why the RBI is doing certain things. And we have tried to improve our communication also to explain the rationale as to why we are doing certain things.
Right. Former Deputy Governor R. Gandhi lauds Shaktikanta Das for his tenure. He further noted that Sanjay Malhotra is well equipped to deliver as the incoming governor. Listen in.
Mr. Das, he has been a very successful governor in the last 6 years, widely acclaimed both within the country and overseas, also for his deft way of managing the financial sector, bringing in rapprochement between government and Reserve Bank. When he took over, that was an issue. Later on, when the COVID broke up, the heavy burden was shouldered by the Reserve Bank in terms of financial facilities made extended to all types of industries and the financial institution, keeping up the liquidity tap continuously flowing. And going forward to look at the incoming governor, Mr. Malhotra, he has been associated with the financial sector quite a while. In his avatar as CEO of REC, then led CMD of REC, and then later as Financial Services Secretary. He had definitely been associated with the banking and financial sector and Reserve Bank also. He was on the board of the Reserve Bank of India. So that he has a good view of what is expected of governor. Definitely he has. And as you mentioned that right now with his additional exposure in other economic ministries within the country in revenue, as revenue secretary, he has a much wider view of the economy as a whole also.
The Reserve Bank of India has approved Berman family's open offer for 26% stake in Religare Enterprises. Charu brings us the details on what she's gathered from her sources.
The Reserve Bank of India, RBI, has approved Berman family's open offer for 26% stake in Religare Enterprises. Now, there has been an ongoing tussle and legal disputes before a lot of regulators around this, including SEBI, Securities Appellate Tribunal, Delhi High Court even. And there were a lot of media reports coming out that there were a lot of disputes regarding the control of the entity. Now, the dispute around who will be having the control of the entity seems to be on the verge of getting settled, because the sources are familiar with the matter, and as per the exchange filings also, it has been known that RBI has approved the open offer by the Berman family.
Right, Charu, thank you for bringing us those details. Now, the Association of Mutual Funds released the November mutual fund data today, and SIP inflows slowed down for the first time since June 2023, and inflows into the sectoral and thematic category dipped for the second month in a row. My colleague Neeraj Shah is standing by to give us a roundup of the November data.
Well, the headline number of the MF industry inflow for the month of November obviously is a dip because of seasonal factors. If you look at it month on month, 60,000 versus 2.4 lakh crore. But the point being, there are some individual aspects that need monitoring. So, for example, the inflows into SMIDs, which is the small and mid cap funds, has stayed steady, in fact gone up month on month as well. So those numbers are looking okay. But active funds by and large have seen a downtick on a month-on-month basis, and thematic funds have also gone down. So active equity funds saw a net inflow of 35,943 crores. The inflow month-on-month was 41,887. So significant, about 15% dip that has come in. But like I said, that while large caps have seen an outflow or a lower inflow, mid cap and small caps have done well. Flexi cap funds have been steady, 5,084 versus 5,180 crores. But the sectoral or the thematic funds, 2 months on a trot now, have come off. So the data on the month for November is 7,658 crores versus inflows of 12,279 crores. And NFO flows have come down, 4,052 crores versus 6,078 crores. You know, the other way to look at it is, if you're looking for a headline, that the SIP inflow has paused the growth streak for the first time in 16 months. I think since June 2023. It's only down by 2 crores, by the way, but still, it had a streak, and that streak is off now.
Right, Neeraj. Thank you for giving us that update. Now, on to an NDTV Profit exclusive. NSE is about to set up a data center to monitor algo trading. Charu again is joining us with more details on the matter.
So as per the sources that spoke to NDTV Profit regarding the algo trading regulations which are slated to come out soon, NSE is going to be the exchange that sets up a data center that will be taking information from all other market infrastructure institutions in general to have all the requisite information that will be required for the validation of all these algo trading platforms. Now that validation process is going to be done by a performance validation agency. That role is going to be undertaken by the qualified credit rating agencies. However, the data center to acquire all the information required for this process of validation will be with the NSE. NSE's subsidiary administration and supervision is the one which will be taking up the responsibility of dealing with this, and the initial preparations for the role have already started, and in fact we have also been told by our sources that an allocation of considerable amount of fund has also taken place. So let's see how it rolls out once proposal paper about the same is out.
Right, Charu. Now moving on to the next story. Indian School of Public Policy has come up with a flagship report, Vision 2047, Administrative Reforms for a Viksit Bharat. On the sidelines of the launch, NDTV Profit's Varun spoke to Louis Marinda, chairperson of Indian School of Public Policy, on how this report will identify gaps and suggest possible changes for accelerated growth and development.
We realize that it has to tie up with what's required for the government to become a Viksit Bharat for our country. And from a policy perspective, what we believe is also very important is that we have policy changes that reflect the growth in the country. And it starts off really with administrative reform. Our bureaucracy has been great for the last 75 years, kept us as a democracy and had stability. But now we need to change gears and sort of look at how can we step up the pace of growth for us to be able to get to a $30 trillion economy. And therefore, our team spent the last 6 months, led by Professor O.P. Agarwal, looking at various ways where we had a basket of fireside chats and panel discussions with over 50 people, stakeholders, and getting their thoughts also on what is required to be done. And therefore, the results sort of came out of this, really, because if we don't have administrative reform, we're not going to be able to have economic reform.
So tell us more about this report and give us also a hint into how best can this be put to use.
Thank you. So we're looking at certain areas which we believe can be implementable in the current political economy. There's a lot of talk about the DOGE report in the US and about what changes can happen over here. We have to keep in mind what the fact is that we have a democracy over here. We have 1.4 billion people who can vote, and therefore what's possible over here. So we've talked about the need for better internal collaboration within the government, and there are specific issues, for example, looking at the fact that we have, for example, too many ministries. How can we control that, can reduce that? to have better coordination. Secondly is how do we coordinate better with external sort of partners, because we need a lot, the world's policy making has become a lot more complex, and therefore we need a lot more expertise over here. Then there's a whole challenge today about innovation in the public service, and also the ability to take risk because of challenges people have had in recent past where they've been pulled up for sort of lapses. And how do we differentiate between bona fide and malified problems? And then we also talk about, how is it that we can also look at an integrated visioning for the government, and how do we put all of this together? And finally, the only sector specifically that we've looked at is urban, because we strongly believe that if we were to become a Viksit Bharat, we need to have much better planning in our cities with a focus on economic development.
The India bloc has moved a no-confidence motion against Rajya Sabha chairman Jagdeep Dhankar, accusing him of partisan conduct in the functioning of the House, making it the first such action in India's parliamentary history. The notice with 50+ signatures was submitted to the Rajya Sabha Secretariat. The controversy surrounding the Delhi Chief Minister's bungalow, once occupied by Arvind Kejriwal, has escalated as the assembly elections draw near. The BJP has sparked debate by calling the Six Flags Staff Road residence Sheesh Mahal. NDTV's Shreya Ghosh brings us the latest updates on this issue.
Well, right ahead of the Delhi Assembly elections next year, we've seen Delhi BJP Chief Virendra Sachdeva making these innovative, creative election strategies by showing the Delhi voters how allegedly corrupted the Aam Aadmi Party national convener Arvind Kejriwal is. He posts a video of Arvind Kejriwal's home, which he calls Sheesh Mahal, and he calls it a lavish residence with 7-star amenities. He says that this house is made of all the public money, the taxpayers' money, and of course we've seen that video. These very lavish amenities, a jacuzzi, a gym, imported fittings worth 4 crores, all built with taxpayers' money. That's what BJP Chief Virendra Sachdeva is alleging. Sachdeva calls it a museum of corruption and challenges Kejriwal to explain why he hid the details of the luxury home from the people of Delhi. Accompanying this video, BJP has also released a rap song titled Keju Hai Dilli Ka Millionaire, which accuses Kejriwal and his party of corruption, pointing to issues such as pollution, waterlogging and poor infrastructure in Delhi. Now, Mr. Sachdeva, along with other BJP leaders, have vowed to make this video a central feature for their campaign, with more such revelations promised. Now, of course, the PWD Public Works Department is already carrying out an inquiry into this alleged rule violations in the bungalows construction. Currently, the Aam Aadmi Party has not responded to these allegations, but it makes for an interesting watch for the people right ahead of the assembly elections. It is going to be a crucial election, 3-cornered contest between BJP, Aam Aadmi Party and Congress. Remember, Aam Aadmi Party has been ruling for the last 10 years. There is bound to be dissatisfaction on ground, and BJP is banking on that. BJP is trying to show the party in the worst light possible with all the corruption allegations surrounding the leaders, and now they will be carrying out this campaign of showing how the public money, the taxpayers' money, is being used by the Aam Aadmi Party national convener Arvind Kejriwal in building this lavish house, which the BJP calls it the Sheesh Mahal.
Right, Shreya. It definitely makes one think about the legitimate use of the Indian taxpayer. Thank you for bringing us that report, Shreya. Thank you so much. Now, moving on the sidelines of the rising Rajasthan Global Investment Summit, HUDCO's CMD stated that the company has signed an MOU worth 1 lakh crore rupees with Rajasthan. He further added that HUDCO is optimistic about surpassing a loan book of 3 lakh crore rupees before FY30.
We will be contributing in the Viksit Rajasthan theme, which is proposed by the Honorable Prime Minister. And presently we are working with the Rajasthan in roads, water, sewerage, housing, energy. So we are part and parcel of infrastructure in the Rajasthan state in entirety. And we had signed one MOU of rupees 1 lakh crores in July this year, which will become the part of this 35 lakh crores which was announced by the Honorable Chief Minister.
Great, sir. So secondly, you've guided for about 3 lakh crores for FY30. Can you give us an update on that?
So I think we are working on that direction, and I am very, very optimistic that we will be achieving this target of 3 lakh crores way before the 2030. But of course, we had not revised the target yet, and we are growing at the CAGR of more than 25%. And when I had joined last year, the loan book was around 80,000 crores, which had raised to 1.11 lakh crores during last quarter. And this is only possible because of the robust policy of the Government of India.
Post the summit, Rishabh also spoke with Ritesh Agarwal, who is the CEO of OYO, who expressed his strong belief in Rajasthan's promising future for companies, including OYO. Let's take a look at what he said.
Rajasthan is a state which is geographically, naturally and talent-wise highly gifted. One of India's biggest talent generators, whether in engineering, in chartered accountancy, in law, each of the big segments, you see that there's a lot of good talent. It's next to NCR, in between Delhi and Bombay highway, and also has a huge state with river, mountains, electricity, internet, any infrastructure you need. So I think it holds great promise for every company. For OYO, look, we are in the tourism and technology sector, and we are investing significantly on both sides. On tourism side, we are opening more hotels now than ever before. We just opened our new luxury hotel in Jaipur called Sunday Hotels. But similarly, we are also building our global back office for our US and Europe operations on some departments here in Jaipur. So we are continuously investing further in the state of Rajasthan.
Well, apart from Ritesh Agarwal, Rishabh further spoke with Vijay Shekhar Sharma, who is the CEO of Paytm, about the growing investment opportunities in Rajasthan. Let's take a look at what he said again.
Rajasthan startup progress is so inspiring that the number of startups, the iStart program and the different multi-center approach that Rajasthan government is taking is unique. It is not based on one single city. It is also where the government has gone ahead and opened excellence centers. So there is something that I think as a local champion, I wish that I would be here to contribute towards the startups as an investor.
A tragic BEST bus accident in Mumbai's Kurla West has claimed 7 lives so far, and 42 people have sustained injuries. In the recent development, BEST has announced an ex gratia of 2 lakhs, and the treatment of those who were injured in the accident will also be taken care by the BEST. My colleague Sujata Dwivedi is joining us with the latest details on the incident.
After a BEST bus lost its control in Mumbai's Kurla region, more than 7 people have been declared dead, whereas 50 have been injured so far. This incident occurred last night at around 9:30 p.m. when a BEST bus, which is a public undertaking, lost its control in Kurla, leading to more than 50 people being injured, and it rammed into several vehicles as well, including 7 auto rickshaws and 10 to 15 cars that were parked on the road. Being a busy road, it led to even more damages as well as injuries that people received because the bus was said to be at a speedy race. At present, we are here in Kurla at this spot where the bus came and halted at. This particular wall that you see has been destroyed after the bus rammed into it, and it belongs to a society where eyewitnesses on the spot say that it was nothing less than a terror sound leading. The sound that came out was that of similar to a bomb attack, after which they came out and they saw that a lot of people were stuck under the tires of the bus, and also the passengers that were present in the bus were injured and hurt badly, after which police control forces were called off, and also there were ambulances that were brought on the spot that took those people to Baba and Sion Hospital. At present, the Chief Minister of Maharashtra, Devendra Fadnavis, has announced an ex gratia of 5 lakhs to the deceased to the family of the deceased, and also if you see these vehicles that were damaged, including taxis, are being taken off and towed to the respective
Focusing on what's happening internationally, loud explosions echo across Damascus as Israel intensifies its airstrikes on Syrian territory. Over the past 48 hours, Israel has conducted approximately 250 airstrikes targeting the country's military infrastructure. Israel has destroyed airports, radar stations, signal facilities, and weapons depots spread across multiple Syrian governorates. Near Latakia, the strikes damaged naval ships, air defense facilities, and military warehouses. Israeli troops have also entered a buffer zone east of the Israeli annexed Golan Heights to bolster border security. Well, viewers, that's all the time we had on this edition of Profit 360, but do stay tuned to NDTV Profit for more news and updates.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead.
Hello and welcome. You're watching the Mutual Fund Show. Now, the next 20-30 minutes, we'll be having a very interesting conversation to try and understand that if, when you say more funds means better returns. Now, to help us understand this better and to get the optimal number of products in one's portfolio, Vipul Bhovra, Senior Director, Listed Investments of Waterfield Advisors, joins in. Hi, Vipul. Thanks for joining in. Vipul, one thing that we both would agree on is that diversification at the product level is important. We also do know that over-diversification may not necessarily be good for a product. How do you determine optimal diversification at a product level for investors?
Hi, Samina. Thanks for having me here. So completely agree with your thought that more the diversification, it certainly impacts returns at a portfolio level. What we generally recommend is that having a mix of diversification and concentration at a portfolio level, so be it large cap, mid cap, and small cap across market cap, it's best to have a strategy where there is some sort of a diversification and some sort of a concentration, wherein we're not skewed to a particular strategy, a particular theme, but broadly at the same time we are fairly diversified across sectors. So diversification across sectors is one way to look at these strategies when building a portfolio, and diversification across market caps is something we should look at when building portfolios, and not just randomly diversifying by looking at the performance of the funds.
I don't want you to quantify the number of funds just yet, but would you tell me, how do you determine the optimal number of funds in a portfolio to achieve diversification without an overlap? And does that differ in terms of the quantum of wealth one has? So what I want to understand from you is, if somebody is doing an investment of, say, 10,000 rupees a month versus somebody who's doing 1 crore rupees a month, is the number of funds, should the number of funds be fewer for somebody with a smaller corpus and more with somebody with a larger corpus, or that's insignificant?
So that's completely insignificant, Samina. Ideally, the first question to look at is what should be the ideal market cap mix. Let's assume large cap, mid cap, small cap, and broadly diversified across 3 different market caps. The second question would be, broadly in these market cap, you're okay with max to max two strategies. For example, in large caps, you're predominantly okay with having passive strategies that essentially takes care of the large cap allocation. In flexi cap, or a mix of large cap and flexi cap would be a basket which will take care of your large cap allocation. Whereas in mid cap and small cap, essentially we can quantify into two strategies, one focusing on growth while the other is focusing on value. So just trying to create a balance between growth, value is something one can look at, but predominantly not more than two or three strategies in a particular market cap takes care of the overall diversification and takes care of the total allocation into a particular theme, particular sector, and particular market cap.
So are we saying that 7 to 8 funds is probably a good number across market caps and sectors for an investor to consider while building a portfolio?
Yeah. So Samina, just to take a step forward, I mean, broadly, most 10,000 rupee SIP might want to still continue building a core portfolio, and then might want to look at building a satellite portfolio. For a 1 crore ticket size, they might want to create a core portfolio and a satellite portfolio together. So a core portfolio will be 80% allocation, and a satellite portfolio can be a 20% allocation. In that context, this 8 can go to 10. But broadly, if someone is just looking at building a core portfolio, not more 8 to 10 strategies are enough to get that overall market cap allocation and the portfolio blend allocation.
Okay, so that is ideal, right? But we've spoken to so many people, even on the channel, when people write in with queries, they've got 40 funds, 50 funds. Every time there's an NFO, they get tempted and would, invest in one. At what stage does holding multiple funds become counterproductive due to complexity or maybe even redundancies?
So the observation is valid. When we do come across a lot of portfolios, we see that happening. And essentially what we do is we run an overlap analysis. And that is where most clients, everyone realizes that they have 10 different strategies, but those 10 different strategies actually hold the same 10 stocks. And that's why the portfolio has not been able to beat the benchmark. So the first thing one should look at is try to reduce overlap in the portfolio. The second reason why this kind of a phenomena happens is most of the allocation or most of the investment happens looking at short-term returns. So 1 year, 2 year, 3 returns of a strategy, and hence there is this interest of buying into such kind of funds. And lastly, in every bull run, you have select themes which do very well. So more so to make the most of those themes, you have those thematic funds, and that's where the incremental allocation to the line item just keeps on increasing. So the idea is to first look at overlap. I think in that exercise, most clients will realize that there is no need to have so many strategies. They are replicating the strategies in a way, and that will lead to first round of consolidation and reduce the gap between a concentrated strategy and a broad-based strategy. So these two strategies or these two action points will automatically reduce the overall line items in the portfolio.
Why owning the market may be counterproductive, right? Because if you are trying to achieve returns that are better than the Nifty, I mean, that's the whole idea of investing in mutual funds. Otherwise, a simpler way to do it is to simply buy the index. Why is it important to have a concentrated portfolio which is also diversified? So now this is a little bit of a catch-22, right?
Yeah. So good question. So Samina, what happens is markets go through some sort of a shallow cyclicalities. The sectors also go through some sort of a shallow cyclicality. So in the last 4 years, you would have seen a lot of sector rotation. Sector by sector, we saw earning recovery, and now we are seeing sector over sector, some sort of a consolidation happening. To capture those themes, to capture those sectors, you need some sort of a concentration.
Kshitij, thanks for joining, and I don't know whether you heard my question, but what I'm trying to do is understand from you of how many funds are too many funds. The constant struggle for investors of building a diversified portfolio which is not overly diversified.
Hi, Samina, and there was some network issue, but now things are better. So I think very strangely, when I keep on meeting clients, and it's been so many clients we've met over a period of time. So the idea is to diversify, and diversification is done to complement the existing holding across sectors, across asset classes, so that you should not have all your eggs in one basket. but you end up over diversifying portfolio. My sense is if you take equity portfolio basket only, then I think 7 funds are more than enough, which includes your tax saving funds, or let's say balance funds also. I think that's more than enough. Fixed income fund, depending on the maturity of fund which you require in your portfolio, let's say for 1 year, 3 years, 7 years, depending on that, you can have 3 to 4 fixed income funds also. So I think idea of diversification is to generate that extra alpha with reducing the risk. But when you get into so many number of funds which are having unique 300, 350 stocks, then eventually you're actually getting into BSE 500 only. Then I think it's better that you should buy an index rather than just expecting that your funds or your portfolio will beat index with a good amount of margin. And there are studies which have shown over past that over diversification is actually tapering your return down, not stepping it up.
You're so right. You can't own the market and expect to beat the market, right? Some amount of concentration is required, and in some ways also free lunch is, that's what's never available. So you've got to do a little bit of homework when you pick your fund managers to make a long-term bet. But let's quantify this, Kshitij. Of course, Vipul and me discussed that already, but why don't you come in and tell us, what is it that you tell your clients to do? What is an ideal portfolio mix? How many funds are a good number for one to manage, not add complexities, and of course not make the portfolio redundant?
So I'll break it down to numbers. Let's say, as I said, that when you look at so when normally we say that your all investment should come in one page. When it start crossing that one page, then you can't have a track of it. Irrespective of how many softwares you have, how many platforms you have, I think better is to look at a pure equity mix of 4 to 5 funds. That's good enough, where you can have maybe an index fund, a good mix of multi-cap focus fund, a large and mid-cap, and depending on your risk appetite, a small, mid, or a sectoral fund. That's what you can look at. Maybe if you're in an old tax regime, you want to add a tax saver. So maybe 6 is what the count should look at. I know there are a lot of NFOs which are around the corner which keeps coming, but then if there is need or a gap, then only you add. So 6 is the number of fund which you should look at. So that, let's say, many of the funds will have some common stocks, but unique portfolio level stock should not be more than 140, 145 or 150 on a higher side. I think that's a focus approach which you should look at, and you should go with the flow of these funds in your portfolio and just add or subtract only if there is a need of doing that. So I think that's the fund size you should look at as you keep on stepping up the number of funds. Because right now, last 4 years, Samina, the markets have been really good. Everybody thinks that everything is firing. So why to unnecessarily reduce the portfolio or let's say concentrate it further? But as our market will keep on growing, you'll find it difficult for many funds to beat the index. So I think you should look at a limited number of funds, as over diversification and a common stocks across funds will keep on reducing the return part of the portfolio. So, and my sense is, obviously it's a mutual fund we keep on talking about. On direct stock portfolio, I'm just adding that if you go more than 30 stocks, I think there are 2 types of risks, Amina. One is unsystematic and systematic. That's a total risk. Unsystematic risk has been taken care by 5 to 7 funds, and as I said, more than 30 stocks if it's a direct stock portfolio. And systematic risk is something which you can't avoid. It has to do with sometimes some COVID happens, some war situation, some macro things happen. So I think you can't avoid. But unsystematic risk is well taken care. But if you keep on adding more and more fund, it's like overrating or over diversifying. Then you will have 50, 100 bips or maybe 150 bips less on what you can actually do when it comes to overall portfolio.
Right. Just one quick question, Kshitij, on the same space. Do you believe that a larger corpus or a bigger corpus warrants more funds, or the size of corpus does not have any bearing on the number of funds that are recommended, or one requires to beat the Nifty and generate alpha?
In a country where you have 12% nominal GDP, if you're happy with 12% type of return, I think index is something which you should look at. You don't need any one of us, to look at the portfolio. But yes, I agree with you. Where the fund size is large, then maybe you can look at stepping it up, maybe by 1 or 2 funds. But you see the type of growth in overall equity assets we have seen across. So I think it's irrespective of whether you are into 20 funds or 25 funds. So I don't see the size of market is becoming nice. We have good funds with good amount of corpus in it. Sometimes, Amina, I will like to add this, that many of the mutual fund sizes where fund portfolios have become, mutual fund size has become really big. There you might find that the additional delta is not coming that effectively, which can achieve with a decent size mutual fund, because you have to take a bigger bet. Let's say if there is a fund size which is 50-70,000 crore, if you have to do 5% allocation also to a stock, then it has to be done in 2,500 crore of total buying. So in that case, you have to take a call whether further allocation you want to put into that fund, or you want to add something else in your portfolio. That is something. But I will never ask people to redeem, because the cost of redemption is a capital gain. And if you are a long-term investor, I will not ask you to redeem. But yes, over a period of time, if it's very, very highly diversified, then you should trim it a bit. That is what. But I agree with you to some extent. If the fund sizes, if the corpus size is big, then you might end up adding one or two more funds.
Wow, Kshitij, I think you've done a good job of actually breaking it down and giving us actionables. And Vipul, you may want to comment on this one. So if somebody is watching this show and has decided or has realized that he has more than enough funds on his portfolio, there is an overlap, the cost of investing also becomes higher, rebalancing generally becomes far more complex, right? What should he or she be doing now? Should they be eliminating strategies of funds depending on performance to reduce the number of funds to the ideal 6 to 8 like we discussed? Or should they be eliminating underperformers? So do you eliminate based on repetition, or do you eliminate based on performance? Or like Kshitij said, maybe even your personal time horizon or capital gains or period of investment becomes important. You want to quickly comment on this before we close the loop on this conversation?
Sure. So essentially, I think this is a good time to actually look back and rebalance portfolios. And firstly, the best way to start is look at overlap. And that will be an eye opener in terms of how many funds are following the same strategies. Second, of course, certainly the funds which are underperforming and funds which we've been holding for more than 3 years, and funds which are holding for a long term over a period of more than 3 years, and underperforming, they certainly merit some sort of an exit or some sort of a rebalancing. So to answer question, first overlap, second would be underperformance, and third then would be a right balance between market caps. Whether in the last 3 years predominantly or last 4 years predominantly, we have seen mid and small cap portfolios have done reasonably well versus the large cap portfolios. So if the portfolio is now which was 50-50, which was 50% large cap and 50% mid and small cap, in the last 4 years would have gone to 60-40, where 60% would have been mid and small cap. So that is one way to look at rebalancing portfolios. So it will be a mix of all the three parts, and that is how one should actually look at rebalancing the portfolio.
Okay, Kshitij and Vipul, I think we'll close out this one. Let's try and get a sense of what and how should one approach total market funds versus multiple funds, right? I know for a fact that when investors are looking to diversify at an asset level, if the corpus of investment is small, you could consider investing in a hybrid strategy. In that way, you get equity and debt, and that's a healthy mix. Those funds also do quite well, and especially if you don't have somebody helping you with asset allocation, these become good funds. Can the same logic apply, Kshitij, to funds in the equity space, where you invest in one fund, for example, a flexi cap fund that would give you exposure across sectors and across market caps? Or do you say, you know what, that may not be ideal? Let's look at funds across market caps, and let's look at funds across themes or investment styles. How does that work?
That's really nice, Amina. And I keep on, sharing on various platforms that just don't look at that you are into flexi cap or a multi cap or small or mid cap. On a portfolio level, just look at how much large cap, mid cap, or small cap allocation you have. And this is very important. Sometimes we feel that, boss, I should have a unique small or mid cap fund. But if you actually see small or mid cap fund allocation, you get through large and mid cap also, flexi cap also, multi cap also. At the same time, I watch for that one should not stick to only one style of investing in terms of, let's say, you have a small corpus, then you should take 1 or 2 funds. You should have at least 3 to 4 different funds. And yes, it depends totally on your age. What type of how much risk you can take and your risk appetite, how much you can do. Second important thing, Samina, here is that when you choose a fund for your investments, you should be wary of the fact that you are coming here for at least 5 year plus time horizon, and depending on what type of goals you're aligning with those funds, I think that also helps. So you should not be looking at only that if there is one fund I should do flexi cap only or multi cap only. You should, if the corpus is small also, I will always tell somebody is having 10,000 rupees to deploy on a monthly basis also, they should look at adding 2,500 against 3 to 4 funds. That's one should approach, how one should approach.
Do you agree with that, Vipul? Versus a multi-cap or a flexi-cap fund versus multiple funds? Is that an option? I'll complicate this further. Maybe a couple of multi-cap and flexi-cap funds, or just multiple funds. How does one play this? Because the corpus is small. If you are getting the diversification across stocks and sectors and market cap, then why invest in multiple funds and complicate life?
So Samina, the right mix to right advice would be to have a mix of diversification and concentration. So while flexi cap strategies would diversify across market caps and that plays very well across cycles, a concentration will certainly add alpha to the portfolio. So a fair advice would be to have both, have a mix of diversified strategies through a flexi cap strategy, as well as have something which is concentrated, a dedicated mid cap strategy, a dedicated small cap strategy. That would be a right balance to generate alpha.
That's probably the right way to generate alpha. Let's talk about this a little bit more, right? And I want to talk about a behavioral aspect, because Vipul, which I think we all would agree that investing is more behavioral and emotional than actually physical in more ways than one. How do you think that investors are more likely to stick to their financial plan when the portfolio is simpler, or as opposed to having multiple funds, over diversification? Simply put, the more complicated it is, the lesser chance of sticking to the plan. Do you agree with me, Vipul? That hence merits another reason of why you shouldn't have too many funds.
So completely agree, Samina. So portfolios which or clients which have actually panicked and have exited are those where have had over diversification, and imperially when the markets are doing very well, we see no reaction. But when markets start in the last few months, when the markets were volatile, there seems some sort of panic to rebalance portfolios. So a plain simple strategy across different market caps, a plain strategy across funds, some concentrated bets, some diversified bets is enough to plan a strategy to compound the portfolio over a period of time, and of course to certainly beat alpha.
Well, Kshitij, how do expense ratios and fund management fees impact the decision to consolidate investments into fewer funds versus diversifying across too many?
So, SAB has clearly defined, depending on the fund size, there's an expense ratio which one has to charge. And as the fund size keeps on growing, you have expense ratio which is going down or coming down. At the same time, there is an index fund, Samina, where expense ratios are vis-a-vis active funds are much lesser, or maybe half of the cost vis-a-vis your active funds. And many of the investors do look into it because, whether it's 50 bips, 40 bips, it do compounds over a period of time. But my only suggestion here is that people who have time and can do it themselves, only they should look into this part. Because what becomes important is when they take a call on that, I am buying a fund, but let me look at a fund which is with less expense, because I'm here for 10, 15, 20 years, and then 50 bips will compound for a long term. I think that's a wise decision which people take. And nowadays, there's enough transparency of data points which are there. So people do take into account, and that's how we have seen a little bit much more traction towards your index fund, because their expense ratio is less, and traction towards those funds which are having low expense ratio. But my submission here is, Samina, this is very important for everyone to understand that sometimes a fund size which has become very big, as I said earlier, they are not able to take bets into smaller or mid cap capish companies, whether flexi cap or multi cap, beyond one stage, because let's say, as I said, for a bigger fund, for 5% also, it becomes huge corpus. And then at that time, they have to go a little conservative. And you see that irrespective of last 10 years, 5 years return looks good. But often, if you actually analyze last 1 year, 1.5 years return, 2 years returns, for many of the bigger funds, it's in second or third quartile, not in the first quartile, which were doing really well earlier. So I think much bigger fund size, my personal view is that one should look at fund size between 20 to 30,000 crore is the right fund size which you can look at. Lesser, if there is a good fund, is also a good size, but something which is going above 35,000 crore, I think there you find that performance is taking a bit of a slack, because as the fund grows, you're at fund manager level also, at any to move one needle, let's say you not buy a 0.5% or 1% in a bigger company, then you have to buy a bigger chunk. So I think people do take a call on expense ratio, but then they should take this into account, that what is the sweet spot and how they can manage between the expected return and the expense ratio what they are paying right now.
Right. Too large a fund makes it very difficult for the fund manager to navigate the markets and, of course, make concentrated bets where the impact of that will be material. One last question before we wrap this conversation up, Vipul. For individual factors, we've talked about the ideal portfolio size and, the factors that one needs to track when they're rebalancing at this stage. But personal, objective and subjective in nature, risk appetite, financial goals and time horizon, how important are they in terms of dictating the choice between few broad-based funds and a more segmented approach in that sense?
So certainly, Samina, risk is individual, and of course, depending on the risk profile of the client, the market cap allocation varies. Someone with an aggressive tilt would generally prefer one third, which is 1/3 large cap, 1/3 mid cap, 1/3 small cap, and someone who is conservative might want a 70-30, 70% large cap and 30% mid cap. So risk is dependent on the individual. Of course, time horizon is something which in equities you need to have minimum of 5 to 7 years for portfolios to perform and for returns to compound. So that is on time. But broadly, what I've seen is that as portfolios get built, one thing which most clients don't spend time on is in actively rebalancing portfolios. What happens is, over a period of time, once a portfolio gets built, they generally keep on holding and don't monitor it actively, be it on performance, be it on expense. And that's where constant monitoring and constant active rebalancing in between 3 and 5 years merits to do that, and that will actually help build long-term compounding.
Right, Vipul. Thank you, Kshitij. Great having both of you on the show. So, of course, you don't want to over-diversify, build a diversified portfolio, rebalance it, not too frequently, but frequently enough. Don't buy a fund, go invest in a fund that's too large, but not in a fund that's too small. So, lots of ifs and buts, and if this is your full-time job, that's good for you. If not, you should be seeking help from your financial advisor to actually build the optimum portfolio, because while investing is important, reviewing it is also equally important. With that, it's a wrap on this edition of Mutual Fund. Thanks for watching. A lot more programming on the other side, so keep it with us.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome to KYC, your daily deep dive into the world of India's top companies, only on NDTV Profit. And in an ever-evolving stock market, information is plentiful, but clarity is hard to come by. KYC, Know Your Company, is where change that every day, and we unpack a story, the strategy, as well as the fundamentals of one NSE-listed company every single episode, giving you the edge to invest with confidence. Today, we are talking about Bondada Engineering, which is in focus, and this is a relatively new listing. Of course, the debut has been made just this very year, in fact, in the last few months. And since then, we've also seen some staggering growth coming through for Bondada Engineering. Now, as the name suggests that the company is in fact into engineering, procurement, and construction services. Also, looking at largely focus in telecom and solar. Now, it does produce and supply LED lights and building materials as well. So it does have a little bit of a diversification going on, and that's very evident in the kind of margin profiles that you will still see in just a bit. But for now, this is your overall revenue breakup with a majority of your revenue is coming in from the telecommunications space, followed by solar, and then a little bit towards products. That's where the bulk of your contribution to the revenues is coming through. That said, in every episode, what we try to do is we try to rate the company based on a handful of parameters. This would include something like the income statement, the balance sheet, cash flows, as well as return ratios. And, among the other set of parameters that we also talk about is, the order book, shareholding, street cred, as well as street coverage. And with that,
On that note, also, let me get in my colleague Anushi, who's going to join us and shed more light on the company. And both Anushi and I will take you through the ratings of the company as to what we make of how its performance has been, as well as we'll take you through some of the strengths, weaknesses, opportunities, and threats here. So, Anushi, thank you so much for joining in here. Let's start off with the income statement. How are you looking at things develop?
Well, thanks for that, Agam. So, since its listing in September 23, we are seeing pretty strong numbers from Bondada Engineering that's reflected in its stock prices as well. Now, coming to the first metric, which is revenue, we are seeing FY24 revenue stood at about 801 crore. If you look at the last 3 years CAGR, this is at 41%. So a high CAGR growth that we've seen in the last couple of years. Even EBITDA stronger growth here as well. 62% is what we are seeing. 68 crore is their FY24 was their FY24 revenue. EBITDA margins, while they were in 9% of range, in FY24 they've fluctuated between this 9 to 11% range in the last couple of quarters. Net profit also 46 crore of net profit in financial year 24, and this is with a 75% of a 3-year CAGR growth that we are seeing for the company. So pretty strong numbers on the income statement side, but Agam, let's walk through the balance sheet numbers as well.
Right. Well, Anushi, given the fact that we've seen such strong numbers, and especially in terms of profitability, the balance sheet is in a relatively good place too. So if you consider the shareholders' equity, which includes accumulated profits over the course of the last few years, along with, of course, the equity, well, that stands at around 272 odd crores. So that's the net worth coming in. Its gross debt is not significantly large, given the fact that it's in an EPC company, and in fact, it's coming in just about 115 crores. And of this, remember, the cash and bank balance still stands at around 69 odd crores. So the positive is that this debt is actually negligible, and certainly the overall debt to equity is at a very, very low ratio considering the kind of equity that it has and the kind of net debt that the company has. So that's another thumbs up. So far, at least as far as the income statement and the state of its balance sheet are concerned, well, both on, pretty stable ground. But what about cash flows, Anushi?
Now, if you look at the cash flows from operations, we've seen a negative amount in this first half. As of September 23, that cash flow from operations stood at 53.3 crore. This is a negative number that we are looking at as compared to 54 crore in as of March end. Now, do note that this is a company where there are high working capital requirements. So this is one of the reasons as to why we are seeing this. So just to take this number as the standalone value would not be pertinent, but net cash flows, however, were 3.22 crore in first half of this year compared to 3.81 crore. So net cash flows have majorly remained in line. So this was aided by higher investing and financing cash flows as we speak. So this is the overall view on cash flows that we are looking.
So, well, obviously a neutral rating here because it's still half the year done, and perhaps you can get a better idea of your overall cash flow situation towards the end of this financial year. But I'm also going to talk about, the return ratio. So we've got the income statement, the balance sheet, and the cash flow statement out of the way. What does it mean in terms of certain operational metrics, profitability metrics? So if you consider the return on equity for FY24, that stands at a pretty stable 27%. Now remember, the benchmark that we're working with is around 20%, and that's what the street also works with. So anything over the number of 20%, certainly a thumbs up. And it's the same for capital employed. In fact, that is an even better number because that stands around 36%. So given the fact that you have such strength as far as your ROCE and your ROE is concerned, again, I would give it a thumbs up. So far the company has been doing pretty well. What's also a big positive is the visibility for the company. So Anushi, what can you tell us about the order book here?
Agam, very strong order book that we are looking at. Their order book stood at about 5,342 crore, and this is as of October 24 figures that I'm giving. So just comparing it from the FY24 levels, FY24 they had closed with an order book of around 1,759 crore. So to see this number reaching to this 5,000 crore plus number, seeing a 3x growth in this. So even taking their last year's FY24 revenue into perspective, which was around 801 crore, a significant book-to-bill ratio that we are seeing, and this is expected to get delivered in next 18 to 24 months. So a lot depends on the execution of these orders which will reflect a higher revenue growth for the company. So a strong order book is what we are seeing for Bondada Engineering.
Absolutely. And at least as far as the visibility is concerned, the company is sorted there as well. Now let's talk about whether or not the company actually shares a rather wholesome scarcity premium. At this point in time, it looks like not really. So firstly, remember that this is a 7,000 crore market cap company, and in terms of its shareholding, what we are watching out for is 63% held by promoters, as you can see, and that hasn't changed over the past couple of quarters. FII holding has gone up by just a tad bit. But again, your overall holding for FIs is not significant. And when it comes to maybe, some of the others, that particular holding stands at well over 35%, which also means that the float for this particular company is well over a third. And because of that, while we could perhaps give you, it's going to be a mix somewhere between a neutral rating and a thumbs up rating. But the fact that, this is a new company and we're just waiting for how things could potentially pan out, we're going to give it a benefit of the doubt and going to give it a thumbs up. So that's as far as shareholding is concerned. But not done too badly, Anushi, since its listing.
Absolutely not. In fact, the investors holding in this company since their IPO times would be having a field day with just this one stock itself. It's gone up over 19 times since its listing in September 23. So what used to be around, even if you just look at the beginning of this year, the stock was trading in the range of 85, 90 odd rupees. To see the company from that value to this is just staggering. This is reflected by the kind of financial performance, the metrics that we've discussed, so strong numbers coming in from there. Do remember that since this is a newly listed company, there's no street coverage available on this as we speak. So this was the overall build-up that we are seeing on the street performance, Agam, as we speak. And dividend yield also, if you look at, that was about 0.02% for the company. Of course, this is a high growth company. It's still in the beginning of its phases with the kind of order book it has, with the kind of working capital it requires. So this is what is happening in terms of street cred.
Right, point taken. And again, we must remember that this is, as Anushi's mentioned, it's a company which is continuing to invest in the growth that he is looking forward to, and considering it is also looking at expansion in several other areas, is a potential reason why the dividend yield is not very high. Of course, it's also a newly listed company, so you never know that this dividend yield may just improve over the next few quarters, considering its profitability profile is, it's pretty stable. Of course, in terms of street coverage, there isn't as much. And it's also a relatively smaller company in terms of market capitalization. So it would probably fall in the small cap universe at the moment in the classification of things. So if you consider the overall ratings at the moment, with all the factors that we've spoken about, as you can see, it's a thumbs up for income statement and balance sheet, along with something like a return ratios, cash flows remain neutral. And among the other factors that we are considering, we have the order book, shareholding, street cred as a thumbs up, and street coverage would probably be, a neutral. And on account of all these, I'm assigning about a 0.5 point for neutral, which takes the total score for the company, the total rating of the company, at a whopping 7 out of 8. So not bad, at least as far as its will show so far is concerned. But the question really is that where do its strengths, weaknesses, opportunities and threats lie at the moment then? And with that, Anushi, let's talk about the company's strengths and weaknesses.
Now, if you are to look at the strengths, first is the strong order book position. We've already emphasized on that the company has over a 5,000 crore of an order book value currently, which is to be executed in 18 to 24 months itself. So a high book to bill ratio that we are looking at. In fact, if you look at the tenders also, they've submitted over 5,975 crore worth of tenders, with tenders in pipeline of about 2,437 crore. So this remains as a very strong point for the business. Along with that, what is another focus point for the business is its long-term contracts in both its telecom and solar projects, which are its main two business verticals. Even if you look at, as of FY23, if you look at how they were positioned with their customers, about 90% of their revenue comes from customers with more than 3 years of relationship. So this is another point we should be considering. But coming to the weaknesses of the business, they are also dependent on a limited number of customers. So any kind of deterioration in the relationships with any of these customers would be a point which could be a pain point for the business. Other than that, as we've seen in this year's cash flows, it was a negative cash flow operating number that we had seen, as the business requires high working capital for the kind of orders it has. So sizable amount of working capital for the continued operation and growth. While it could be a positive also, it could be a negative, impacting the cash flow growth of the company as well. So these are the strengths and the weaknesses that we are seeing. But huge opportunities, Agam, especially when they're talking about that railway space.
Yes, Anushi, actually very interestingly, because if you're considering railways, if you're considering something like green hydrogen, BESS, along with something especially in the renewable portfolio, now we do know that all these areas are high growth areas, something that's been picking up over the past 3 to 5 years, and it does seem like it's still at just about done with its nascency, and it could potentially see a lot of tailwinds in terms of growth, and which is why these are some of the potential opportunities for the company moving forward. It's looking to expand footprints in the international markets as well, in telecommunications and the renewable energy space. So that certainly could be the other area of opportunity. In terms of threats, what we are watching out for is, dependency on EPC and O&M contracts. And, to be honest, this is just the core of the business. So I wouldn't exactly, call it a threat, but perhaps to a certain extent, the threat here is the subject to cancellations. And that perhaps is the problem with all the companies in the sector. And the other one would be, intense competition. Well, we do know that a lot of its peers, a lot of its relatively larger peers have a significantly higher exposure to the many sectors that it already operates in. So the competition could always be a little bit of would always be a little bit of a problem, or would be a challenge in that case. So that's something that we're going to keep an eye on as well, as far as Bondada Engineering is concerned. Anushi, on that note, thank you so much for joining us and taking us through those insights into Bondada Engineering. What we must remember is that at the moment, given the fact that it's shown you a good amount of traction towards the positive end on the various factors that we spoke about, the question really is that how much of it can be sustained. And it does seem like, with the kind of visibility that we're seeing, the kind of order flow that the company has, as well as the plans on the annual, when it comes to not only the renewable space and the telecommunication space, but also its plans to diversify in many of the up and coming growth areas, is something that could very well play in favor of Bondada Engineering. On that note, let's shift focus and listen into the management itself. And we in fact caught up with Raghavendra Bondada as well as Satyanarayan Bharatran of Bondada Engineering. And here's what they had to say about the company's growth prospects going forward, as well as the strategy. Listen in.
Yeah, yes, Anushi, we are basically in EPC segment and O&M services in both telecom, EPC and solar EPC, that is renewable energy. The company is progressing in both these segments. Both are very much required for the country. One is Digital Bharat, the second one is the renewable energy mission. And we have been there in this telecom business past 28 years, actually including my previous experience. But this company is formed in 2012. And thereafter we ventured into the solar EPC in 2017 onwards. We have been working on good sizable orders. Going forward, we have very good order book is there for next 3 years. Right now we are having confirmed order book of around 5,300 crores plus orders, and it's a huge amount of solar EPC works are there. As you all know that a lot of renewable energy is to be deployed in the country. Both in solar, wind, even pumped hydrogen, green hydrogen, even pumped storage, battery energy storage systems. A lot of technologies are emerging into the market. So a lot of renewable space is there. we are looking very bright future for next 3 years as well as next 5 years. We have the business plan available, and next 10 years I am seeing that spectacular growth is going to happen in both the segments, telecom and renewable energy space.
Mr. Bondada, you mentioned that telecom and solar is your core business trends, higher segments that we are looking at. In fact, if you look at this H1's trajectory, also 63% of growth that you've clocked in, even in FY24, 100% plus growth. Want to understand in these segments, what is leading to this kind of an upside that we are looking in growth, and is this expected to sustain for the next 1 to 2 years also, if we speak? So I want to understand the revenue growth picture for FY25 along with FY26, if you can give a perspective on that.
Yeah, yes. The last 12 years, our growth has been the 53% CAGR, CAGR 53%. And similar growth we are expecting. In fact, actually, this year onwards, we are going to make it double. Actually, 100% growth is there. Last year, we had done around 800 crores revenue. Even future next 3 years, we are going to make it double year on year, because actually we have the confirmed order book which we have to deliver in next 2 to 2.5 years. We have the sufficient order book to make it happen, to make it a double of revenues in year on year for next 3 years.
That's quite a
in
solid.
both telecom EPC and as well as the solar EPC.
Yes, surely that's quite a solid trajectory that we are looking at. In fact, you've mentioned about the order book. Let's get perspective on that. So in the last 6 months itself, we've seen a 3x jump in your order books that stand at about 5,342 crore. In the last 6 months, I want to understand in this first half particularly what has led to the surge in orders that we are looking at, because if you look at the FY24 number, the number was in between 1,300 mark. So what has led to this growth in orders that we are looking at, and if you can give us a perspective on the breakdown of your order book and the order inflows expected over next half?
Yes, as I mentioned, both these segments, solar, renewable energy EPC and as well as the telecom EPC, the bright future is there. So a lot of tenders are being floated across the companies and across government organizations, even private organizations. A lot of tendering process is happening. So last 6 months, we have been got into the public sector companies, participating in public sector companies tenders, because we have acquired a lot of credentials to participate in central government and public sector companies. That's the reason last 6 years we have participated, we have secured good amount of order book, and similar growth is going to happen. And my order book is going to be almost around 8,500 crores to 9,000 crores by March 2025. After reporting the March 25 numbers, as you already mentioned, that projected number of around 1,500 crore of March 25.
Okay, so 5,000 figure moving to 9,000 figure as we speak. How much do you plan to execute in the next half of this order book? If you can give us a picture on what usually is the execution period of this orders that you've received.
Yeah, all these orders, whatever is confirmed orders are there as of now, that 5,300 crores. Out of that, actually around 1,200 crores is our O&M, which is running into another 3 years to the 5 years time. But rest of 4,000 crores order which we have to complete in next 18 months to 22 months time, that we have to complete it.
All right, Mr. Bondada, one interesting thing about your mix, if you look at the revenue mix, now order book 75% is solar, but in the revenue composition, it is telecom, which is the leading one with about 59% of mix. So going forward, with a 100% increase that you expect in the revenues forward, what is the kind of revenue mix also? Is solar going to be the focal point now, or is it on telecom? If you can help us with the breakup between the segments expected.
Yeah, solar is going to be the major contributor for going forward, but I think as of now, whatever numbers, I think you must have those numbers. But going forward, telecom is going to be around 30 to 35%, and solar EPC is going to be around 70 to 75% going forward numbers.
All right, so that is the outlook on the mix that you've given. Another vertical which you plan to expand on is the railway sector, and the plan is to make it as big as other verticals. I want to understand the rationale behind expanding in the railway space, and what is the kind of contribution that you're looking from this area?
Yeah. In addition to this telecom and solar EPC, these are both are growth segments, and even Indian Railways is also coming up with huge budgets on their safety projects. The safety projects means the Kavach and as well as the barricading of those high-speed trains, semi-speed, high-speed, and then Vande Bharat trains by crash barriers. So these two activities we are qualified because of with our past credentials, past experience. Right now we are participating in even in Indian Railways tenders, that is of passive infrastructure services to as a EPC, passive infrastructure services to this Kavach projects. Government of India has given budget of almost around more than 30,000 crores to be deployed in next 3 to 4 years. So we are easily qualified for these kind of tenders. So we are participating even in railways. Now we already identified around 7 tenders. We have participated in 3 tenders. And this is going to be another vertical because railways are going to build their own private network for their LTE network, which is required for Kavach implementation. We are well qualified, well positioned to execute these kind of projects. We are well qualified. So even railways are also, we are looking at railways. Our railway segment is going to be a big vertical, as big as our telecom vertical. Maybe down the line, next 2 to 3 years, we might be growing maybe around 2,500 crores of vertical, railways vertical.
Well, that's interesting. 2,000 to 2,500 crores from the railway vertical. That's what you expect. Mr. Bondada, final question to you, a brief one. I want to understand your capex plans. Also, there have been some board approval on the 500 crore of fundraise. Is it for that? Are we looking at? If you can just give a perspective on that in brief.
Yeah. We have intimated to the stock exchange up to 500 crores, but thereafter we have made a lot of internal discussions. Now we are looking at anything between 250 to 300 crores through preferential allotment that is going on. I think next 2 to 3 days we are going to close that preferential allotment. Rest, our working capital requirement at this point of time is around 450 crores. So 300 crores we are going to pull from this preferential allotment, and then 150 crores we are going to make it from our debt route. So with this 450 crores of working capital requirement, I think we can easily execute our projects well within the timelines. And our prime motto is to execute projects on time. That's what actually we have been striving for it. And none of the project is delayed because of our reasons so far. So we have secured the good amount of order book, and people are there on ground to execute. And now we are in verge of pulling the funds so that actually we can execute these projects well within their time.
Right, that's the management telling us about all the plans on the anvil for Bondada Engineering going forward, being in growth sectors. And, just to reiterate, their order book at the moment. Now, as Anushi was mentioning earlier, the order book as on October 2024 stood a little over 5,300 crores. Do also remember that its annual revenue of the company stands at around 800 odd crores, which means that at the moment, it has a significantly large order book, nearly 6 to 7 times its annual revenues for FY24. And that basically gives you a good amount of visibility. Not to mention that over the course of the next 2 quarters, these 2 quarters tend to seasonally be the ones which have a relatively larger awarding activity coming through, especially the last quarter of this financial year. That's the January through March period, where you will have a lot more awarding for the entire sector. And that's the potential reason why you're seeing such strength in the company going forward. But on that note, it's a wrap on this edition of KYC, but lots more lined up on the other side. Stay tuned to NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Hello and welcome to the Mutual Fund Show. I'm Neeraj Shah. Over the next 25 minutes, we'll talk about two specific things. One is the AMFI data, and there is, I think the headline, coincidentally, is that the thematic funds have seen lower flows. You can even argue that active funds have seen lower flows, but I think the bigger drop or the bigger standout for me was the pullback in thematic flows, even as the small and mid cap funds have continued to see higher inflows month on month. The SIP streak, I think, comes off after 16 odd months, June 2023 or from thereabouts. We've had a consistent uptick. There's a 2 crore downtick in the SIP streak as well. So that's one. But the reason I use the term coincidentally is because we are going to be talking to our two experts today, Juzair Gabajiwala, Director of Ventura Securities, and Mohit Gang, who is the co-founder and CEO of Moneyfront, on thematic funds. And what are the kind of thematic funds that you should look at in your satellite portfolio, and why is it that these gentlemen might be liking some of those funds? So gentlemen, both of you, thanks so much for taking the time out and being with us on the show. Can I briefly talk about the AMFI data first before we talk about the topic that we had chosen? And Juzair, I'll start with you. What did you make of the fact that while small and mid cap funds continue to see increase in flows, thematic funds, active funds by and large, even large cap funds have all seen a dip Do you read too much into the month-on-month data, or you would wait for a trend to develop?
So first of all, thanks Neeraj for having me. And in fact, yeah, I've just had a brief glance at the data. I've not had a chance to dissect it completely. But the view actually what we have is that the small cap actually the whole narrative has actually undergone a change. If you see the small caps, the size of each company is much larger. So in fact, we actually like the small cap space much more than the mid cap space. Having said that, we have seen that the SIP flows have stagnated a bit. Thematic, we don't like it that much in terms of because they are more on the riskier side, and maybe I will talk a little bit later on that. But we need to see some more, and just looking at a month-on-month trend, we need to I think wait for, because this again year-end data. Let's wait and watch, and let's see how the whole trend develops.
Okay, Mohit, what about you? What stood out for you? Like I said, for us, the thematic funds getting a bit of a slowdown was maybe the standout. What stood out for you from the data, if you have had a chance to see it?
I have glanced at it, Neeraj. Thank you for having me on the show. So look, I think on the SIP front, I think it's just a kind of a small pause. Perhaps investors have seen market correcting last couple of months, and they're a little wary to add on to new SIPs. Having said which, the SIP book hasn't depleted. Maybe there are few more pauses this month or last month, which we have seen across investors trying to wait, or perhaps few investors trying to time it out in spite of whatever and however you want to convince them, right? So I think those are few cases here and there. So the SIP data remains static. On the sectoral fund, Neeraj, I don't think so. We have seen too many NFOs last month on the sectoral side, and the biggest driver of sectoral inflows has typically through the year been new fund offers. I think there were only a couple of them, or three NFOs if I'm not mistaken, last month, which is what has kind of led to this mobilization of around 7,600 odd crores. But otherwise, the biggest driver of sectoral funds is per se NFOs, and there weren't many sectoral NFOs in the month of November.
Point well noted. Okay, okay. So Mohit, would you say that therefore a base that is hit sometime in the past, because there would have been a lot of NFO in the thematic side, and that's maybe a bit of a top, but normal parlance or normal monthly flows will never be so high as we might have hit when there were a clutch of new fund offers on the thematic side?
Honestly, I think that's the trend, Neeraj, and we can't dispute it because that's what data says all through the years, that distributor fraternity is completely charged up and aligned for a single NFO when it comes in the market. Investors think that there is something new or unique which has come up. They try and lap up the idea, even so it would be the 10th repetition of the same idea. Right, and that's how the industry has been functioning in spite of all the noise and awareness which we try and create around it. But that's the typical pattern of industry, that NFOs tend to mobilize the resources much quickly on the ground.
Okay, fair call. Now to the topic at hand, because certain thematic funds have done well, and frankly now AMCs are also smart in that they are coming out with thematic funds necessarily when a large portion of the theme has played out. It's happened in the past, and therefore in a satellite portfolio there might be room for the investor who is not too risk averse to take a small exposure to thematic funds. So Juzair and Mohit, we just thought that let's dedicate today's 20 minutes to somebody who is willing to take risks, somebody who is willing to spend a little bit of time analyzing the portfolios, looking at the performances, and willing to take that extra risk for that extra alpha or return in the mutual fund side, and therefore in the satellite part of the portfolio willing to take exposure to thematic funds. So if with that as a premise, Juzair, I would love to know what quantum of exposure would you give to a thematic fund for somebody of this nature and willing to take risks, and give us an idea of one of the thematic funds that you may like and why.
So I think, Neeraj, before I get into it, I think a lot of people have, actually mistaken sectoral funds also to be thematic funds. So one actually also should look at all the cons of investing into a thematic fund, before looking at the pros, because the pros are, the narrative basically gets, governed by the returns. And we also should not lose fact of the sight that you need a high level of conviction. So not only it should be the distributor who's, has a conviction, even the investor needs to have the same conviction, because we have seen investors, running away at the drop of a hat. The moment the returns become negative, and then whether the person is willing to take risk or not willing to take risk, it just goes away, right? And what we have also seen is that even a lot of AMCs, have, because now they don't have any scope to add funds anywhere else, right? And that's the reason why these thematic funds have become the flavor. So that is another thing which you should look at. And one of the most important thing at any point of time when you are looking at a thematic fund, please understand that a theme is different from a sector, right? A sector will be, the infra is a theme, right? But pharma is a sector. So I think people need to be very, very clear about when they are, looking at the funds. And one should not forget that we had one infrastructure theme which had run up somewhere in 2008, and it took nearly 8 years for the theme to again recover back its NAV. And the same thing had happened even with the PSU fund. Okay, so I hope I have set the context on that part. So ideally, that means this is not a fund for a first-time investor. So it should be for a person who is already, an investor who has already invested some portion of his money in, the diversified equity funds, because the stocks which are there are also available for the diversified equity funds also, right? So having said that, some of the themes which we actually like are, maybe something like a innovation fund, because the reason being why we like innovation is that it's going to be very difficult for a lay person to try to understand, what are the innovations which are happening around at various company levels. So you may just know about one or two here and there, but the second thing is that in many innovative companies, we will not even understand the valuation matrix, right? So we like this space. And the second one we like is the business cycle, because you see that in the business cycle, you need to be quite adept at trying to see that whether the business cycle has run up and whether the new cycle will take over. So these are the two categories which we like. Most of the other categories are, according to me, are more or less nothing great to drive home about. Like manufacturing is, so other than services, everything is manufacturing. So these are the two which actually we can look at.
Okay. Juzair, I'll come back to you for specifics if you can share, but Mohit, to you as well. And yes, I agree, Mohit, that we kind of use these terms interchangeably, right? Thematic funds and sectoral funds, and they both come under this. So a lot of people might actually buy thematic funds or sectoral funds thinking one is the other. But assuming that you try and think of this as a broader umbrella wherein you're following a particular sector or a particular theme as opposed to a diversified fund, if you will, what is your sense of what quantum of exposure do you give or would you recommend to the overall or the satellite portfolio of an investor for these sectoral / thematic funds? And maybe we can start with one of those funds that you may be liking and why so.
Got it. So Neeraj, look, I agree with you that semantics aside, we are talking more of a satellite approach out here, which is more a tactical approach and not a core strategic part of any investor's portfolio. So when we talk of tactical allocation, typically our approach, Neeraj, has been an 80-20. 80 for strategic long-term investments and 20 more for tactical short-term plays, basically in a portfolio where client can assume that kind of a risk and the profile permits, obviously with that caveat, right? So when we talk of this broader umbrella of 20% tactical approach, I fit in everything. It could be an international allocation, it could be a commodity allocation, it could be a sectoral or a thematic per se. For me, that's a tactical play, which means it's more short-lived and the movement could perhaps be a little faster out there. So from that perspective, Neeraj, if you recall, I think we had a conversation around a month back where I kind of maintained my view with on IT as a sector, And I was pretty bullish on that. Last 1 month return for IT funds or IT index per se has been almost 7% odd. Last 1 year return has been 35% odd. But I continue to remain overweight, or what do you say, positive perhaps on IT digital as a theme. Right, so it's a slightly more broader context which I'm taking, not per se the IT index, but perhaps a digital theme overall, which would mean all your digital plays, few large cap and mid cap IT stocks as well. My prima facie, the reason is very straight and simple. I think it's more a part of the overall Trump play globally. US has been seeing a massive resurgence in all the tech stocks, which will kind of percolate down to India also. And with the rate cycle reversing, this is a highly rate sensitive sector. Rate cycle likely to reverse in India and rate cycle already reversing in US means extremely positive. If US companies do well, Indian companies will have a lot of order books flowing abroad. They are the major service providers to quite a number of US companies and European companies. So I think overall our view remains positive on the sector per se. And with respect to funds, if you want to name a few, I would perhaps go with the Franklin India Technology Fund or a Pru ICICI Technology Fund on the same.
Okay. Mohit, what would the risks, major risks be? You briefly may have spoken about it, but if somebody wants to invest in this, what are the major risks that somebody should keep in mind?
Look, Neeraj, if you're talking per se of the IT as a theme, I think a larger part of the rally has got played out, to be very honest, right? A US rate cut of 75 bips has been taken in. I don't know how much the curve permits now further, and India might not have a very prolonged rate cut cycle this time, given the inflationary headwinds and we're all around, right? So the bigger challenge to my mind, is that the rate cycle might not be very prolonged. The larger part of the gains has already been taken in. And I think, look, honestly, out here, the mid-cap IT space seems to be a more reasonable play. And perhaps the bigger portion of bullishness is around the digital plays in the ecosystem, right? So finding a right mix in a fund can be a little challenging out here. My submission would be for investors to be extremely cautious and go only with the advice of a financial advisor and as per your profile. And you have to be fairly nimble if you actually try and get into this space. Then you have to be nimble. The view out here is like a year's view.
Okay. Point well noted. So that's on the tech side. Now, Mohit, I would probably request you to one more, but before I do that, Juzair, I'd like to come to you on innovation funds. There aren't too many out there in